price movement leg, right? You wasn't like your opinion.
Correct. Yeah. I sold it when volatility was higher and the stock was lower. Stock had a little bit of a rally. That put lost basically half of its value, or a little bit just a little bit less than that. So I legged out of the put, and it left me with this 85-90 call ratio spread. And then today, with the stock down $2 and change, this 95 call at 40 cents, I could just close this position and take, $1 of profit, or you can buy this call. You free up all the capital, which isn't an issue here, but just showing the mechanics of what I'm doing. You take off this capital on the upside and you give yourself an up to $5 shot in terms of profit if you get somewhere in this range, which is just outside the money here. For basically no risk. You have risk.
Yeah, the risk is what it's worth right now, right? I mean, that's the risk that you have, which, when you make it into a butterfly like that, you're happy, and you got time, right? I mean, you're willing to risk. Butterflies trade cheap relative, and you're willing to kind of leave that out there and look to close it. So let's get to your Tesla butterfly. Since now you did exactly the same thing in Tesla.
Yes.
Now you're sitting with that position and it's been working for you, right? It's come into this is like a synthetic butterfly.
Yeah. So I have the 65-70 call spread here. That's right at the money. Stock's up $19 and change. On the upside, I have the 95-510. So I actually have $5 of risk to the upside. Yes. I missed that when I made the adjustment. I'm not worried about that. It's not really the point here. I guess there is tail risk here. But I have this on for a 67-cent debit. So it's basically a nothing shot here. We call the 60 cents, free. It's marked at $2.37 right now. You're actually, just to give you an idea of volatility, IV rank at 12, but volatility is relatively high here. I mean, you have a $25 expected move through the end of the week, which is, that's a 5% move in the stock here. Do you keep this on? It's basically a 50-50 shot in terms of being in or out of the money at expiration. Do you keep this on for more profits? What do you think?
Yeah, Tesla making new highs. Like you said, you have $5 worth of risk to the upside. I would look at it like this: like, what's your call spread trading for that you're long there?
I mean, it's probably trading at like $5, half the width. It's it's marked at like $6. It's fully in the money, so it's marked at $6.
Right. So it's marked at $6. It can go to $10, right?
Yep.
And you got a $15 wide out of the money spread.
That's marked at $3.
That's marked at $3, which even if the stock rallies inside, which you were just quoting your $10 wide spread, so it's probably trading around $5. That spread that you have that's out of the money, if the stock goes inside your two short strikes, it's going to be trading for around $7, right? Yeah. $7-8. I think for the extra $5 that you could make on the overall spread, I think you sit with it.
I agree. I mean, because what you're saying is that the risk on the upside call spread is maybe $1 or $2. Like there's not,
correct.
You don't really have the upside risk, so to speak. It's there if you get a tail event, you hold it into expiration, but a slow chop up isn't going to hurt you, even though you have that wider call spread because it's out of the money.
Correct.
I'm with you. And I mean, it would be just so much more fun to just bank a full profit on that, right? I mean, it can't be a Johnny taking the little ones. You got to have some cojones here.
Well, the flip side to that is you're going to have to wait a little while because you're going to have to wait till, picture that you would carry around forever in the bad, like, blue, white, and pink.
In the hospital blanket.
Hospital blanket they would give you. You get those pictures where the kid's just like this, like that, and you carry that around forever.
Oh, it looks like a mugshot.
Yeah, it was worse than a mugshot.
No, now people have like photographers. Hair, makeup comes to the birthing suite with the lighting and the filter for the mom. Like,
there if you want to get it and stuff. They got like a whole glam section. The kid comes out, put them under the hot light and everything. It's unbelievable.
Kids are not like in my future, but if I were to have had kids, like I would have had a full face of makeup on.
Think so? Would have done that? Yeah. Well, they do that.
I am not above like a full blowout, a soft glam.
Yeah. I got to find those awkward baby pictures of you in and Gina and the rest.
Oh, send them to me, please.
I will.
Thank you.
I want to see how ugly I was.
I will. Yeah, you had baby acne, and you were
Oh,
for a first child. I mean, I thought you were absolutely beautiful. I didn't see anything. It took me about 3 years to really realize what an ugly baby you
and
were.
the ugly duckling, you know.
Yes, you turned into a swan. Yeah. A beautiful.
But it was very like that Seinfeld episode with Kramer where he's like,
Yeah.
that was apparently
because your mom's best friend at the time, Sharon and Shelly, their kids came out. They were beautiful, beautiful blue-eyed, blonde-haired, looked like cherub babies. You know what I mean? He came out. He looked like a mud baby. I mean, it was just like
What are we do? What is what I just stumbled into this supremacy? What is happening?
You just did. I mean, infant acne. Your head was a little. You were squished.
Yeah.
You were squished. Yeah. It was not. But I thought he was beautiful. I saw no. And I was over the moon when he came out.
Aww.
Beautiful. But anyway, baby Sloan. Let's get back to her. Doing absolutely fine. Mom's doing fine. Family's doing fine. Everybody's doing good.
Aw.
Very happy. Very happy. Yep.
Love it.
Yep. Glad it's over. I really am. I am glad it's over.
I'm sorry. And what did you do? What did you contribute? What?
I had to live.
He had sympathy pains.
I was feeling a little something last night.
It's like a whole group thing.
Yeah,
you know?
I was feeling a little something last night. I feel better now.
Yeah.
Feel better.
Chris couldn't sleep. He had the pains. Vinny.
Mine was like a martini.
Vinny
pain,
had
though.
the sickness. Like he's a little sick now.
Vinny is a little sick.
Yeah, so like they all like kind of shared.
On finals week, not a good time. Not a good look. Not a good time.
That's convenient.
Yeah. Well, he'll just get the D or F he was going to get anyway. So that's just doing it easy.
No, I thought he had a tutor.
I'm just teasing.
Yeah, I thought he's turning everything around.
He is. He's turning everything around. No, I mean, all kidding aside, I give Vinny a lot of slack. I mean, I think he's got an A,
I think you mean
3
flack.
B's, and
Flack.
2 C's.
Well, you also give him a lot of slack.
I do.
But you also give him flack.
Yeah. I mean, he's not failing any classes.
No.
But, he some of the classes are rough for him. He's got to work at it.
Yeah.
It's been good. So that was my night. I had a pretty full night. I had to babysit. Well, it's not really babysitting when it's your grandkid, but had to take care of little T.
No, that's babysitting.
Yeah, no, I get it. But I had to take care of little T. He asked for his mom or dad once or twice. I said they were out getting Christmas presents, so he was happy with that.
You're just lying to the kid.
Oh, so he spoiled.
Wait until he sees this kid. I mean, he is gonna be. So I kept going. All kidding aside, he's just 2 years old. I mean, he's just starting. Like he talks, a lot more. But it's 3-word sentences kind of thing.
Sure.
He doesn't have everything in place. But I kept saying, man, you have no idea how your world is going to change. Love this moment because this is the last moment you're going to have.
Cherish it.
Yep, all to yourself. After this, mommy's going to split her duties. So
God.
He doesn't know. Anyway, so we had fun last night.
His world's about to get rocked.
Yes, it is.
Rocked.
Yes, it is.
How was your evening, Nikki? What did you get up to?
Not much. Just hung out. Made a steak.
Ooh, with
Bought a new-
chimichurri?
No, I just made like a T-bone steak. I had it.
T-bone.
Yeah. But I bought a new piece of art.
Wow, look
Art
at
guy.
you. You're an
Big art
artiste
guy.
now.
Big art guy.
Yeah. I scour all the consignment stores.
Yeah.
All, the suburb consignment stores. Found a nice piece. But the artist, I actually saw their studio when I was in Arizona.
Okay.
They're local to where my mom lives.
Is it like landscape or
It's a
nature?
landscape,
Or
yeah.
okay, I wasn't sure if it was like abstract or I wasn't sure what your art taste.
No.
No,
Ooh.
it's just how everything has to align. I mean, you didn't know this artist probably a month ago.
Yeah, no, I
So you go and see some pieces and you go, ooh, I like Vanetta's work, that kind of thing. And then all of a sudden he's online, he sees a piece of work by, the artist that he just saw last week, which is pretty cool.
So it was a good little find.
Yep.
So I did an excursion to pick that up.
Oh.
Nice.
I had to go to Michigan Avenue, just absolute hell, rush hour traffic.
Oh, it was his studio's downtown? Or the consignment shop?
store
Gotcha.
that had it.
That's the worst.
It was.
Oh, was it in the 900 North building?
Yeah.
I know where that is.
Yeah.
I know that consignment. That's a good consignment store.
Yeah, no, it's a good one.
Yeah, that
One of
one's
my favorite.
Oh, Nikki, that place is nice.
Yeah. If things get bad enough for me, I could go there and kind of scope out the talent there. It's a lot of older ladies in that place. A lot of them looked single. Or
a lot of diamonds, a lot of furs.
A lot of
furs.
Yeah.
Little seasoned crowd.
Yeah, seasoned crowd. If this.
But it's nice that Bloomingdale's is right there, and there's that's nice.
Yeah,
that's funny.
That was my night.
Is it like in the style of Georgia O'Keeffe? Is it just like a giant vagina?
No.
In that desert landscape.
It's not like a Maplethorpe, is it? It's like.
I was just saying, it's.
I didn't know he was so cultured. I didn't know I raised such a cultured son.
Yes. So
sweet. Good
It's always nice.
Did you buy any art last night? Have any babies?
Yeah.
I did not. Yeah, I was not. I was not purchasing art or buying or giving birth or anything.
How boring you are, Vanetta. Unbelievable.
Yeah. Well, what are you gonna do? What are you gonna do? Nothing you can do.
Bad. Oh, well.
Hey, I'm sorry, your boy Connor Bedard on the IR.
IR, yeah.
Upper body injury in the last couple minutes of play from the last game, I guess.
Yeah,
so
it actually looked like it was a little bit of a hit from before, like a play or two before that kind of may have hurt his shoulder, because the face-off didn't look like it was a face-off with seconds to go in the game. Didn't seem like there was anything like. Guy wasn't trying to hurt him or anything like that. It was just a kind of odd thing, but he's having such a great season. And it's sad. I don't think he'll be able to play for Team Canada, that's coming up, at the break here. So it would be sad.
When is that?
In a couple of weeks, I think.
Oh, I thought it was like in February. I was thinking of the NBA All-Star game.
Yeah, no. So that's sad, because I know that's such a great game for the kids to play.
Sure.
Yeah. So anyway, sad for the Blackhawks, sad for humanity.
He's gonna live. He'll be okay.
He's shoulder injury. I know.
He's just hockey players.
He's just been playing so good lately.
I know.
Been unreal. Sad. Anyway.
All right.
That's what happens. You get an injury. That's what happened to me in my career. Couldn't go pro. Yeah.
Well, we have a good show for you today. A lot of really great content headed your way on this terrific Tuesday on Tasty Live at the top of the 8 o'clock hour. Strategies for your IRA. The 2025 Active Trader's Guide to IRAs. Really kind of interesting. We put out a video on social where Dr. Jim is just like, hey, here's some strategies that you can use in your IRA. And when I tell you how upset some people were at the idea that you could trade, I was like, we're not saying that you have to do this. We're just saying if you want to, these are some strategies. But it was just sort of funny reading all of the comments. They're like, you're gambling your future away. I was like, okay, look, let's all be cool.
I never thought an IRA account would be rage bait.
Yeah, I know.
Not like usually
so controversial.
It was very controversial. I was stunned. But if you want to, again, this is not a mandate. If you want to trade in your IRA, or if you have an IRA, like a smaller one, and you want to, explore some strategies, we have them for you.
How about this? You can use less buying power, which is the big drawdown to an IRA, is how much the strategies use compared to a regular margin.
Right.
These are almost 10 times as much buying power. So if you have an IRA account that has, less than what you would need to buy stock, you can do an option strategy that gives you simulated stock for like 1/10 the amount of buying power. You just brought your IRA
doubled it
up to every place else. You know what I mean? So that's what we're trying to show you. I mean, how
you're going to hell. Yeah. I don't like this. No, okay. And then we have Futures in Focus, our bi-monthly segment. Is that what bi-monthly means? Twice a month?
I believe so.
I get confused. Like bi-monthly, bi-weekly,
like a bi-monthly payment.
Bi-monthly, twice a month. Okay.
Yeah.
Okay. Well, our bi-monthly segment.
In fact, if you want to turn your 30-year mortgage into like a 20-year mortgage, you pay bi-monthly.
Sure. Well, that's a scam. I'm just kidding. But everything you need to know about NQ and MNQ, because we've been doing ES and MES. This is the correlation to that using the NASDAQ and the micro. Yes. NASDAQ Craig is going to be in the house breaking that all down. And then at 9 o'clock, we have market measures gauging gold. I don't know if they spelled that right. No, they did. Okay. Understanding its market correlation. Nikki, what's that about?
So we're looking at gold correlation just over time and kind of talking through the changes in the correlation, kind of the difference between COVID, the COVID crash, and the 2008 financial crisis, how gold was negatively correlated during the financial crisis, meaning it went the opposite way. In COVID, it went the same way. It was kind of selling everything and maybe
That was just a timeline that you're using, right? I mean, you're putting a name to it, COVID, but you're really just looking how...
Yeah, that period, 2020, yeah. Right.
Yep.
So just looking at the different correlations there. I just sold some NASDAQ here.
I saw, and that's just a personal opinion on what you think the market's going to do.
We were down 40 or 50 points in the overnight session on the E-minis. And I feel like every time we've had those...
NASDAQ was 200 points lower than this.
Yes. I'll do some E-minis too.
Yeah, no, you're fine. You sold NASDAQ is what I'm saying.
I feel like we get that kind of you buy them into the open and then they smack them on the open.
Okay.
So, and we got some numbers here coming out at 7:30.
That we do.
First numbers in a while.
And then we got at around 9:30 or so, live from the trade desk, Quentin and Glenn. Quentin counting down all the top trending tickers over at tastytrade, and Glenn G Money on the FX side of the business. And then, of course, at 10 a.m. today, Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live.
So,
I hope they're wearing holiday-themed outfits today. But you're going to have to tune in and see at 10 a.m. to see Liz and Jenny. But hey, in the meantime, and between time, do you want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire.
This just in.
Top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It's December the 16th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Lennar, you're not going to want to do it.
Lennar?
It is a $120 stock. I don't know how that happened, but it's $120. Home builders.
Bonkers. Hey, a messy November jobs report won't be easy to interpret, but investors can focus on a few things. We are getting a kind of a combo jobs report. A technical, pure, true October jobs report will never be found, but this will be the combo jobs report.
And a combo is underrated. Sausage and beef combo is the way you have to go. It's the way you have to go.
Yeah.
Don't do just Italian beef. You don't just do Italian sausage. You do a sausage and beef combo. It's a beautiful thing.
I'm at the Pizza Hut. I'm at the Taco Bell. I'm at the combination Pizza Hut and Taco Bell. No?
No.
Well,
do those exist anymore?
Yeah. Private payrolls are saying we are probably looking at a reduction in the workforce of around 60,000 jobs per month. Of course, jobs numbers always get revised no matter what administration or what environment it is. So this, whatever number comes out is probably going to end up getting revised.
It's odd that they can't get it right the first
time. Right, I know. But it is something that Powell mentioned in his speech about just monitoring a weakening in the U.S. labor market.
This looks like a happy picture.
What are you guys?
All these people are getting eliminated?
What is the implied move for today?
These are the most happy unemployed people I've ever seen.
In the market. No, these people have jobs.
They must have got some severance package, right?
These people have jobs. They're happy.
Oh, these are the ones that made it to the cut.
Yeah.
Oh, gotcha. Today's expected to move around 38. Not usually. We've been seeing expected moves of around 24 to 30. So this is a little bit higher than we've had. Volatility's up 16 cents. But I just think the short term is pumped up a little bit because of the numbers you got coming out in about 10 minutes.
Sure. And options volume yesterday was around 19% above average. So,
correct.
Things are percolating before sometimes they do drop off in the holiday. What are bonds doing today?
Bonds are over 115.03. That's 7 ticks up today. So they were below 115. They're at the lower end of its range, but they've been kind of in a very tight range. let's just call it 116 to about here, 114 and a half, 114 in the orders. So we're sitting in a very tight range in bonds going sideways. Our bond position is quite small. Actually, I think it's anemic.
We don't have anything.
We don't have it. Yeah, we closed everything. Yeah.
Okay.
It's been hard to trade. I mean, you got no vol there.
Right.
You know, like you got to be directional.
Yep. Volatility's been light.
Yeah.
Hey, this is going to be perfect, and maybe you can ask Craig about this when he comes in, but the NASDAQ is going to extend trading hours as Wall Street gears up for a 24/7 move. One of the world's largest exchanges that's home to tech companies like Nvidia, Apple, and Amazon is submitting paperwork to the SEC to roll out round-the-clock trading of stocks as it looks to capitalize on a global demand for U.S. equities. What are your thoughts?
All right. I optimistically, they'll have good, tight markets, 5 to 10 cents wide. It's going to be stock market.
Yeah, it's just going to be stock, though. It's not going to be.
But I fear it's not going to be that tight. I feel like the markets are going to be dollar wide and 50 cents to $1 wide, and I don't think it's going to be as deep and liquid as it sounds like on the surface. Maybe over time it evolves into something else, but that's just my thoughts.
Yeah. I don't know if this really changes anything.
It hasn't been great in other products that are a lot more traded, like the ETFs, like SPX, SPY, that kind of thing. So it just
hasn't mattered. Like, it's not, I mean, who's really like, you know.
Like, you know how it is when you trade like an earnings, if you trade stock after an earnings event. And
it's all over the place.
It's all over the place. It's small contracts, odd lots, 5s and 10s, 50s and 20s kind of thing. It's not as deep and liquid as you would appear on the screen. So I think it's going to be a lot like that. So I think it's going to be
I just don't see
waters.
You pausing your, mayor of Kingstown to buy 3 shares of Apple at 11 p.m.
I haven't watched Mayor of Kingstown from this Sunday. Please don't do it. Don't tell me what.
No spoilers. No spoilers.
That is a phenomenal show.
NASDAQ plans to expand trading hours of stocks and exchange-traded products from 16 hours to 23 hours, 5 days a week. So that is the plan.
Now, if they get options to go with it evenally,
that'll be interesting.
Then you
think there'll have to be like a different set.
You got to have all the liquidity providers on board. And
ask Craig. That's what I'm saying. He's going to be here.
Well, it's in its infancy. They don't really know.
But he knows. He's in those meetings. I don't know.
Yep.
Hey, Citigroup has set a year-end target of 7,700 for the S&P for 2026, pointing to robust corporate earnings and sustained tailwinds from AI investments. Where are we trending? We are halfway through right now, the month of December. Who's in it to win it for our December S&P contest?
God.
Yes.
I think Katie is. Katie
is probably there.
I think Katie's there.
We love a financial queen.
I'm there. 68.16 is where SPX closed. I think I'm just above 6,800.
So you're at 68.05.
Okay, we closed at 68.16. I would think you could give me the win. I mean, we're friends here. We're actually
at
blood.
68.88.
68.88. But right now, if today was the last day, I win, right? I mean, I'm only 10 points away.
You know what?
Pretty good.
Vecchio, 68.
And if my aunt had a mustache, she'd be my uncle. Is that
That's
what
correct.
you say?
That's
Okay.
No, Vecchio's at 68.50.
Screw Vecchio. Who cares about him?
I guess you would still win. You're at 68.05.
Yeah.
Well, Citigroup set their year-end target of the end of 2026 for 7,700. But this is a reminder: we're going to re-up this contest for 2026, right?
Sure.
I don't know.
We should probably have a meeting about that. Should probably have a meeting
We're
about
not contractually held to anything. Sure.
Yeah.
Citigroup, by the way.
Citi's target implies a 12.7% gain from the benchmark's last close. I'm sorry.
Citigroup's hanging out at almost $113, trading near its highs. I don't know when it got to here. It's got an IB rank of 20 in Citi. So Citi's behaving quite good too.
Good job, Jane Fraser.
Good job.
I think she's the CEO of Citi. I could be wrong. I don't know. Hey, this is crazy. 45% of Gen Z adults said they would be happy to receive crypto as a gift this holiday season. What? Given how volatile and speculative cryptocurrencies are, they can be risky. But if you're looking to give a gift, the Gen Zer in your life, I tried to imagine like trying to tell like my mom that like I wanted crypto. She's like, can I get that at Penny's? I don't know how you gift crypto to someone.
You just give them this big, long number on a piece of paper, and then you tell them that that's your crypto. They won't know anyway.
What are Bitcoin and ETH doing this morning?
Bitcoin, I don't know if it's catching a little bit. I mean, it is up $1,600 to 87.6, traded down to 85. It is up around 2%. I think it was down around 4% yesterday.
It got killed yesterday.
Yeah, 3.5%, 4%. Market really didn't react too negatively to Bitcoin. It hasn't really kind of been having any velocity to the move in Bitcoin on the overall market. We've been kind of just going sideways with all the Bitcoin volatility that you've had, which has been two-sided, but like day after day.
Yeah.
It has a 4% move down. It goes up 2 to 3.5%. It goes down another 4%. It goes up another 2. It seems like it's stair-stepping a little bit lower, but it hasn't broken down, as my friend Ryan would say.
I mean, the market's been like that.
Market's been like that too, but the market's near its highs, where Bitcoin is near its recent lows for the last 3 to 6 months.
What's IBIT doing this morning?
It'll be up.
Good question. Yes, IBIT 49.5, up about $1.
Yeah.
Okay.
Yeah, it too has been obviously following Bitcoin. MicroStrategies, MSTR, we haven't talked about that in a while. It's doing the same.
Coinbase up $3.
Yeah, but it's been oscillating back and forth.
After pushing hundreds of thousands of government employees to leave their posts and dismantling government technology units, the Trump administration is now launching an effort to recruit new technology talent. Look, let me tell you something.
Taco Tuesday. You know this.
Yeah.
I know. But look, here's the thing. If you're coming from a high-powered tech job, you don't want to work in the public sector. Like, you don't want a government job. But you know who wanted to work in the government sector? People who had government jobs. No, the people who had government jobs.
Yeah, but they stunk. I'm just kidding. I'm just kidding.
We need you, says the new director of the Office of Personnel Management. The United States Tech Force announced Monday is meant to source the AI talent the government needs to win the global AI race. And I agree, like, we should be modernizing our government system, should be modernizing a whole bunch of things. But again, was this the best way to do it? That remains to be seen. But
it happens. It happens. Your number in 2 minutes, your unemployment delay.
Are we going to survive?
About 20 tech companies have signed on to participate so far.
Bonds up 8, even the S&P's down 7, NASDAQ down 43. Just give me a little quote before the number.
Yeah, I have it.
Go ahead, Vinette. I'm so sorry.
Just real fast, the AI infrastructure sell-off continues on Wall Street. Broadcom and Oracle shares continued their slide. Oracle shares, I think, down 40% from September. I was like, is that that can't be right? But it was. Broadcom had its worst 3-day series since 2020. Broadcom, Coreweave, Oracle all dropped yesterday, extending last week's declines. Any opportunities?
Yeah, I think AVGO is obviously I know Oracle has been pounded and it continues to go lower. It looks like it's unchanged, maybe lower this morning. AVGO is a stock that didn't have a downtick really until earlier in this month. And then after earnings, it's had 2 big down days, going from like 400 to 339 where it sits right now. And that's where it looks like it's unchanged. IB ranking AVGO 16. IB ranking Oracle is much higher, like double, triple that.
I sold some puts in AVGO. It looks like the Nvidia chart, but a month behind.
Yeah.
So you had Nvidia go to like 210, and that was like peak right into earnings. It dropped down to 180, and it's just been chopping at 180 for the last 30 days or so.
Yep.
That's what it feels like. It's setting up for AVGO right now. We just had that.
I have a Jade Lizard and Oracle. I'm out about $1 on or so I could use it a little bit higher or catch a small little bit.
Maybe something today for option trades today.
Every Tuesday and Thursday. That's right. Get you wherever you get your podcast. Just watch it right there on Tasty Live.
Anything in Coreweave real fast before the number comes out?
CRWV. I haven't traded that in quite some time.
Trading at 71. Maybe we look at that.
72. down about 40 cents. But yes, trading near its lows. It looks a lot like the
It's
other
some
two charts.
71.85.
Your number must have just came out. Even the S&P is basically unchanged. NASDAQ down 14. Bonds are up 12 to 13. Bitcoin, same price. Oil down 90 cents. Gold, which was lower by about $30, $15 before the number came out, is unchanged. Silver traded under 63, down to 62.11. Flirting with going under 62 has caught itself a bid, 63.5, down 16 cents. 3 indices are green, 1 is red. That's even the S&P. So you catch a little bit of a bid here in the market. Fade the first mover. You already faded it, so
I'm already in it. Oh, I guess I could put another one.
Yeah, put another one in. And another one.
This is how you do it, right? I mean, this is
how you get in trouble. Sure.
Yeah.
Sure. Yes. This is definitely how you do it.
I like the evil laugh, Mickey.
Yeah.
Hey.
Now we're fully loaded. Now we're fine.
Beautiful.
Now we're fine.
Load the flotola.
Okay, we got a lot along. We'll be okay.
Nvidia continued to expand its footprint in open source AI on 2 fronts. They made an acquisition. They acquired yesterday ShedMD, the leading developer of popular open source workload management system Slurm. What? I'm just reading.
Those made up words.
I know. Schmed.
Schmegma of Nvidia.
ShedMD. They make Slurm. What a time to be alive.
Yeah.
Nvidia said they also released a new model. What is Nvidia doing?
177.5, up about $1. Let's round up and say $1.50. What's that?
Sick puppy.
IB rank of 7. Its expected move is a lot smaller than it has been as of late. And you're right, it hasn't caught a bid with the overall market for the last 2-3 months. It's at the lower end of its range than the higher end of its range. So again, this is kind of that. I think Vecchio said he looked at like the weighted index to the Mag 7.
RSP.
Yeah,
The equal weighted ETF for S&P 500. So it was basically if you weighted everything the same as opposed to what we have.
the market is near its highs, and if you just look at the Mag 7 or 10 or whatever, because the CME's coming up with a good product, which is like the Mag 10 or something like that. But anyway, if you look at those 10 stocks, it's showing a different picture. It's a lot lower. So the 490 stocks have been lifting, or the 1,990 stocks have been lifting the markets, and not the 10 that brought us here.
Yeah.
A Reuters investigation reveals that Meta, the owner of Facebook, Instagram, and WhatsApp, decided to accept high levels of fraudulent advertisements from China because they wanted to minimize revenue impact that would have been caused by cracking down on the scams. Basically, Meta's advertising business was thriving in China, reaching over $18 billion in annual sales in 2024, but almost 20% of that money, more than $3 billion, was coming from ads for scams, illegal gambling, pornography, and other banned content, to which Meta said, oh, well.
Oops.
Oops.
Sorry about that.
What are you doing in Meta?
Meta IB rank of 3, 647. Let's call it unchanged in Meta.
Yeah, we put on that Jade Lizard for, I think it was Fast Market last
I believe so.
week. Was it Fast Market?
I believe so.
Volatility super low there, but stock has not, I mean, it's in the middle of its range over the last year, but it has not participated in any fashion with the, recent highs.
Yep.
So
I got you.
it's an interesting trade.
It is.
I know. Something, if you're looking for something that's like near lows.
Yep.
Tesla stock popped pretty decently yesterday as robo-taxi testing, that's hard to say, robo-taxi testing has commenced in Austin with no backup, no safety drivers, just YOLO, and that sent Elon Musk's personal net worth to $600 billion. What are we even doing? Tesla stock itself rose over 3.5%.
Tesla down around $2 this morning, 473 and change, but you are right. I mean, it's right there near its all-time highs. I think actually it made its highs.
488 was the high.
There you go. Yeah,
I need it right here.
You need to sit, boo-boo.
Sit right here for the next 48 hours, be perfect.
Sit Boo Boo is a Yogi Bear cartoon.
Yes.
You remember that?
There's
Boo Boo was one of the characters.
Boo Boo, there's Yogi Bear and Boo, but then I think you're conflating it with like a production
Commercial?
company. No, they're a production company. At the end, it would be Sit Ubu Sit. And so
so I was watching the cartoon, but it was really the...
No. Boo Boo is a bear, but then like a sitcom in the 80s, the production company, at the end, it would say Sit Ubu Sit, and it was like a black lab dog.
You're right.
You're mixing the two.
Yeah.
So Ubu and Boo Boo are two
It's
different
my
things.
memory. Don't mess with it. Okay? Don't try to explain my memory to me. It's Sit Boo Boo from Yogi Bear.
Yeah. To each their own, right?
Yep.
It's okay.
Cool. You do you.
I remember it the way I want to.
Okay, cool. It's La Boo Boo.
My upbringing was beautiful.
It's La Boo Boo. I have the only 24 karat gold La Boo Boo. In other automotive news, Ford is going to record a $19.5 billion special charge related to an EV pullback. So they're like, look, we are not going to make our F-150 Lightning truck anymore. They're selling it at around $55,000, but they were still losing money on every single sale. And keep in mind, when the truck first came out, they were like, oh, this truck's only going to be $40,000.
Yeah, that was the
they
big,
lied about that.
that was the
But it had a lot of fans, but one of the negatives of the truck is that if you have a truck, you want to tow stuff, and the range for towing was not very far because it was purely electric. So it's not totally going away. They're going to have some other hybrid products. But now that the government was like, we don't have fuel standards anymore, they're like, we're just going to keep making big diesel trucks. So you do you, Ford, but it's like a $20 billion write-down. So
It's a lot of money.
it's a lot of money.
Had it affected the stock? Stock's actually up 10 or 15 cents. I just can't believe the pivot in what seems like a short period of time, probably 5-7 years or something like that, development or whatever, how they go from all in to all out.
Well, there's no more subsidies for it. We're not going to build out electric infrastructure under this current
I know, but this
thing,
is
so.
like chasing your tail because markets move and things change.
Sure.
You never know what the future is going to bring. And if this was supposed to be, I just don't get it. I just don't get, like, it's just such a big number.
Yeah.
I know, they're the first one. And Shark, I know you wanted to sell me your Ford Lightning, so don't think I haven't forgotten you. Okay, you want to stick me with
that. Might be a collector's item.
Right, might be a collector's item. Yeah, like the DeLorean.
Yeah.
I know you were trying to pawn that off on me. I know you. But anyway, I just can't believe it. Pivot in the market like this on not like just a small thing. This was a huge, like if you're going to go from, it was basically going into another industry. Like, they were taking, I don't know, it was very, I don't know. But it doesn't seem to matter.
Yeah. Yep. PayPal has applied to form a bank that can offer small business loans and savings accounts. They are seeking approval for PayPal Bank. The company said they had applications pending with the state of Utah and the FDIC. What are you doing in PayPal?
God, I was going to be so pissed if that was up $6 today. Like an out of the money from that. Because I've been holding that 65 strike put.
Forever. You've been holding it forever.
The stock goes nowhere. I mean, it's been between 65 and...
it hasn't seen 65 since the middle of November, which is only a month ago.
Yeah,
it seems like eternity because the stock really hasn't gone anywhere. It's been like 58 to 62.
Earnings. Prior to earnings, it traded at $65 for forever.
Yes.
I had the 65 puts, and I was like...
From May to November. It was just...
And I was out for small loss yesterday. Mm-hmm. And I saw this news hit my Twitter headline, and I was like, God, they were going to give me this news.
It's X. No longer Twitter.
X.
God,
it's Twitter.
I thought this was going to be,
It's up $1 to 61. Yeah,
it's fine.
Mm-hmm.
I'm sorry, Nikki.
Sorry, it's okay.
Sorry, I couldn't give you the news that you wanted.
I'm sorry, Nikki.
Hey, something else that hit your Twitter timeline yesterday that took another stock down is Google is testing a new home.
No need to say anything. No need.
Is it your NASDAQ scalping?
Scalping some.
We're just gonna take one off.
Some of his some of his NASDAQ, and some of his E-mini S&Ps.
Just a little tiny bit. No need. It's a team game.
Your lowest sale on MNQ was around 282. and you bought these back at 287, basically scratching the first set, you have a nice profit on the.
Yeah, because I added another one at the top. So
yes, you did, me lord. Yes, you did.
You haven't been able to do that.
Yes, you did. Yes, you did, Johnny. Go ahead.
Google is testing a new home listing feature in its search, and that could be bad news for Zillow. It was bad news for Zillow. The stock just went lower yesterday. But Google's like, yeah, we're going to start doing real estate now. And Zillow was like, what the hell, man?
Get off my street corner.
Google wants to get deeper into the home listings game. I mean, why not? They already have pictures of everyone's house. So why not?
And the inside. We don't even know that
Why
yet.
Not just add it to their repertoire?
This whole space in the next 5 years is going to be disrupted because this is horrible. All of it.
Yes.
Why? They don't charge you to use Zillow.
I know, but it's so everything's fake and the numbers are fake.
So
and
horrible.
The houses are fake and the sales are fake and the rent.
I'm sorry. What houses are fake?
I mean, when I was buying condos, you'd see stuff on there that has not been there for years. You know, and it's listed on there, and you
have you been on a dating app recently? You want to talk about fake? You want to talk about things that are years old?
This is where blockchain can actually do something.
Sure.
Yes.
Because that is, you
absolute.
See it. It's absolute. There's no difference between the Zillow price and the Redfin price, and this and that and that.
Yep. Totally agree.
This space needs something.
Yeah, and that's why you get such a big wide. It's anything that hasn't been kind of commoditized. That's why you have these wide spreads in the pricing. Once you get it commoditized, it become a lot tighter, a lot tighter. So I agree with you. But Zillow trading 67 and change, maybe 68, down 50 cents or so. Remember, 48 hours ago it was $75. So this really affected Zillow. Google, on the other hand, never goes down, and it's 308 or so, basically unchanged. Although highs are around 325 or so.
Okay. Mm-hmm. Alibaba, Jadu. Alibaba, JD, and Baidu shares fell yesterday as new data coming out of China is raising concerns about China's economy. The Chinese retail stocks did fall yesterday as retail sales in China grew 1.3% in November. That was a slowdown from the 2.9% year-over-year growth in October, and it's the weakest overall growth China has seen since 2022.
I think when we put that Baidu position on Friday last week, and I said I cannot trade these China names.
Yes.
That.
Don't worry, neither could my last prior administration. Couldn't trade them well either.
That's true. But it's already full. It's already in the money a couple points here. One at basically.
Well, Baidu's actually up small, about $1 or so. Bob is actually down $1 or so. So a little bit of a mixed bag of tricks. But I don't know how. I mean, with so many stocks to trade in the market, I don't know why you want to trade a stock that doesn't have great,
Yeah.
You can always have surprise data. It does.
Which one, Baba does, or
they all do?
They all do.
Baba, Baidu. I mean, these things move, and they have you have constant this is a binary event that.
Sure.
You do. You do have binary event risk.
Right.
Yeah. I like slow and steady winning the race, but I get you. It's the need for speed.
Yeah.
21 states have filed an amended complaint against Uber over its subscription practices. I use Uber Eats all the time. Don't judge me. But it is such a scammy.
Oh, you got money for that in this economy?
It is such a scammy app because every time you're just trying to place an order, it'll put a screen up and it'll try to get you to enroll in their Uber One subscription. And you think you're just trying to check out, and they're like, ha ha ha, gotcha, bitch. And so every time
you clicked on it, you have to pay for it.
I know, every time I have to be very careful. I set my phone down and I'm like, okay, making sure. But this is true. So now 21 states have the amended complaint seeks civil penalties for violation. Uber One is touted as a monthly or annual subscription, and they say that you're going to have 0 delivery fees and $25 a month in savings, and people were still being charged delivery fees. They weren't saving that money. They tried to cancel. It wouldn't let them cancel. The whole thing is a big mess, and almost half of the states are now suing Uber. That's it. That's the tweet.
Well, stock getting killed.
Yeah.
It's gone from 100 to 80.
Yeah, you're right. Down
last,
20% or so. I mean, now let's not forget. I mean, in April it was trading around 60, and it made its way to 100. So it's in, depending on your, what you're looking at, it's maybe in the middle of its range. I would look at it as like Nikki's looking at it. It's getting killed because my time frame is 40 to 60 days, and it's been getting killed. Yeah. On the low end of its range, Ivy rank at 13.
The one thing that I think is funny is like all of these Silicon Valley high-powered companies, billions, trillions of dollars, but they didn't make a use case for the fact that the third largest city in America gets snow, and that maybe their little robots wouldn't be able to work in the snow. Like, I don't understand why they were like, oh yeah, we never thought that it's gonna snow and that the sidewalks are gonna be icy and slushy.
They don't have slushy tires for them?
They don't. Have you not seen all the TikToks of? But we're Midwesterners. We're so nice. So people are like pushing the robots.
Trying to help the robots.
And they're like, go robots, go.
Those those need to be gone. They are.
I like their little faces, Coco.
Have you seen the ones of like the parking lots with all of them?
Yeah, with all of
them. Did that one just stare at me?
Yeah, with the dystopian music. It's right up here.
What are you looking at, boy?
Yeah.
I know. So crazy. Anyway.
Get your eyes off of me.
Merriam-Webster Dictionary has named slop. Slop, the word of the year. AI's impact.
Oh, wait a minute. And what was the color of the year? It was like some
Cloud Dancer.
Yeah.
Is white. Okay, but that's Pantone. Are you okay, Boomer?
No, but I mean, this is a horrible word to be word of the year. Just like that's a horrible color to be colored.
Oh, I love it.
Color.
Slop is definitely.
Slop?
Really?
Slop is the word of the year.
You know what slop is? Slop
it's
K-fire. Slop is
those are slop bowls.
Food that we have.
Okay, that's like slop bowl.
But also your feed, your social media feed, if it's all just like AI videos that are right, slop. It's all slop.
I love.
So I mean, it's better than the one dictionary that their word of the year was 6'7". So
that was one of the.
That was one of the words of the year.
That one.
Screw it. So slop.
Yeah.
I like 6'7".
Slop is the word of the year. Did you see the hockey team? They had like a gin alpha night, and the jerseys were 67. So it's like, what,
very good.
What are we
very
doing?
Good. That's fun.
I remember.
See, that's a smile.
I remember when 69 meant something to this country.
Not 6'7".
Overrated, by the way, in my opinion.
Hey, the dictionary defines the term as digital content of low quality, you've lost all control, that is produced usually in quantity by means of artificial intelligence. So slop is your 2025 word of the year.
Slop. All right. You like it? I like it.
I think it's a good one. I like it.
Okay.
Oreo is bringing back a beloved flavor 10 years after first launching it.
It was never a beloved flavor.
Mondelez announced the return of the cookie dough Oreo, first introduced in 2014. The cookie should be available for a limited time in
Who
retailers.
said this was beloved? Mondelez?
Nationwide on December 22nd. That looks good. I like those golden Oreos. If it tastes like cookie dough, I don't know.
You like cookie dough?
Yeah, oh yeah.
You like cookie dough?
Oh yeah.
Must be a kid thing. I don't like cookie dough.
We literally have mortgages. We're not.
We're not talking about kids.
We are not children.
It's all about your perspective where you are in life.
I'm spending my Monday nights buying art.
I got a colonoscopy this year. Like what? What is happening?
Aging children.
Yeah, okay.
Aging children.
I love this. I love this so much. It's time to make bowl games great again. Bush's Boca Raton Bowl is offering free entry to any fan who shows up with a can of baked beans. They are collecting food to donate to support families in need. I love this. It's sports and society coming together. I've never been to a bowl game.
Who plays at the Boca Raton Bowl? Absolutely.
Louisville. You got to say it like that. Louisville and Toledo.
And Toledo.
Yes,
Got
Louisville.
What's the spread?
And I don't know. You tell me. All beans will be donated to help families in need. So if you're in Boca.
Bush beans, pretty good. I'm not going to lie.
If you're in Boca, isn't your house in Boca?
I'm on the other coast.
Yeah.
I'm just kidding.
Right across from it. I like bush beans.
I think this is great.
Why not? Why not?
Yeah. Why not?
Don't pay full price for the ticket. Nobody's going to this game. Nobody's going to this game. Get your can of beans.
Yeah. Mm-hmm. But I think that that's fun. Like, you take the kids for free. Like, because every time.
I think it's phenomenal.
Every time Nikki leaves the house, it's $300.
Yeah, I agree.
Well, he's out there buying T-bone steaks for himself. I could see why.
I agree.
Finally, today for my viral video of the day, I'm in the holiday spirit, and I love this group. This lady, bless her heart, she owns 3 very vocal huskies, and she makes social media videos with them. Last year, the huskies reenacted Crazy Train using wrapping paper rolls, but this year taking a classic Hershey Kiss commercial and reimagining it. Check this out.
And 1 minute, guys.
And we lost the screen.
Oh, John.
I could see it, John. I was like,
wow,
and
John.
it's gone.
One more time and you're out of here.
I'm going to have to reenact it. There it is.
Cute looking dogs. I can see.
Yeah, they're
before it
huskies.
comes on. Yeah.
It's a lot of
I had a
fun.
husky named Tanya.
Aw.
Yeah. Worst dog I ever had.
Okay.
I've had some bad ones. This ate my mom's linoleum.
That was just for me.
Well trained.
Yeah.
Well
I
trained.
know. You're such good doggos.
Well, that looks like it was kind of stitched together.
Had to spread them out a little bit more if I was the creative director on
Okay.
this. I would have put one a little bit back further, and then you could see the light.
Okay, Ubu Boo Boo. What's coming up next?
We're going to take a quick, don't ruin my memory. We're going to take a quick 90-second break and come back. We got more Tasty Live in like 90 seconds. We got confirm and send. We're going to take a look at the market. We'll be back in 90 seconds. We'll have all that in a minute.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer emails. But before we do... Oh, look at you trying to show off now, buying some of your MNQ back. You covered about 75% of it now?
Yeah. Got a little tiny left to see what happens on the open here.
Good job out of you.
Same with the E-minis.
Covered your E-mini S&Ps too, about 75%, correct?
Yeah.
E-mini S&Ps are down 15. Now you can see here they were about 30 handles lower, but that was overnight last night. This is about as low as I've seen them since we've been on the show. NASDAQ the same, down around 93, but you can see here it was down around 180 handles lower than where it is right now. But again, this is about as low as I've seen it since we've been on the show. Russell down 370 and the Dow down 47. They're all down around the same percentage point, maybe the NASDAQ slightly weaker. On a 2-to-1 basis, if you're looking at a third of a percentage point versus maybe an eighth of a percentage point. Volatility unchanged at 1855. You can see last night it got up to flirting with 19, down to 1842, the lower end of its range right now. Bonds down 3 ticks after the number, just like the market. The market rallied, bonds rallied. Maybe a little scoopy on bonds here pretty soon. 114.25. They got as low as 114.20. Bitcoin up around 1,000. You could see here it was about $1,000 higher. It's also been about $2,000 lower. Bitcoin with a small little bit here, but still inside a tight little range here. Bitcoin up 1 1/3%. Ethereum basically unchanged at 29.35. Oil, I don't know, son. I don't know if you've been looking at the gas prices, even in Illinois where I am. It's about $3.15, $3.25 in that range. Oil down another $1 and change to $55.60, about as low as it's been. Ivy rank percolating a little bit to 23, so maybe oil comes into play a little bit today. Maybe we try to catch a falling knife in there or sell both sides, maybe a jade lizard, however you want to take a look at it. We'll probably trade CL options if you do anything in there. USO is kind of a hard.
I have one of the micro crude contracts, so I'm taking some heat on that. And I also have an at-the-money put spread, the 55.53 in the 29-day oil futures. So
you're already in oil, though, but I don't blame you. I mean,
I'm pretty long.
Sorry that the market isn't accommodating you, but I'd be in the same position as you.
I appreciate it, though.
You're welcome.
Thank you for your concern.
Thank you. Gold, after being lower for most of the session, you can see here trade under 4,300 to 42.97. Has caught itself a little bit of a bid here, 43.40 basically unchanged, but 30.40 handles off of its lows. Silver down 10 cents, but look here, it traded all the way down to 62, traded all the way up to 64. It's 63.5. I would consider that silver's hanging in there. More than selling off right now. Net gas down almost 10 cents. That's one of the bigger movers on the board here when you look on a percentage basis, down 2.5. And you could
move.
Look at this move. I mean,
what happened? We have like the coldest.
That's all crap. It doesn't mean anything. I mean, the market's.
I guess it's already priced in. If we knew it was going to be cold next week,
would we do something about it this week?
Yeah, the price they're going to, that's going to be priced in.
Reflect all that. I mean, you remember nat gas was under $3. This is all before all the rolls and stuff like that. Nat gas.
And it trades on a curve, too.
It does trade on a curve.
It trades higher.
It's almost like volatility. It's very hard to inventory and keep. Yeah. It's very expensive to inventory.
And you can't do anything in like UNH. UNH is, or UNG.
UNG meant,
it's not tradable. I mean, it's at 12 right now. It has all sorts of splits and, it's just
reverse splits because it's got to keep up with the futures. Yeah.
It's one that has drift sometimes. It's one that has drag sometimes, depending on what the curve looks like. I mean, it's just not. It's not one you can really trade.
Yep. Totally agree. Oh. All right, my friend. We're just about the top of the hour. It's Tuesday, December 16th. Let's get to confirm and send. Thank you. Viewer emails, where we go over your viewer emails that you submitted to us, whether it be support or to Nick and myself. We take those and we ask the question live. If you got the question, everybody has the question. First one, please, John. All right. Whoa, I have a question regarding the put premium for IBIT. Maybe you can look that up while I'm talking. I was looking at the 60 put in IBIT. Now, IBIT is trading closer to 49 actually.
Okay.
Put around January and February to roll my deep in the money put and realize the premium difference for the ones expiring December, January, and February are very similar.
Okay.
I expected there would be more extrinsic value because time has value. I'm going all the way out to, January or February. There should be some premium to it. The IVR is not the highest compared to past weeks, but still high at 51 or 52. Is this typical? What normally leads this? So what he's looking at, to go from January to February on this deep in the money option.
The 98 delta in January and February, it's a 88.
So you're only getting from January to February, you're probably getting about 40 cents to roll it. You're going out for another 30 days for 40 cents. Certainly doesn't seem.
It's because that option is stock.
That's
that option
correct.
is stock.
That's correct.
And this kind of goes to why I held that short put in PayPal as well. At a certain point, like you of course, rolling will add extrinsic value, but that applies to options that have some sort of
that's an option that has a 60, 70, 50, 60, 70-ish delta deep in the money. That's what I would consider. When it has a 98 delta,
it's just stock. You're just rolling stock forward. The one problem here and why I think it kind of makes sense if you have something that's deep in the money that you're okay holding, meaning you're okay like taking stock. The one problem with rolling this option is if you do get a move to 60, instead of the stock that moves 1-to-1, you're going to make that, the IBIT's at, we'll just round it at 50 right now. You make that $10 on the way up, 1-to-1 with stock. With a put, you're going to make that $10, but there's going to be some sort of extrinsic value left in that option, which you would need to buy back. So instead of making the $10 on the way up, you might only make $8 or $7. Because that option is going to hold some sort of extrinsic value. Now, if it expires,
you'll make 1-to-1 for the first $3 to $5-ish, and then you'll start making 80,
you're not
70,
getting
80.
paid to make that roll. I mean, you're getting 10, 15, 20 cents.
You're not paid to get the.
You might as well.
So what does somebody do? What would you do when the roll only pays you a small nominal price, 40, 50 cents, maybe even a buck? What do you do?
Well, I think you can hold that into like close
to the expiration. You don't have to do it right now.
Yeah, you don't have. Days. You're not getting paid to roll right now. You might as well have the static delta. If something goofy happens and we're back at 100K Bitcoin and this option's right at the money, you're going to be better off having that shorter duration than you are with the longer duration. Sure. With options you get that added leverage, which is a benefit,
and you use less buying power.
And you use less buying power, which is depending on your account type as well. But just as a concept of rolling deep in the money puts, if you can take the stock and the buying power is basically the same, you might as well just take the stock. And you get that. I mean, do you not agree? Because
I don't agree or disagree. You certainly can take the stock because that's what you have. Yeah,
98
totally.
delta option is stock. Like that's just what it is.
I think the bigger question is if you want to sell premium against this.
Yeah.
You have to look at it.
People get caught up with the credit. So they look at this and they say, oh, I'm going to roll this to June of next year because I can get $1.
$1.50. Yeah.
And now if you get to 60 in the next 60 days, instead of making $10, you're going to make $5.
Yes.
And
time has value at this point because now you're at the money or near the money.
So if you're deep in the money, it's either close the option and sell the at the money put or sell a 70 delta put and do a cover call. Or take the stock. There's no point in marrying this position and rolling this 60 put out to June so that you collect 50 cents because then you're stuck in this option. And if you get the move that you need, that you want in a shorter time than that 150-day option, you're not going to get paid on it, and it's going to be a pain for you.
February has a $7 expected move. You're $11 outside the money. That's why you're not getting any premium for this. If you were inside that $7, $5, $6, even $7, then you would get yourself, your $2 in premium that you want to. So what do you do now?
And Jackie talking about like it'll use more capital to get the stock for sure.
Yes.
And so what I'm saying is like,
so you can roll. So what would you do? What would you do right now? You can roll your February option to January. I probably wouldn't at this point. I would probably just sit with it if I want to be long IBIT. But I would probably look to sell a call in February, assuming that when we get closer to expiration, I'm going to make that decision whether I have enough buying power in my account to just take possession of the stock or roll then. I'm going to assume that I hope that we go higher. February, I would probably be looking to sell around that 30-ish delta option, which is around the 155, which will get you around $1.60, maybe a little bit more, maybe a little bit less. And then I'm going to sit with that. I'm going to have an inverted spread. I'm going to have the short the 60 put. I'm going to be short the 55 call, but I have basically a covered call at 155, hoping that we get back up to 155 and I can decide to do what I want to do then. So if I was this person right now, on any rally in IBIT, I'd be looking to sell the 30-ish delta option because you have stock right now. I'd be looking to sell it, even if it's below your cost basis. I'd be looking to sell that option and hope that the stock comes up to my short call and I can decide to do it. Then your loss would be 1/3 of what it is right now, probably.
Just don't go
into 2028.
Yeah, like you can't.
So you can get a premium.
I know, but people get caught in that. And
I know.
You know, then you're stuck in that trade and you're never going to get that money back.
That's correct.
You give up the lottery ticket that you have.
That is correct.
And you know, we've seen sillier things happen.
Sure.
Bitcoin rally 10K.
Yep. Next question, please. Good discussion.
Yeah.
And that's why it's so difficult for somebody to understand. The discussion we just had wasn't clear cut. I mean, it has a little bit of variables.
There's so many things. That is the benefit of options, though. Because you get that flexibility to change things and do things. But you know, sometimes you just have to, like, when a stock moves or anything moves 20 or 30%, you're going to lose money. Like, there's just no way to avoid that. That's the risk in anything. If you were long the stock, you'd be out that 30%. I mean, that's just what it is.
Yep, you're right.
So the platform defaults to beta weighting positions to SPY, but most of my positions are in tech. Is it possible to change my beta weighted underlying to something other than SPY? It is.
Sure.
So on the portfolio page, you can change your beta weighted.
Click that little wheel or that little whatever you want to call that widget there, where it's under your watch list or your recent symbols.
Yes, exactly.
Left side.
So when you and I could show this, when you click on the gear button and you go to general, you can change your default symbol to whatever you want. It's defaulted to SPY. If you want it to be the Qs.
If you have a lot of NASDAQ and tech, go to the Qs. You're going to find it very similar. And please put a note on your computer that you're beta weighting it to Qs because you know, sometimes you'll get a little messed up where your positions change or you close a lot of stuff and then all of a sudden, you know, you're heavily weighted to oil and you're matching it to Qs, which is not the worst thing that can happen because Qs and SPY is about 80-90% correlation between the two, but your delta will be a lot different in Qs than it would be in SPY.
Yes, exactly. So it'll change the size of the delta.
Change the size.
Yeah,
correct. That's correct.
I think generally
I like SPY, but you can do what you like.
I agree. So good question though.
Let's go. Next one, please. I'm going to move over into being a full-time trader next year. One thing I'm trying to figure out is how often I should pay myself, or if I should pay myself at all and just draw out money as I need it. Is there a preferred way of doing it?
This is such a hard question because the numbers are so different to every person, and by numbers I mean the amount that you need to live comfortably, the amount that you have to trade. It's hard to put a number on this. I mean, you got to pay yourself something.
Well, it feels good when you pay yourself something, right?
But you got to live. You got to
sure.
If you're going to do this full time, you have to have some sort of unless you have like, you know, a cash stash that you're, you know, living off and you want to, you know, grow the trading account, then you keep it in the trading account. It's hard. But, you know,
well, more money is easier to make. You know, it's easier to make money with $1 million than it is $100,000 than it is with $10,000. So, I mean, everything is relative. I can only tell you the way I did it when I was a full-time trader as a market maker. I just use it like it was my checking account. I never paid myself. I thought paying my mortgage, paying my grocery bills, paying my electric bill and everything else like that, paying my nut, whatever your monthly nut is, and expenses, meaning your commissions and everything else like that, to yourself was already, like, if I keep it in my trading account, or I put it in my checking account, or I put it someplace else, I stick it in a safe, it's all one pot, right? I mean, it doesn't matter. So I liked keeping it in my trading account. So I never paid myself, but I knew if I started with, I'm just using a round number, $100,000, and at the end of the month I paid all my bills, and I have $110,000, I knew I made $10,000 that month for myself. And it wasn't very hard to extrapolate out. And sometimes your expenses are bigger each month, sometimes they're a little bit smaller. I kept it in my trading account. You certainly can put it into SGov or BIL if you want to keep your account at $100,000 each month, and kind of give yourself that kind of way that, hey, that's my profit for the month or the year or everything else like that. But your YTD P&L, your year-to-date P&L, gives you that pretty easily. But I never took it out and put it someplace else. But you certainly can. You certainly can. I think it's the good thing here is you only have to struggle with yourself. So ask yourself what you want to do, and go from there. Next question, please. Do you want to read it?
Yeah. Do you clean up your account heading into the new year? Do you like to have clean slate, so to speak, by getting rid of losers you've been rolling?
Well, I really don't have this problem because I'm such a good trader. But if I wasn't a good trader, I'm kidding. You know what? I mean, I go through my portfolio, and if I have any kind of usually if I have any kind of like stock position on a low stock, a relatively low price stock that I just took stock on, and I'm keeping it as a lottery ticket. I've done that in July and August. I'm probably going to want to keep it in December going into January anyway, right? Yeah. So for me, I don't really go through this like this and keep losers and rolling. I will and have done it when Sears was a stock. That's one that comes to mind. I got rid of that pig because I just couldn't make any money on it and vowed never to trade it again, but it's rare.
Yeah. I think just with our trading style, it doesn't, we're naturally getting
45-day periods.
Yeah, we're out of basically all of our trades for quote unquote this year. Like most of our trades are now in January, February. We've already done this. I mean, just mechanically, that's how our trading style is. So it just happens naturally.
Yep. That's it. All right. Beautiful. Good job out of you. Good job out of you out there for submitting those questions to us. We do appreciate it. We're going to take a quick 90-second break and come back. Strategies for your IRA discussion coming up next. This is Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
I got interested in trading when I was around 18 years old. There was a conference downtown, and they just kind of described the very beginning of the market. It pretty much would say 99.9% of everything was stuff that wasn't covered in school, just how to leverage your investments, even with options, and that was just really attractive to me. I understand that no one can for sure predict if the market is going to go up or down, but with the research that Tasty does, we're able to find those optimal numbers to trade around to put ourselves in the best situations. One thing people can expect to see with my trades is just a very raw learning process, someone just really getting into the market, but really applying the correct principles and mechanics, a very non-emotional approach, just trading by the book, just to have an inside look on how it really is for someone getting into the market.
look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with strategies for your IRA. 2025 Active Traded Guide to IRAs. Even the S&Ps are down 11.5, NASDAQ down 79. No movement right now. Volatility completely unchanged. Oil's moving to the downside, 55.39 down $1.28. Gold caught a little bit of a bid up 16 after being down 30 overnight last night.
Cool, let's do it.
Let's go. And then we got the opening bell.
Damn, I wish I still had that gold silver pair on. Would have been a good day today.
Would have been a good day. Yes, gold is higher than silver for sure.
It's okay.
Yep.
All right, we'll go through this one quickly so we can make the opening here. So, Active Trader's Guide to IRAs. I mean, I know this isn't the sexiest thing to talk about, but it is coming up, and it is, something that, especially if you're
pertinent.
Yeah, if you're on the younger side, you should certainly be allocating towards this. The greatest part about it is that you can't really touch it. You can't pull it out. So if you make any money, you can't go.
Well, you can but you'd have penalties.
Yes.
And it's like 50, and it's like 50%. You
cannot
just ballpark it and say it's 50%.
Yeah, it's a lot. Yep. Yes.
You need $1,000, you got to take out $2,000.
Yes.
With penalties and everything else.
But it's a forced savings.
Yes.
Is how I look at it.
Yes.
I think it's a good thing for everybody to have. So just a couple points here of important information on this first slide here. So you've got the limits have actually been increased, so you have a little bit more that you can put in. Here's just kind of how you can mix and match with a Roth and a traditional IRA. That's just like FYI type stuff. If you are a married couple, you can both allocate towards this, so you can double this basically, even if it's just one household income. Put some money away.
Yep.
Basically, the point here. Getting on to the next slide here. So just some traditional IRA contribution limits based on your income. So it's just a slide, just another one that's just an FYI. This is important stuff. I don't think this is in any math classes that Vinny doesn't get this sort of info in his math or finance class.
Soon to be 16-year-old brother, he does not have this. Only finance.
But he should be starting now. And if he's a dependent, I think you can. Well, you could do the gift tax, the gift thing.
Yes, that's correct.
I missed that for the first 35 years of my life. Maybe I'll get that.
How old are you?
35. But I think it's 10 grand gift. You could just gift that
versus zero.
For those of you that do gift, you
gotta wait. It's the grandkids, dude. It's the grandkids.
Yeah.
I mean, I fed you every day. I clothe you every day. Okay, like a baby bird. I would feed you.
Oh yeah.
Okay. I'm not gifting you money too. Give you the whole world. Open the door. There it is.
There it is.
Seize the moment, my man.
Take it. Yeah.
Semper Fi. Caveat emptor. That's the only Latin I know.
Here. So that's for traditional, for the Roth, which is our next slide.
Come see, come sa. No, go.
Here are just some of your Roth IRA contribution limits. You could do like backdoor as well. So there's ways to get contributions in there if you are over the limit.
My father left me a watch, and his girlfriend had to give it to me. Okay.
I think I still have that, or did I give that back to you?
No, I think I have it.
Did I give that back to you?
You did.
Because I had it like.
Yeah.
It's fake.
No.
It's not real gold.
No. Oh, then it's that's a different watch. No, my dad had a white gold.
Oh, the white gold one.
Long jean, kind of small. Watch. Yeah. That he would pawn. So I remember it. I remember it
week to week.
sometimes it seemed like that. Whenever, he had a hot tip on a horse or something like that, that thing would go into the pawn shop. That's PAWN.
Yes. So just a couple contribution limits for you. Again, another FYI. Getting on to the next slide here. So just looking at like active trading and just what this kind of effect can be. And, an 8% yearly return is a little light here. I guess you're being a little conservative, or at least our peeps are with their slide here. But just talking about, how this how the effective compound works on these accounts. You get the benefit of not having the tax implication on those, especially in the Roth IRA, because, you pay that tax going in, you pay that money is taxed before going in. And so when you get it after, X amount of years, you don't pay tax on that money. Huge benefit to you there. So
huge.
Yes. Next slide here. So with dividends, another thing to consider as well, because, when you're in a taxable account, dividends are taxed too. So it's almost like a forced profit taking, so to speak, if you have these dividend paying stocks. Traditional IRAs and Roth IRAs, you don't have that sort of taxable income as well. So just like another, positive to these sort of accounts. Quickly on the next slide here, so just for active trading / swing trading, IRAs eliminate the wash sale headaches and short-term capital gains taxes. So, of course, in an IRA, none of this stuff is taxable on a year-to-year basis. So, it's a way to have non-taxable gains, which is great.
Yeah, it's powerful.
It's powerful, and when you're
compound interest, go ahead.
That's good. So,
there are definitely advantages to it.
Yes.
And now that you can, do any type of strategy in an IRA, even selling naked calls. I know it uses more buying power, but you can do call spreads or anything else like that at tastytrade. It makes it a lot more advantageous. In years past, when there was no brokerage firm that would support all the strategies, you could make the argument that IRAs, was kind of dead money. You would just buy a mutual fund or something like that and just keep it there forever and hope that the market goes higher. Now you can do a lot of things with it. So,
well, I think that's the biggest.
You trade futures in it, which uses a lot less buying power.
Well, but one of the greatest things about these accounts is that you can then allocate as you see fit, and you can go into a lot lower cost things. I mean, like these, if you're sitting at a Schwab or a Fidelity and you're buying like mutual funds at, 50 basis points to even like a, 100 basis point fee on them just to track the market, this is a pretty...
You can do it yourself and save yourself a little bit of money.
Yes, and that's a lot. 1% over 20 years, with all the gains and all that stuff, the numbers become very, very large. So
it's hard to catch up when you're paying a big fee. Yes, 100%.
So you got to, that's something to consider. So then just on our last slide here, just to give you an overview of kind of like all these accounts and just sort of, if you were to pick one or the other, this is kind of how we broke it down. So like active trading, obviously you have that Roth IRA account. It's going to be a little bit smaller because of contribution limits. But, that one over time, because you pay the tax going in, you have a little bit more upside. So maybe use that as an active trading account. Both of these are, you can use like a dividend approach to these. Taxable account is obviously your liquid money. That stuff is easy to take out, all that stuff. So just a couple little FYI slides for you as we get into this sort of IRA season, tax season.
Wet your whistle to think about this, because it's probably a decent idea for you to do.
Yes,
absolutely, for most people at least. Good job out of you. Good job out of the team. Is it a good job out of the market? What do you think? Because you're a little bit bearish coming in. I think your buys are much better than your sales. I mean, you're making money on both sides, but we haven't been much lower than your sale.
But I mean, my average is
your average is good because you've been able. You sold them good on the rally up.
Yeah,
bought them back on the sell off a little bit. So I'm wondering, what is your thought here on the overall market?
I think we get back to 68.50. That's been our number.
You're talking about the even the S&Ps, which is a 19 handle move or 19 point. You got a $32 expected move, so well inside that move.
I think you get an inside down type move. I feel like when we've had these kind of overnight sessions in the early part of the overnight session, like after 5 when the futures open back up, it's been a little weak, like in that, kind of the overseas trading session. It's been bought up all the way into the open. And then on the open, it feels like you get a little bit of a bid, and then that's when you sell them. It's like 9:30-ish, an hour after the open. At least that's how it's felt for these kind of weaker days. And you're seeing, the gold and silver move, I feel like is ominous.
Yes.
The movement and the velocity that you're having in gold and silver. Bitcoin is telling you speculation is, not what it used to be, and liquidity is probably not what it used to be, because if those were, at heights, I think you would have Bitcoin, moving like a meme stock again.
Yes.
And, we're at all-time highs. So is it crazy to have a little bit of a pullback from basically all-time highs?
No, but it is the end of the year.
Yeah.
Do you think that the numbers that come out are going to be bearish in nature? Do you think they pull the rug out of the market, or maybe they try to keep the market intact? That's the cynical side of it. So we'll see what the market does in just a minute. We're going to come back. We got the opening bell. This is Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, the opening bell is imminent, son, in about a minute here, just over a minute. E-mini S&P's down 19 and change. NASDAQ down 115. This is about as low as I've seen the NASDAQ since we've been on the show. Would you agree? About as low as the E-mini S&P's have been. Russell down 6 and the Dow down 74.
I just closed out of my
your MES.
I'm gonna see if we get a little bit of a bounce here on the open and sell back.
So you're covering you covered all.
I covered both, yeah.
Yeah, you covered around 75%, right around here, maybe a little bit higher, taking nice profits on all of them. Now you're closing 100%
We'll see if we get a little bit of a bounce in the first part of the session and sell them out again.
Good scalp to start the day. I mean, yesterday was kind of a nothing day for most of the day after the opening. So we'll see what happens today. I'm going to open here in about 10 seconds. So even the S&P is down around 20. Oil down $1.16. That's a big move to the downside, about 2% on top of. You could see here last couple of days. There's your opening bell. Net gas doing the same thing, down 13.5 cents. That's actually a bigger move on a percentage basis. Bitcoin hanging in there at 87.3, actually catching a little bit of a bid as the market's sold off just a little bit here on the opening. Let's see what's moving this market to the downside. You got Google down almost $4, Tesla down $3.50, Costco down $2.90, Microsoft kind of weak here the last month or so, going from around 540 down to around 470, and here you are letting your NASDAQ back out.
I did that in big voice.
After covering, you're gonna have to change that. After covering your NASDAQ at 228, you sold it out at around 286 and change. Even the S&Ps are trading down 14 handles, so you're trying to sell a little.
The MES will. I'm not the.
I got you. Yeah, you sold MES and you sold MNQ.
Yes,
and you got lucky on an even the S&P.
on a.
You made a couple of handles on your.
But that they owe me on that because I did that with the NASDAQ last week.
And it cost you.
And it cost me.
This time you made.
This time they gave it back to me, so that's okay.
Yes. You are correct. Good job. Out of you.
Okay. What else is moving here? Anything?
I did the downside. Let's take a look at the upside here. I don't know. Now is something I don't trade. That's ServiceNow up $9, a 1% move. Must have earnings or something. I don't know. Carvana. No, earnings are on 2.4. Carvana up $3. MSTR up 3.5 with Bitcoin catching a little bit of a bid here. Coin up $3. AVGO up $2.80. So we talked a little bit about trying to buy that earlier this morning. It looked like it was lower. It's higher now.
I sold the 300 puts yesterday at 410. They're at like 360 right now.
Your Hood, you also sold some puts in Hood. Hood's up $2, $1.90 right now. That's probably helping you.
Volatility wasn't high enough to get paid on a one-day move like this. Like
in Hood, you're talking about?
In Hood, in AVGO. If you remember, like 2 or 3 weeks ago when we were kind of selling out, Coinbase and Nvidia puts into those down moves, you had volatility a little bit higher. And that one day, move of $2 or $3 with the volatility contraction, you were getting paid $1 on that option.
Sure. Yep.
These options, like this AVGO option, you're getting 40 or 50 cents today, which is good, but it's not the same juice that is in my recent memory.
No. Nothing like that at all.
It's harder to peel those off for 40 cents, when you're not, when it's just a couple of contracts.
You are 100% correct, son. 100% correct on all of that assessment. Let's take a look at some of these futures markets if you want to. Gold catching a little bit of a bid. Gold up $23. Silver now green. It was red all night long and into the opening. Here is now up 9 cents and change. Gold silver ratio pretty much unchanged from its close last night. Nat gas down 12.5 cents. Bonds making new lows, 114.17. Ivy rank -0.5.
Ugh.
So selling.
Now, what do you do in bonds if you wanted to trade it? Like, you just have to trade the futures, or like an at the money put if you want a little bit of leverage, a little bit of decay to it, but it's not. It's nothing.
Yeah, definitely. It's definitely nothing, and I don't even a micro product or something like that. Yeah. There's is the only way to do it. I think you have to kind of abstain or get too big in ZB.
Give me my little scoopy.
Bonds go lower, rates go higher. Should be a little bit of a bell going off in the market, but so far market hasn't responded to that at all.
Yeah, I kind of want to.
Volatility up 11 cents. I consider that a nothing move also. Even the S&P's one-day expected move, $35, still hanging in there pretty good. I know we're only 4 minutes into the day.
Yeah, you want to do like a strangle in Nvidia or something? I got an Ivy rank of 8. I'm like itching for positions here. I'm trying to talk myself into things.
You got to be very careful when you do that. If you want to do anything, maybe a 0-day trade. If you wanted to go with that, maybe wait another minute or two, or do it on the next break or something like that. You know, we're talking futures in a moment here.
Yes.
With Craig coming in from the CME, which is pretty cool. Appreciate their support. But you can do something in SPX if you like to, or go into ES, which would make it a lot smaller of a trade than SPX.
The dividends for a lot of these, like XLK, do they happen already, or they're happening this?
They are not happening as of right this moment that I know of.
I saw somebody asking about those, but those quarterly dividends are coming up.
Yes, they are, but it's like the ETFs. Nobody trades the VAWs, the VDE, VGT.
I thought it was all the X. I thought it was like the XLK, XLE, XLF.
XLK dividend hasn't come out yet. I think it's more like
those are the
next week.
Okay.
Like they came out September 22nd, so usually it'd be, 3 months later, like December something. I can give you the exact thing. Let's see. XLK Index. Hold on 1 second. I'll give it to you. Around December 22nd. Look at me with the payment of around December 24th. So you got next month for those. I mean, XLK is a small one, but there are much bigger ones too. Yep.
What can we do in? You want to do something in the diamonds? We did that in the Johnny Trader account.
Yeah, we did. Diamonds Ivy rank of 11. You're just looking at it from a what point of view? I mean, diamonds are just a skosh off of their highs. What are you thinking?
You want to do like a?
And why are you thinking diamonds at this point?
Because we haven't traded it. It's at highs. If you're looking for some short delta, it's something.
Pump the brakes, my friend. Something will rear its ugly head. Trust me. Trust me on this.
E-mini's only down 8 now.
That is correct.
NASDAQ just ticked green.
Up 7.
Beat you to it.
You did beat me. You did beat me to it. You always beat me to it. No. I mean, you're better than I am. That's just how it is.
No. You created
your
this.
Eyes work better than me.
That is true. The eyes, ears. My ears are not as great. I think there's something with the bat ears. I don't know.
That's on you.
They are little though. The bat ears are little.
Listen, I had people yelling and screaming in my ear for 30 years.
That's true. I have no excuse.
That's my thing. Your bad ears, that's on your mom's side.
No,
okay?
No, it's not.
Yeah.
No. She does have the hearing aids too.
There you go. There you go.
But I think that's just you guys
want to say it. Didn't want to say it, and it's hereditary. Let's take a quick 90-second break and come back. We're going to talk about more things, markets, and futures in focus with the CME coming in here.
AVGO just rallied like. See now you can consider taking. I'm gonna put this
AVGO up $6. Yeah.
See if I get filled on this at 310. Did Nvidia rally too?
Nvidia.
Nah, basically unchanged here.
Nvidia unchanged.
Because I think you have Micron after the close today, right? The 17th.
Oh,
I'm tomorrow after the close.
Micron is the 17th. Today's the 16th. Yeah, I thought you caught me on a faux pas mistake here. NASDAQ, which was green just a moment ago, down 28. A lot of chop as we had talked about.
A quick move.
Yeah, I guess so.
You saw out another one here?
I guess so.
Saw out another. Yeah.
Selling more NASDAQ. This is what happens when you get bored. Be careful.
No. I'm there.
Well, now you got some house money sitting in there.
Yeah. We're okay.
Yes. Right. Gold up $20.
I'll finance it for you. Don't worry.
We're going to take a quick 90-second.
You don't have to take the losses. Don't worry. I got you.
We're going to take a quick 90-second break. I'm going to teach you about etiquette. We'll have a 90-second break here. We're going to bring the CME and my friend Craig coming in here in 90 seconds. Tasty Live. Not going to miss this. Futures in focus.
NASDAQ.
Down 40.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch tastytrade.
We are back, son. You know what that means. Enough out of you as the E-mini S&P sell off. They're down 28 near the lows for the session that we've been on. They're about 20 handles off of their lows for the overnight session. You just covered your NASDAQ for a
tiny. Oh, man, I missed 10 more handles.
NASDAQ down 98. I'm sorry, Craig, you have to watch this as my son gloats. As a veteran trader like yourself, and you've seen people trade for years and years, you know how it's a double-edged sword. But right now, he's on a high.
Every time I add one, he's always like, oh, it's a little bit big, Oh, you're chasing.
I've watched
I gotta
him.
give it back.
So far, so good.
Yeah.
So far, so good. He's been scalping them nicely. You're completely out of them right now?
No. I sold one out at 315.
316 and change. He actually got price improved. He went in at 314. The market moved so much that he got price improved, which is a great thing.
Yeah, that's cool.
In futures, you're obviously going to get the bid.
Sure.
When you're selling something,
Sure.
you're not going to get your price. You get the bid because the markets are so tight. Go ahead.
Right.
No, I mean they were moving.
Yeah, they're moving around. That's right.
They were moving.
That's right. And he got price improved on his bid also. So you got price improved. So why don't you give Craig a couple of bucks?
I know.
Why
I
don't you give him a
have
Christmas
my
present?
wallet at my desk out there. I owe you a couple bucks, so I'll give that.
Craig, as you can see from the beautiful garment that he brought in, that he's wearing from the CME group there, he didn't bring a little bakery box or anything for us to put on, but very nice to see you. Beautiful color, by the way.
Yes.
Very nice for your complexion.
CME Group Blue, yeah. Thank you. Appreciate it.
You're welcome. You're welcome, my friend. Good to see you coming in here for Futures in Focus that we do, a relatively new segment here at Tasty Live. We appreciate the CME's participation in helping us do this too. So thank you and your group.
Thank you guys. It's every other Tuesday. I look forward to coming over to Tasty. So appreciate it. Yeah.
Awesome. Beautiful.
Like a midweek vacation, you come over here, you hang out a little bit. You should stay for lunch. Lunch is actually a good one. 5 Rabanitos today.
Yes. If you
of the Mexican food
that we get here, this is the better one.
This is
like their hot sauce is hot. Like, you know what I mean? It's like authentic. This is
good.
This is pretty good.
Pilsen. It's in Pilsen.
Yeah, Pilsen, which is a great neighborhood for Mexican food. Yep.
2 jobs numbers this morning, right?
Yes, and the market rallied on that and promptly sold off.
Yeah.
We got to green on all the indices, and now they're all red by about 1/3 of a percentage point, which you would know is about 90-ish points on NASDAQ, about 30-ish handles on the E-mini S&Ps. Russell down 6, and the Dow down 100.
E-mini's right at 68.51.
So is that like bad news is bad news today, or is...
I don't. Volatility's finally percolating a little bit, up 24 cents. Yesterday it didn't percolate at all. Still a relatively small move in the market, but I think the market's a little skittish. Yeah. We've been chopping around.
Yeah,
been a chop fest.
Yeah. It's been interesting in the overnight session. The moves have been. They've had some quick downside moves. Like we were down like 30 or 40 points last night, like shortly after the 5 p.m. open, like when the futures open back up, and they rally them into the close, and it looks like you had 30 or 40 ticks in vol futures.
Yes.
Into that move, a 30 or 40 handle move to the downside in the E-minis. NASDAQ was down like 250, 300-ish, and they've promptly bought them back into the open, and then on the open, it kind of retests that sort of low. It seems like it's a lot of churn, churn. I don't know if that's
holiday trading, maybe, or
you just covered your MES, by the way, right?
Is that I got one left?
Oh, beautiful,
runner.
Beautiful. So about 75%. Yeah. Yep.
Are you guys seeing like volumes kind of lighten up into?
No, volume's been good.
Yeah,
I mean,
volume's been strong.
Yeah, all across the board.
Yeah, for sure.
E-minis have been over like 1.2 million for most of
the day.
Past
month.
Yeah. So it's been good.
With not a ton of vol either. Right?
Yeah.
No, not a ton of vol. Volatility's low. Yeah. Across the board on just about everything. I mean, I guess it's 15 to 17 vol, depending on what month you're trading on the ES. NASDAQ is similar.
I just sold the NASDAQ out again.
NASDAQ, you covered it at
I just sold
244.
And then I just sold them out. I'm selling the E-minis out again, too.
Putting on a clinic, Greg. He's putting on a clinic here.
All for me, right?
No, but this
he's been doing this long before you. I would like to say it's because of you, and he was showing off because you were here and just clicking the button. But he's been doing it since we came on the show about an hour and 12 minutes ago.
This is where I get caught, though.
Yes,
this is because it's been
too good. It's been too easy.
I tell him on the breaks I'm seeing the Matrix a little bit. I'm like really in the zone. I'm
feeling it.
I'm feeling it, but this is where I get a little caught. I got caught a little bit with the silver move.
Gold silver ratio.
That was a wild one. That was a wild ride, but. We battled our way through that.
Battled, yes, it wasn't bad. They were a worthy adversary, no doubt about it. All right, let's get my man here. Before we have to pay him overtime or something like that. Everything you need to know about NASDAQ and MNQ Futures in Focus, sponsored by your Chicago Mercantile Group. See me?
Yeah, it's a great topic today because the NASDAQ futures, both the NQ and the micro NASDAQ, are the micro NASDAQ is the most popular product by volume by retail or individual traders. So I think it's a great topic. It's become the most traded by retail at CME, and that's a little bit different than when I started 9 or 10 years ago. We saw more activity from retail in the S&P. But it's since kind of moved into the NASDAQ. And we do a lot of retail business, and obviously in the ES and MES as well. But I think because, you've got like names like the Mag 7, right? Like all the big $1 trillion tech companies make up 40-50%, I think, of the NASDAQ.
It basically is the market, right? I mean, when you're looking at it.
So those names are in the news, right? So people see them, and it moves.
Yeah, it has a little bit higher beta,
it moves.
It's a
So it's been a great product for us. The micro in particular, I think we're going to get into it, but the mini, which isn't really a mini anymore, is a $500,000 contract, right? $500,000 worth of NASDAQ. That's a lot of exposure for a lot of individuals.
Cool.
Yep. Oh, you're right. Good job. First slide, please. All right, what do we got here? Contract specifications.
Yeah, we just kind of talked about that, right? As everyone knows, futures have a multiplier. The multiplier in the mini is $20. So at $25,000, like I said, that's a $500,000 contract.
Notional
for one
size,
contract,
right?
for notional size, right? So in other words, if you have one E-mini on, you have $500,000 worth of NASDAQ exposure.
Yeah, people don't realize how much leverage you're getting. You know what I mean? So think about it. You have a $250,000 account. You just doubled your leverage.
Right. Twice as much as your account, and that's a big account too.
Yeah, it's a big account. Yeah, sure.
Account.
You go down to a $50,000 margin account, which is more I don't know if it's the average, but I mean when you look at like industry standards, you've got your multi-million-dollar accounts, you've got your $2,000 accounts, 50-ish to 100,000 is somewhere in the average. You've just five times.
Right. Five times, right? And I think margin on that would be about 33,000 or something like that. So so it's a big contract, which is why, and I think I might have quizzed you guys on this the last time I was here. So I'll throw it out again, see if you're listening to anything I say.
Oh my God. Don't do this to me. Every time a teacher did this to me, I would be in the
we're never top of the class.
A little history lesson. And we launched what we call the mini today. We launched
Can we phone a friend?
You can phone a friend.
Okay.
In 1999. Mm-hmm. In 1999, the value of the NASDAQ 100 was around $22.50. Right, so it was a mini, right? At 20 times $22.50, it's like $45,000 contract. Sure. In 2019, we launched the micro. You guys have any idea what the value of the NASDAQ 100 was in 2019?
I was absent that day.
Were you absent that day?
I was absent that day.
I think it was like 8 or 9.
Yeah, I asked you for a reason because when I did it a couple months ago for something, it surprised me.
Mm-hmm.
Yeah. It was 7,700.
Yeah.
So from 99 to 2019, it had tripled. So again, that mini had already become not as much of a mini.
Right.
It was 140, 150,000, which is why we launched the micro in 2019, which was 1/10 the size. So in 2019, the micro was about $15,000 worth.
Mm-hmm.
Now it's 25. Like that surprised me. I didn't realize that from 19 to 25, it had gone from 7,700 to 25,000.
Right.
But it is but that is still a lot more manageable for individuals than the 500,000.
You never realize how big small really is, right?
Right.
When you go back you start peering into what the specifications are.
Where it's been and stuff like that. Yeah. Mm-hmm. So the micro at $2 then instead of $20 is a $50,000. So that's a lot more manageable, I think, for a lot of individuals.
Yeah, and we mentioned this with the E-minis too. The flexibility of these two sizes allows you to trade both of these at the same time. Like you don't have to be in one or the other because of the sizing difference. It allows you to kind of dynamically take positions off, via the smaller size. So if you're long one of the full E-mini contract and you're short two of the micros, it's basically reducing your size by that 20%. So you're taking off, some of that risk and you kind of scalp out of it.
Right.
Totally. We talk all the time about how they allow people to scale into or scale out of positions. Yeah. You put a mini on if you do have that risk appetite and sort of scale out of it. You take two out, you have 8/10 of a mini.
You could also scale by using the options too, side of it. Absolutely. I mean, you trade NASDAQ futures, you're trading from the short side, you think we're going lower, and we rally a little bit, well, then, you can sell a put against that and you just reduced your size. And
absolutely.
now you've got a strategic position as opposed to just a directional position too, because you got the theta decay of the option. So there are many things you can do to get smaller.
Totally. And like almost all the products we talk about, we have options on as well.
Sure.
Right, that are viable products. Yeah.
You have to call the next slide, please.
Yeah, let's go to the next slide here.
Summary of comparison to the ES.
Yeah. So, just to give a quick breakdown of like some of the mechanics here, They are cash settled, which is also positive too. So these, settle to whatever the cash value is at expiration. Makes a pretty easy trade in terms of like the management of the trade.
Well, they're cash settled quarterly, right?
Quarterly, right. So I hear a lot when I go to different events and stuff, like people that don't know futures get intimidated a little bit about like, the delivery mechanism, and they don't want an oil tanker showing up in their front yard and stuff like that, right? But these are, like, as you say, they're cash settled. So if you do want to hold it till it expires every quarter, it just expires into cash and all of a sudden you're flat. Or you could roll it, right, which is a really easy mechanism.
So the Z futures that are still alive today, which are not the front month future, right? It's the H.
Starting to roll a little bit.
Already rolled.
Right? Yeah.
We've rolled them at Tasty.
Okay.
You can still trade.
They go off this Friday?
Yes, exactly. Yeah. This Friday they'll go away. But you're trading if you're trading the H futures, which are the ones that we are trading right now, and you're just looking at that. That I guess that'll be the Oprah code /NQ and then H. You're trading a future now that's going to be for the next 90 days or so, right? I mean, 90 plus days.
Right.
So there's nothing you have to do to that future for the next 90 days. So you're worrying about something that's going to happen months in advance.
Exactly. And if you are still,
then at that point it turns into cash, right?
And it just turns into cash.
Yeah.
But if you are like long the DEES right now, and you want to keep that exposure, that rolling mechanism is really easy, right? You just do a spread transaction.
You could trade it in one at Tasty Trade. You could trade it in one click, and it trades inside.
That was the point I was going to make. Is that we have market makers making prices on that spread itself, which is even a more efficient execution of that trade.
It's half a tick or a quarter of a tick or something like that in most cases.
Right.
Yeah. Good job. Yeah. Makes it very easy. I mean, I remember when rolling futures back in the day, I'm talking about when dinosaurs roamed the earth, you really were putting your life in your own hand. It was a market maker like Marty who will come in here at 9:30 or so, giving me a market, and it was less than desirable. You had to basically, call him up on a phone and say, get me a better market somewhere. Now it's basically pick 'em.
Yeah, exactly. For the roll. Yep.
Awesome. Good job.
And those market makers compete with each other on the roll, right? So it stays tight.
Nothing better than competition, whether it be at the gas pump or anywhere else. So when you have one person doing it, you're going to get wide markets.
Right.
When you've got competition, it's going to get tighter and more cost effective. And as retail investors, and that's all we're talking to here, that's all you want.
Exactly. Yep.
Yeah.
What's this next one?
So a couple ways to just trade the NASDAQ. Obviously, you have a lot of tech exposure. So, the Mag 7 is pretty much in everybody's, everybody's got some long delta there, regardless of if it's, in your trading account or the IRAs, which we talked about earlier today. But NASDAQ, great way to get exposure there and hedge positions or speculate, add some speculation on those positions as well. You can trade them directly around earnings and stuff like that. I mean, this is what's moving when you're talking about the tech stocks.
Yeah, this gets really interesting to me. And I'm not going to say this as a statement. I'm going to ask you guys, like particularly when we come into like Nvidia earnings, which I think tends to report a little bit later than some of the other Mag 7.
Yeah.
But you see vol kind of spikes in all of the tech stock options, right? Not just Nvidia, because they look at it as such a bellwether for technology. In some ways, I kind of like the NASDAQ future as you head into an Nvidia earnings, because you don't know that, Microsoft is going to move because of NASDAQ reportings, but vol spikes in that. And maybe NASDAQ is a little bit more of a sort of overarching play on that, or?
Yeah, we've traded like short equity vol delta wise with like NASDAQ and E-mini. So you kind of short the individual name volatility and then directional with the futures. And it's almost like a combined straddle with the two of them, because you're short vol in the equities and then you have the static delta with the futures. You can kind of play it both ways of kind of, it's kind of a two-way short vol play. so to speak.
Yeah. But I think that's just, I think you underscore like the point that there's so many different ways that you can use this instrument. It's got a really high, probably approaching 90 to 95% correlation with those stocks, with those 7 stocks. And because of that, you can get real creative, I think, with this future.
Yeah. Yep. And the margin requirement on the micro is like $2,000.
I think it's a little higher right now.
Just over, I think.
I think it's around 3 actually at the moment.
Just over. Yep.
Yeah.
Yep. Just about. Exactly right.
But yeah. So, but what that means that for let's call it around $3,000, you get exposure to $50,000 worth of the NASDAQ. So again, we call that capital efficient. But at the end of the day, that's also, as we all know, that's leverage, right? And we never talk about leverage without talking about both sides of leverage.
Sure. Yeah. Well, you couldn't afford to go out and just buy them all or sell them all, and the future's got to be the most. I mean, listen, what moves the market more? What moves the market first? I mean, it's always the futures. I mean, they basically trade 24/5, right?
Yep.
I mean, 24 hours a day or 23 and a half.
23, right? We open at 5 p.m. Chicago time on Sunday night. We're open till 4 p.m. Friday afternoon with a 1-hour break between 4 and 5.
23/5
Central Time, yeah.
You said it better than I did, but I've considered them basically 24 hours.
Yeah.
Even when it's between that time, between 4 and 5, I'm still looking and waiting for them to open, right? And they usually, I mean, not too much happens in that hour in between. They usually open within a couple of points.
When you get some of the earnings, the big tech earnings, that's when you can.
But they're open into that
until 4.
Yeah, usually that's going to come out by 3:30ish, 3:15, or 3 o'clock to 3:30 Central Standard Time. We're talking right now. So the futures trade all the way up to 4. So usually you get that move. But you're right. Yeah, when that happens,
you can, right?
Yep. Next slide, please.
So this one we just put together of just talking about how you can trade trade futures in your account here. So you could trade around, earnings events, macro events. We were talking about the NASDAQ this morning with the non-farm payroll numbers that we got out there. Obviously, the size of these two products are the key difference. Larger size with the NASDAQ versus the micro, a little bit smaller size there. But just to give you a quick little, couple steps to trade around here for the NASDAQ. I think the next slide is really the more important one because, the NASDAQ obviously has all those hugely traded stocks in it. And so when you're using the NASDAQ E-minis or the micros, you can trade them as a hedge on your portfolio against long-term positions, against earnings, and that's kind of what we outline in this slide here.
Yeah, kind of stuff. Some of the stuff we were talking about, exactly that.
Yeah.
Yeah. Anytime you're reducing delta, you're reducing risk in my eyes, right? I mean, I don't know. I know you add another component to it. Meaning there's a theta decay component, whether you're buying options or selling options. We prefer selling them, but you pick your poison, what you want to do. If you're reducing delta, you're reducing risk. And that's why it takes more buying power to do it too, right? So because you're reducing that directional risk. Yeah, please go ahead.
Totally. No, I think that's exactly right. And like Nick points out, a lot of people are long these stocks, even if they don't know they're long these stocks, right? The Mag 7, if you will. And this is a great way to sort of trade around that position.
Another way of taking this big notional value and making it smaller is by doing some sort of vertical spread or diagonalized spread or anything else like that, where you'll look at your buying power, and if your buying power is reduced, then again, you have less risk than what the future represents. So you're taking this big notional value of a future and bringing it down tenfold sometimes.
Totally, and I think that's particularly important when you look at the options because the minis tend to be a little bit more liquid than the micros in terms of the options.
Agreed.
And if you're trading that mini option, that's a $20 multiplier, so that gets to be a fairly large option pretty quickly.
Sure.
But do a call spread, a put spread, these things you're talking about, you kind of reduce some of that.
Totally.
And it allows you to trade them overnight.
Yes.
You have a little bit more access to it. So, looking at that spread and being able to trade it is a benefit of those products.
Oh, 100%. And do yourself a little trader hack, which is really just common sense, not really a trader hack. You just mentioned that the micro options aren't as liquid. Micro options and futures trade at the same price as the big boy future, right? As the ES or the / NQ. The options are going to trade at the same price also. So do yourself a little bit of a favor, price discovery, since the options are so tight and liquid in the E-mini S&Ps and the NASDAQ big future. See what the price to that is, and then just put it in at that you want to sell or buy it at the same price at the micros. When it trades that price on the bigger future, it's going to trade that price.
I'll take that one too. Tony, it's a great point. Like I love that you made that point, and because it's a little bit wider, it's generally not going to be that one tick wide, or that price discovery mechanism or.
You don't want to just go in at the market, right?
Totally, makes perfect sense.
Good job.
Cool. And then just getting on to the next slide here. So, talking about the NASDAQ here. You do have a higher beta exposure, which is obviously a benefit and a risk as well. But from on really any time frame, NASDAQ typically moves with a higher volatility in both directions here. So allows you, from a scalping perspective, and we've been scalping all morning, NASDAQ
yes, you have.
Allows you 10, 20, 30 handles. It can happen quick, but these are big products, so it's important to understand that as well, though.
Yeah, and like I said before, I think that's part of the reason that they have become even more popular than the S&Ps or SPOOs, as we say, among retail traders, is because they do move a little bit more. They trade with a little bit more vol, and it's a little bit bigger contract too, even notionally.
Are you dating yourself when you call them the SPOOs?
I only found out in the last few months why they were called SPOOs, even though
that was the code, SPU, wasn't it?
Well, September was the first month that they were released, I guess.
Right. And
I didn't know that.
They went by SPOO, right? SPU,
right. So being September.
Right.
I didn't know that they were.
Yeah,
the
it makes
month
sense.
They were launched with SEP, and then it made perfect sense after I found that out.
Right.
But after 25 or 30 years of calling them SPOOs, I found that out. So
I wouldn't have been able to come up with that answer on the test either. I was probably out that day too, even though I was probably there for it.
Oh, right? You knew that. You knew that right there.
No, I wouldn't have put 2 and 2 together like him. I don't.
Oh, that it was September.
That it was September. Yeah.
Right.
Yeah, the Yukon.
It always I never bothered to ask in all those years, even though it probably in the back of my mind, I'm like, wonder why they do call them that.
Yeah.
Just S&P.
Right.
But yeah.
Good point.
Good history lesson. Another one.
I learned something else here today. It's great. It's great. Next slide, please.
You guys had a really good one in here.
Options on NASDAQ and M&Q. Go ahead.
No, where did the other one go?
Back one?
Because this is the last one. You had one that I wanted to point out because you looked at it a little bit differently that I'll probably steal.
Go back to slide 6. Go back to slide 6 for a minute.
It's the percent of your loss on a one, or your loss or gain on a 1% move.
Oh, I think this is our takeaways slide at the end. This one?
Maybe go back one more, maybe. I don't see it. You guys had outlined, basically you showed what would happen on a 1% move on the mini and the micro, and then the percent of a $25,000 portfolio.
Yeah.
I thought it was really interesting.
So let's go to slide 8, guys. This is the next one, the margin math. So next one, please.
There you go. You're jumping the gun. There you go. We got you.
Well, I thought the options was last. That's my fault. It's good to point out that we have options. We've talked about that, so we can kind of move on to this one. I just like the way that you guys spelled out like your sort of overall percent gain or loss on a $25,000 portfolio with one contract to each of these. I thought it was an interesting way to look at it because it can get a little confusing because of the margin, right? So you put up, and I think we're a little bit lower on the margin here, but put up, let's say, $3,000 on a $50,000 contract, and maybe you've got $25,000 in your account.
They're looking at probably overnight margin requirements.
Yeah, it could be. Is that what it is? Mm-hmm. But just interesting, like the impact on a hypothetical $25,000 account is 2% on a micro, on a 1% move, 20% on a mini. I like the way that you guys spelled that out in terms of like the impact on your overall portfolio or account.
Well, everybody always looks at, from the rosy point of view, and I've always said this, and I've said it consistently on this show, everybody helps me spend my profits. Like, I never, Christmas time comes, everybody's, they're happy. Nobody wants to take any of the losses. So those are the ones that you really have to, nobody comes to your rescue when you have a loss. So you really have to look at it on I know futures provide a lot of leverage, but you got to understand that, with that leverage comes risk too. And you shouldn't, at least I don't think you should be looking at, losses that are 20% of your account. Get a lot smaller. Yeah. I think you can be, you can even watch Nick scalping so far this morning, and he's had some nice scalps in there. Almost every one of them was a loss after you put it on. At some point in the trade. So
50-50 shot, you should expect.
Yeah. Well, you would think at 50-50 shot, you'd have some that would go your way at least one time.
Just right at the beginning.
I'm just kidding. I'm just making a joke here. But, so you have to be able to absorb that so that you can stay in the game.
Totally. And it spells out that leverage component very nicely. And I guess when you come maybe from a perspective of like stock trading and you buy Nvidia at, 180 and it goes up to 200, you kind of know intuitively what the percent gain on your portfolio is. And here you've got to take that leverage into account. So I think this spells it out really nicely.
Does. Good job. And I think now we're going to get our takeaway slides here. As the E-mini S&Ps are down 16, NASDAQ down 19, but we all know that the E-mini S&P is down 16 is a higher percentage than the NASDAQ. $25,000 product versus a, 7.
A lot more range in this.
It sounds like it's come back.
A lot more range in the
NASDAQ back a lot.
It's moving like 20, 30 handles.
At a sneeze.
Minute. Yeah, it's moving.
It sounds like it's come back since we've been talking.
It was up 40. It was just.
It depends on if you're long or short. That's really what it comes down to.
Well, I'm wrapped around right here. This is like my spot, but they were up 40 to just down 40 in the last while we've been talking the last 30 seconds.
Oh
wow. It's been some good trade.
Yes, been some good trade.
But here's our takeaway. This is a perfect slide if you want to just like print this out, put this on.
Yeah, you should keep it
on your dashboard or your screensaver. So NASDAQ 100, you get the $20 a point on the NASDAQ futures, minis at $2. Got cash settlement. Of course, this is one of the most liquid. If not, is it the most liquid now? It's not going to pass the E-minis, but the micro.
So if you look at it, and it's a good point because I want to make sure that I'm clear because I did mention that NASDAQ is more, we're doing more volume among the retail crowd in NASDAQ now. But if you look at the exchange overall, we're still doing more volume in the S&P futures than we are in NASDAQ. And that makes sense, right? From an institutional perspective, I think there's more money benchmarked to the S&P 500 than any other index in the world. So, you're going to get a little bit of a difference there. Both of them are extremely liquid equity index products, though.
Awesome.
All right, good to go.
Yeah.
Good job out of you, my friend. Good job out of
guys.
CME. Appreciate your support here at Tasty Live and Tasty Trade. Even the S&Ps are down 19, NASDAQ down 20, Russell down 2, Dow down 150. They're all down around 1/8 to 1/4 of a percentage point. Relatively small move in the overall market. Oil down $1.50. That's your big mover on a percentage basis, down 55. Over. Say again?
55. That's been
55 and change, down 1.5 points, about 2.5% on a percentage basis. Gold up about 0.5 percentage point, up 25. Silver unchanged. We're going to take a quick 90-second break, and we're going to come back. We're going to thank you for your time. We got market measure. Really following these messages. It's Tasty Live. Good job, Greg.
Thank you, guys.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade's Money Match event, unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are out, my son. No, we are back, my son. That's what we are. We've got more Tasty Live coming at you right now with the market measure. Even the S&Ps. Let's take a quick look at this market because you have some futures out there. You sold even the S&Ps about 10 handles higher than where they are right now. You took about 30-ish handles or 20-ish handles of heat. NASDAQ you sold at 305. It's trading at 288. We're just calling those last three numbers there in the market. Russell down 8 and the Dow down 218. Volatility really not going anywhere. Sitting at 1868. Bonds are up 8 ticks. Ivy rank -3. Volatility continues to go lower there. You're covering your NASDAQ and your even the S&P.
I still have some on. 68.50. We meet again.
Covered about half of them on both, correct?
Yes.
Oil down $1.50 and change. Ivy rank of 26 is pretty good. Actually, volatility creeping up a little bit. Kind of odd when oil goes lower, that volatility would go higher. I would think is a product of the extended move here.
What do you think we do there? I mean, we have the puts. Do we add a little bit to this one? You want to get real big here?
In oil, I mean, you can go to USO if you want to.
No.
I mean, January puts are in your clubhouse of around $1.40-ish.
What about selling the 51 puts CL?
51 put in /CL? You certainly can, or you can sell a put spread if you're looking to get.
I have the at the money put spread, but this would be.
Oh, okay. Yeah, sure. Yeah, sure. Now remember, since we just did a futures segment here,
$1,000 a point. It's a big contract.
Right. So if you were to sell this at 68 or 69, you'd be selling it at $690, not $69. Right.
Yes.
So it's 10 times the size of a USO or anything else that you would be trading in the equity world, right?
Yes. If we continue,
so you don't add to these types of position. You're already quite large.
Oh, yeah. This is like silver.
This is like silver. This is like high silver.
But here's how I did it.
How do you
put it in?
How do you look at that?
At 70 cents?
Oh, okay.
So I'm gonna let the market come to me.
Okay.
And then I'm hammering it out.
Understood. Okay.
There you go. Not yet, guys. I mean, we hope so. But.
Understood. Good job out of you. I mean, it's been going lower, right? I mean, so you're looking at putting it in at your price.
Yeah. I didn't get filled on that AVGO put.
AVGO, which was catching a bid earlier.
Like $6 or $7.
Now down 43 cents. Yes, you are correct.
What else do we got here? Do we have anything?
Market movers to the upside: Carvana, CRL, MSTR still up $5. Bitcoin hanging in there at 87,200, about $600 off of its daily high. Hood hanging in there, up around $4. Meta up $3.
Yeah, I put in an order to close us out of the 100 strike puts. I have a couple puts.
Somebody call Oracle. It's up $1.90. I mean, that's unusual.
Well, it's the same reason why Bitcoin's up. They've just been murdered for 40%.
Let's see if it was a dead cat bounce here. Costco down $14. That's a decent sized move in Costco on top of. I mean, just the beginning of the month, it was trading at 922. Now it's 840 and change. Ivy rank still relatively low at 15 in Costco.
Sessions like this, this is where I tend to get hurt.
Yeah,
because you want to be, you're like, oh, the munis are moving 30 points today. I mean, I should be taking off. I should have stuff to take off, and nothing's moving because vol's been so low. You haven't had any pop and vol here to put anything new on.
Yep.
All right.
Let's get to our market measure.
Yes. Ooh, E-mini's below 68.50.
Yes, E-mini S&P's about 15 handles off of their overnight session.
Vol getting bid here a little bit.
Vol getting bid a little bit. Up
23
cents, about 20 cents off of its lows, off its highs from last night's session. This is actually the market action I thought we were going to have yesterday. Yesterday, if you remember, on Friday, you got the numbers came out. Usually we can have an opposite reaction to that move higher 24 hours later on Thursday. We didn't get that on Friday. We actually rallied into Monday. We opened higher and then promptly sold off to basically unchanged on the day. I thought gold and silver would actually be a little bit weaker on Monday. They were actually kind of stood bid with the overall market. And now you're finally getting it. So I'm a little bit perplexed. I'm a day late, the dollar short. But you've been firing on all cylinders here. Pretty good job out of you.
What happens? And just to follow up, my guy John, he's following up with the gift tax.
Yes.
So you can the lifetime that you can.
So I can
15 mil.
15 mil, beautiful.
Just so you know.
That's great. I'll keep that.
If you ever get the urge,
I see the twinkle in your eye.
Throw a couple my way, no problem. Yeah,
the twinkle in your eye. We're going to go to a market measure sponsored by our friends at the CBOE. Now, look at that, supporting the exchange, supporting us, which is wonderful. CBOE market measure. Go ahead.
Gauging gold, understanding its market correlation. Let's do it.
Affectionately known as the CBO now.
Yes. So recently, gold prices seem to be moving in the same direction as the market. Does it mean that gold has become positively correlated with the market? Or is it still an investment vehicle to hedge against market risk? What do you think? How do you feel about gold now versus maybe back when you were in the pits? Like, was gold something that you thought of as like your inflation hedge or your risk off asset? Or
yes. Back in the day.
Back in the day. And do you feel that way?
No.
So you think everything's kind of bucketed into just risk?
Yeah, and there's just too many products now and too many inverse products and too many places to go to get a much more one-to-one correlation on directional move that you want, where you don't need these obscure kind of risk. I think it's just price, just like everything else.
Yes, because you're kind of saying that, back then it was really a one-way trade. It was just long because there wasn't all these products, remember like Dust? I think Dust was one of the ETFs where it's 3x short gold. Like you had the market has become so two-sided that there's no risk on, risk off appetite or dynamic anymore. It's just correct. It's just all risk on.
That's correct.
I agree with that. I think that was a good way to phrase it.
Thank you. Appreciate it.
Good job out of you.
I try.
Excellent.
What are we looking at here? to answer that. Oh, they're going to answer it for us. Go ahead.
So we conducted an analysis on the correlation between gold and SPY. So this is the ETFs, examining how it changes over time. We also took a look at other precious metals to see if they tended to hold true for them as well. So we looked at a couple of the other metals, copper, silver, I believe we have in here as well, but we'll get to that shortly. So here's a rolling correlation of SPY, or of gold to SPY. I guess it'd be the same thing, SPY to gold. The correlation between gold and S&P 500 has been more frequently positive post-pandemic. So you've had post-COVID much more positive correlation, meaning they kind of go in the same direction, rather than the traditional thought of this being kind of your risk-off asset, which would be a negative correlation. Their current correlation stands at 0.24, which is generally considered non-correlated, but is definitely inching closer to a positive correlation.
Okay, I mean, in an obscure way, sure.
0.3 is...
I'll give it to you.
0.3 to 0.8 is kind of where you get into a...
We're all friends here. Take it.
The 4-year average is 0.16, which I would call definitely not correlated. That's outside of the realm.
Even uncorrelated.
Uncorrelated.
Yes.
Yes. Not correlated, uncorrelated. The Batista clan is not much of a grammatical clan. We are definitely more math oriented, but Vinny could buck that trend.
He could. He's going to have to buck some trend.
E-mini's down 46.
Yes, about 2 handles off of their lows from last night. Volatility just about 10 cents off of its highs.
I'm out of the E-minis.
Good job out of you, son.
Do I take the net? I'll take
Showed
one.
a lot of
take one more of the
fortitude.
NASDAQ out. All right, so I got one left in the NASDAQ.
And you covered all of your...
But the NASDAQ is only down 0.5%. The E-minis are the weakest today. The E-minis and the Dow actually the weakest. And oil getting killed. Did I get filled on that oil position?
You did not.
One tick off.
Did not get filled on yet.
Next slide, please. So over a 20-year period, the correlation between gold and the S&P 500 is just 0.02. So there is no correlation here on a day-to-day basis. And of course, this is looking at day-to-day and not absolute return, so it doesn't weight into the up and down velocity, right? So this is essentially showing no relationship. However, during 2008, so when we had the global financial crisis, gold's correlation with the market was more negative, while in 2020 it turned more positive. What explains this difference? Do you think it's just kind of the trading aspect? I think that's a good. That's oil.
Ooh, your oil. You got to feel that your price. That means oil's going lower. Oil down $1.68 or 69. Good weight on you. I didn't think you had it in you.
Yeah, it's a little spooky. That makes me feel like we're going to get killed on that.
For sure. There's no doubt in my mind you're not going to get a dime on this trade.
I was like 3 ticks past the, it was trading at 67.
It was offered at 69. Yeah.
Yeah, it was offered at 69.
Yeah. Yeah. It was 2 tick wide, which
means
the real
my
price
fill, it's probably offered now at like 72.
Yeah. Just about. It is offered 71, 69, 71. Right. So you're still good right there.
All right, so we're there.
Oil down 3%. I mean,
huge move. 55 has been kind of the low. There has been the low.
Yeah, you're
going back to April. This is kind of where we were.
You're having about a 10 to 14 day move. The expected move for the next 30 days is around 3 3/4, and we're down around a little over 1.5. So you've got about a 10 to 12, 14 day move today in oil with the implied volatility. So I like what you're doing. Volatility is upticking a little bit there at 26 IV rank 2 on the way down, which in most commodities, the velocity to the move is perceived to the way up, and volatility would expand on the way up. But you've just had so many moves lower over time, over the last 2 weeks here, that now you're getting volatility fraught through the downside. So it does the timing of it is good, meaning selling premium as volatility is expanding. Now you just have to get the direction right, and that's the hardest thing. It's easy to see when volatility is expanding because you just look at IV rank. Go ahead. Oops, 70-cent bid. You're screwed.
Oh, God. We'll get to the next slide here. So when the market rises, gold's correlation with stocks tend to increase as investors shift capital into risk assets. This goes to exactly what you were kind of talking about. Often buying both equities and gold in a response to inflation or growth expectations or just overall bullishness. I mean, you can put whatever reason on top of this. When markets are going up and going up in a relatively big way, it's kind of everything. It's the correlation goes to one sort of aspect where if everybody's everybody's buying everything.
Yep.
Everybody's selling everything on the way down too. So when markets fall, gold's correlation decreases or stays near zero because investors seek it out as a safe haven. You really see the kind of deviation on downside moves versus upside moves. That's the kind of point that they're trying to make here, is that when you're having these big downside moves, that's when gold tends to be slightly stronger than the velocity and the volatility that you're seeing in equities. When you're having the upside moves, it's not like gold doesn't participate with that. It moves with it too to the upside. So I would call it almost a less volatile speculative asset.
Yes.
Than gold.
Yes.
Except if you've been trading it in the last 3 months.
And then it's the most volatile product you've ever seen in your entire life.
It's a meme stock.
Yep, and it's a meme stock. Yes, yes.
So the next slide here. So it makes sense now why gold's correlation with the S&P 500 has become more positive since 2020, as the market has experienced a strong bullish trend over the past 5 years. You look at a chart, it's been straight up and to the right in basically any asset that you've looked at. And that's just been risk assets and risk on in general. So this shows that gold is not an ideal hedge during market upturns. So gold, being short gold is not kind of the play in an up market. However, during drawdowns, its correlation decreases or stays near zero as investors seek a safe haven. So in times of big market drawdowns, it might be less volatile in those periods of time. Of course, if you can kind of time that entry there. I think the point here is that it's a little bit more of a diversification tool when those periods of time happen, which is hard to plan for. But we're also going to take a look at silver. We're going to look at platinum, which you can trade the futures of as well, and copper, and see if there's that same sort of correlation there. You've got a couple semi-precious metals, silver and platinum, and then you've got copper, which is not a precious metal. It's a metal. It's just not precious.
One man's junk is another man's treasure. You know what I mean? So
who knows if these start moving the way they've been moving, we might have copper be the next precious metal.
Sure. And copper, I remember years back, really caught itself a bit. I forgot why. Maybe it was the infrastructure needs or something, but copper went crazy for a while, and the markets were a little bit wide. So be careful in there. They're not as tight as gold and silver.
So looking at the correlations here, this is all of them together. So you've got an SPX, you have gold, silver, platinum, and copper in there. Silver and platinum follow a similar pattern to gold because they are considered precious metals. The only outlier here is copper, as it's not a precious metal. The market correlations have been positive due to the bullish move. And so, again, we've had an up market, and so everything has gone up in that market. What happens?
Yep.
So going out to a 10-year period, and get on to the next slide here, the correlations all come down and become closer to zero. So when you look at a longer time frame, there's a lot less of a correlation between metals and the market as a whole, showing that precious metals are a great diversification play here across the board. When you look at it over long periods of time, on short time horizons, not much of a correlation. Takeaways, couple takeaways.
Which I was right.
You were absolutely correct. And I think you had a
first time today. You've had a lot of wins, so you can give me one.
Gold's correlation with the market is low long-term, but rises during bullish periods. I think even if we looked at like bearish periods, that small blip of time, I think the correlation is probably high there too. I just think it's less volatile. Gold hedges effectively during market drawdowns when correlations become negative. However, during regular market periods, gold is more of a diversification strategy than a hedging strategy. Other precious metals also provide diversification as correlations with equities are closer to zero over longer periods of time. So all the metals, I'm sure all the commodities kind of have that same sort of aspect to them. So it is something that you should definitely consider trading. You should have it as a tool in your toolbox.
Good job out of you. Good job out of the team. Even the S&P is down 30. NASDAQ down 75. Russell down 6. Volatility up by 12 cents. Bonds are up 10 ticks. Bitcoin hanging in there, up 1,500. Actually catch a small bid trading near its highs of the session, even the overnight session. Oil down $1.67, right where you sold your puts. Gold up $25. Catch a little bit of a bid, about $7 off of its highs. About $65 off of its lows. Silver is down small, about 5 cents or so, which is basically just a few ticks. Nat gas down 14 cents. That's a big move. That's a 3.5% move to the downside. We're going to take a quick 90-second break. We're going to come back. We've got the trade desk coming in. We'll be back in 90 seconds. It's Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means? Well, time for a little bit of this. Tasty Trade World Headquarters, your friend of mine, Mr. Q. How are you, sir?
Fellas, how's it going? How's it going?
Doing well. Spent time with my son. He's putting on a scalping clinic. He's also getting a little directional in products. You've been amazing today.
Somebody paid.
No gift tax for you. You don't need it. You're doing so good.
You know about the gift tax?
Hey, that's a good job, Addy. That's a little out of my tax bracket.
Yeah.
The gift tax.
Yeah.
He's thinking more for your dad to give you or something.
Yeah,
your mom to give you. That's what he's doing. He's spending other people's money.
Mm-hmm. Classic.
Yes, classic.
Easy to do. Easy to do.
If you don't start paying those dividends, it might be harder for you to justify keeping you around. So, yeah.
Good point. Q, let's justify keeping you around. What are you doing here?
Okay, so we've got some really good stuff today. Another Tuesday, another demo.
Terrific Tuesday demo.
Yes, of course, terrific Tuesday demo. We've got the Cap Rec Risk Analysis tab. So this is one of our most asked about features, along with the Analysis tab, which is now up on the YouTube channel, tastytrade.com/YouTube, and then, youtube.com/tastytrade. Said it backwards.
Yes.
But if you're looking to sign up for the demo, we've got tastytrade.com/webinars. If you're a little simpler like Nikki, tastytrade.com/demo. And also, if you want to add the S, we've got tastytrade.com/demos with the S.
They all go to the same place.
They all go to the same place. So if you want to sign up, you can.
This demo, I think, will be particularly beneficial for those big dog accounts, too, that have like portfolio margin. And you want to know and figure out where they're getting all the margin from and the cross margin that you get from one product to the other. This capital analysis, which is, right, that's what a analysis means, is paramount to your positions, I believe.
Yeah, and so we have a lot of customers that when they're trading with this, because this opens like a new window if you're on the downloadable desktop, and then they put it on one monitor so they see all their risk, and then they're trading on their computer. So this is a super valuable tool to know how to use. And then if you are in a portfolio margin account, this will show you where the requirements are coming from. And this is the exact tool that the risk team uses as well. So if you want to know.
That's right. If you're getting a phone call.
Yeah, right.
They've looked at this and say, hey,
we give you the tools.
What are you doing here?
Yeah, we give you the tools because a responsible customer is a good customer.
Yeah.
So we give you the tools that we're using as well to look at all of the risk that's in the account.
It's cool because you can like change the parameters too. So I get that question all the time. Like, okay, so you're short puts, and what happens if all goes up 5 points or whatever? You can see how that affects your portfolio dynamically, and you can change the spot price. You can change time, like all those things. It's a really cool feature. You can play into the metrics of what happened in April. What would my account look like if we had that sort of down move?
Definitely.
A lot of people are kind of worried about that. So this is a really good feature if you haven't experimented with this or use this, or you have questions on it, because they can ask questions a lot.
Yeah, live demo, live Q&A, all that stuff. And then it's a big risk array, so it can be a very intimidating tool to try and look at. But that's exactly what we're doing the demo for, is to demystify the risk analysis and just make it a little, because once you understand how to use it, it's a simple tool that you just manipulate different variables, but there's so much that you're looking at when you're using it. So really good demo to attend, and then if you can't attend, still sign up for it, and we'll send you the recording.
Wow, that's new.
Yeah. That's something new that we're doing.
So even if you don't listen to it, you'll get sent brilliant. Who came up with that? I think you did. Take the win.
Take the win.
Just like my son just did on the NASDAQ futures that he covered here. I think that's your last one, correct?
That was my last one. I feel sad. But if we get a little bit of I don't know. It depends. Vol really isn't moving. So
hasn't moved at all. Up 18 cents.
So I don't know if we're gonna hold this.
Okay. So volatility would be telling you that the move is kind of met its match, right? It hasn't really expanded. Your personal opinion has been a lot. You've been trading from the short side on rallies, which has worked. We've been going back. Chop fest is what we said, right? So you got to pick a side, whether you buy them first or sell them first.
Gotcha.
You're gonna have a chop fest, right? Usually stay on one side. If somebody wants to get ahead of this demo, which I think is gonna be a great demo, all you have to do is go to your positions tab on the right-hand side, all the way in that corner there, under accounts, it says CAP, REG, CAP.
REQ, CAP.
REQ. I'm sorry. Click on that, and you'll see exactly what they're talking about. In my own personal opinions, like I have shorter dated options with less contracts, and I have longer dated options with more contracts. On a percentage basis, I use a lot more capital in those shorter dated option trades than I do in the longer dated option. You can see that in your cap requirement. And if you were looking to take off some of that capital requirement, maybe you take off some of the shorter dated options, you free up a lot more capital a lot easier if your units become a problem. But I know you'll be talking a lot about that when you go.
And so like when you do it, it shows you like what's holding the most buying power out of all those options. And then you can just go back to the positions and close it out. And then you'll see all that buying power relief in the account right away.
Awesome.
And
absolutely.
Absolutely. Yeah, this will be a really good one. And then again, if you can't attend it, you can still sign up for the demo and you'll get the recording of it.
Awesome. Good job.
All right.
Well, let's get to your list and then we can get to
the
my
list,
friend
fellas.
Glenn.
All right, top 20 symbols going through the system and their IVR at number 1, which is like Tesla's like the king. They're number 1 like every day. Good for them. Tesla 10%, TQQQ 27, Nvidia 6, Broadcom 15, IBIT 50, GLD 42, Palantir 4, Robinhood 17, AMD 20, Oracle 48, SoFi 14, MSTR 44, Meta 3, Amazon 10, Google 10, SLV 77, Apple 2, Netflix 25, Costco 14, and Coreweave 20.
Oh yeah, we forgot to look at Coreweave.
Yeah, we did CRWV.
That stock has just gotten killed.
It has gotten killed.
I mean, it IPO'd around like, was that 40 and it went up to like 60-ish?
Yeah, gravity's taken effect on that.
Yeah. What do you think about selling the 60 strike puts?
Stock's down 2 and change, almost down 4%. Got earnings coming after January expiration. If you're looking at January, sure, I like it. You're looking around the 20-ish delta option, 24, 25-ish delta option.
Yeah, I got it in at 295.
I like you putting it. I like you putting.
But the markets are kind of junky.
They are kind of junky, but the stock is a little bit weak, and you're putting in on the offer. Let them reach for it. I completely agree with you. Good job out of you, and good job out of you, my friend. And I'm going to sign up for this because I can use a brush up on.
Hey, sign up, and if you're busy, I'll send you the recording.
You're a good man. Who is our next? Well, I guess trade desk person.
Oh,
hello.
You again.
Oh, there's my Coreweave.
Oh, look at you getting filled at your price. Beautiful. Absolutely love it. I mean, the only thing you can control is entry.
Yeah.
So good job. Sorry to interrupt you.
That's all right.
I know your
Great job,
mom's
Nick.
watching. Please go ahead.
Thank you.
What's up, brother man? How you been?
Very good.
How was your weekend?
Weekend was very calm. A lot of inside time.
But it was cold.
I have a nice fireplace, so me and my 4 roommates all cuddled up in front of the fireplace.
It's a forced sleepover because they all live there.
Exactly.
So they have sleepovers every day.
Yeah, sometimes we just bring our mattresses all in one room and.
I don't want to hear about it. I really don't want to. I don't want to ruin this vision I have of you. I've got you as like a still water runs real deep, cold, calculated, man of the night, and now I've got you with frigging mattresses with your 3 other male roommates by the fire. I didn't know you were doubling your chances of a date on the weekend, but whatever.
Well, that maybe that adds to the Stillwater thing.
Good.
I'm a chameleon.
That's right. They want to fix you. Speaking of fixing you, what do you have today in the futures for us in
FX, not futures?
Exciting, really exciting week here as we wrap up, 2025.
Is there like a come down?
My son's long dollar, and your
long dollar and Japanese yen. I am
the yen.
Let me guess.
That's your problem. I don't mind being on the dollar.
Not good. Not good.
Not good right now.
Right.
Yeah, there you go.
Not good yet.
But because I stay so small, I can take those.
Take the pain.
I'm not, slinging them.
Paul on the desk isn't calling you up. Hey, Nick, man.
Yeah, no margin calls yet. I'm waiting for that day.
Gotta call you. All right.
I get Clink on the phone, and he's liquidating me, and
don't answer.
Yeah, you just don't answer. It's okay.
Yeah, we've got a super exciting week on the macroeconomic front. We had our Fed event last week, but a lot of U.S. data, including non-farm payrolls this morning, a bit of a mixed bag, and dollar reacted as such. Had some initial dollar selling, a slight dollar comeback, and now it looks like the move, as it's priced in 2 hours out, is slightly dollar softer. We saw, more jobs added in November than expected, but that unemployment rate, that pesky unemployment rate, ticking up to its highest since 2020, I believe. So that not necessarily playing directly into rate cut odds, as maybe a little bit too early.
Bond's not really moving at all.
Yeah, because that next event is end of January, so I think market expectations is we'll get a fresher number before that happens. But dollar not doing so hot this month, a skid in December so far. It would take a huge move for the dollar to end up unch or green on the month. Definitely not green on the year in many of these major pairs, but a lot of event risk on the table for the rest of the week. We've got a back-to-back, actually a triple header on Thursday of central bank meetings. We've got the Bank of England, European Central Bank, and at night, the Bank of Japan, highly anticipated. So the move we've seen...
Is that on Thursday?
Yep.
That's on Thursday going into,
Exactly. So the move we've seen so far, outperformer of the week, has been the Japanese yen, actually. So still muted moves, but that yen's down about 1% this week so far, down below 155. And that one's setting up, a pretty nice range. It's testing its recent lows dating back to mid-November. So we'll see if it holds here. Then if you want to get long U.S. dollar and trade the recent range, that's interesting to me. Another pair I'm looking at, if you want to get long U.S. dollar, this dollar Canadian dollar really getting beat up.
I feel
trading.
that one. Feel that one.
I feel that one. You feel that one? You feel that one?
That one
is in the room with me right now.
That is in the room with me right now.
That one is in the room with me right now.
Oh man, wait. Can you go back to that? I didn't even see a wick on your fill.
Yeah.
Is that a special order?
That one's in the room with me right now.
Yeah. I've added to it. It's a tough one.
Yeah, sorry. So that one trading at August lows.
I'm going to steal that line. That was very good, by the way. That was very good.
You like that?
Yep,
well, that's what the kids say.
Do they? Yeah. That was very good. That was very, very good.
So that's one of those pairs that's at a nice inflection point. If this range from August on is to hold, then maybe we get a fill, which would be a lot of pips over the recent range. But also, if we break through this, we get back in those summer months where we saw 136. So those two, I think the tape action at least makes it interesting for a possible long dollar position. Euro dollar touching 118 in the spot market for the first time since September. That got sold off immediately. It's tried it a couple times. So you can tell the narrative, this morning, pretty good for scalpers across the board, especially in that euro dollar. Not any extreme price swings, but a lot of back and forth in these early U.S. market hours. I crunched some numbers on, using standard deviation, realized volatility on what we can expect for the rest of the week. And we've got some interesting price points in play for the next 4 days. We're looking at in the Eurodollar market getting up maybe as high as 118.25 for the British pound. The high there, based on these numbers, would get us to 135, which would be a new high dating back a couple of months. Other than that, if we're looking at further yen strength, we could get as low as 153.5, but also a bounce back to 155.5. That the most expanded range on my board. And looking at if we get a U.S. dollar comeback in the week, looking at the Swiss franc, it gets us right about to that 0.8 level that we saw.
I would like that
throughout November. So
those are. I closed out one of my hood puts.
Ooh, good job out of you. Bitcoin catch a little bit of a bid here, up $2,000, 2,000 to 88.
Ooh.
But the main play, maybe Nick, you're on pace for maybe a Powerball ticket today. You're feeling pretty good.
Love it. What do we got?
A lot of good calls.
Are you giving me a Powerball ticket trade? Or are you just saying I should get is the Powerball at like a high number right now?
I think it's pretty high. It's higher than anything I've got. I think
Was the drawing yesterday or today?
There was one yesterday.
Oh,
it's my understanding that it went higher.
Okay.
To the tune of 1.2 something billion.
You know, our very own Nick Catone won money on the lottery.
No way.
Yeah.
Not like a huge one. Like he
smaller one, but still a win. Yeah.
With like a group of his friends or something.
Yep.
Yeah. I think didn't Scott Sheridan win one too?
It was in a partnership with one. It was a smaller one, like $100,000 one or something
Yeah.
like that. Yes.
Money goes to money. It is.
Wow. Okay. Are you done, Glenn?
I added
can
to
be.
the Swiss franc and
There you go.
the Canadian dollar. I know where you sit.
I know that. Yes. So loading the boat on dollar.
NASDAQ unched.
NASDAQ unched on the day. Even the S&P is down 18. Volatility now down 8.
I
Volatility
don't think you
wins.
sell them here. I think that was it.
What's that?
I don't think you sell them here.
No, not with volatility contracting the way it is.
No vol and Bitcoin going. Yeah.
Mm-hmm.
Yeah.
Volatility wins again. My
Missed the
son.
buy. We missed
Yes.
the buy though.
Yes.
Stay right here.
That's all right.
Good job out of you.
Yes.
Good job out of you. We're going to take a quick 90-second break. We're going to get Liz and Jenny to come in. Sound good to you?
Sounds great.
Sounds good to you?
Great.
Sounds good to me. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event, unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Welcome to the special edition of the Liz and Jenny Show.
Today, why is it special, Jenny? Because today we are standing in a different location. We are in front of the Mag 10 pit. As you can see, these handsome devils back here, these used to be the rut trade, and they're loud.
It's funny you called it the Mag 10 pit because it is the Russell pit. That's the big dog here. The Russell, they just started trading the Mag 10. It is a new SIBO product. Everyone's excited about it. And Liz, she's elevated it above the Russell. Now it's the Mag 10 pit.
I just changed it to the Mag 10 pit. But we are just here for a teaser because tomorrow we have Rob Hawking from the SIBO who's going to break it down and give us a little bit more details on this product.
Yes, he'll be joining us to tell everyone all about the Mag 10. But it's awesome. What are your two favorite words?
Oh, cash settled.
Cash settled.
I wanted to make sure I didn't say secured because I do not like cash secured. I like cash settled. My two favorite words in the English language are cash settled, and this product is one of those, very similar to the SPX.
Yeah, so every retail trader loves cash settled products. They make it very easy to trade, and the Mag 10 is cash settled. Now the Mag 10 is the Mag 7 plus Broadcom, Palantir, and AMD.
So my little Palantir made it into this, and I like it because those are the stocks that everybody knows, people have been trading, and I'm glad that they are kind of bringing this product into the forefront. So,
and I'm glad they brought it to this pit. The guys back here are we've got some veterans back here.
Oh, we've got 44,
Kevin,
45.
Chip, yeah, they've been here for over 45 years, so it's nice. We've got some guys we know that we used to trade with 30 years ago.
True story. All right, so we've got there has been some action back there today, but we got to let these guys get back to work, and we have to go back to our regularly scheduled programming. Tomorrow, once again, we will have Rob Hawking on.
Yes. Stay tuned. We'll be right back. We're heading over to the SPX pit. We'll be back with the Liz and Jenny Show.
We'll be back in 90 seconds. Maybe more than 90. everybody, and welcome to the second intro of the day for the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews, and we're back home in the SPX pit. Short trip, short commute over here from the other side of the floor.
Hey, you know what? It was fun. We didn't know. No one knew where the Mag 10 was going to land. Everyone wanted it. I'm glad the Russell guys got it. They're a nice group of guys.
They're a great group of guys. And it was funny that you brought up some names because we have been trading with those guys forever.
Yes.
We've been trading with these guys forever, too, but it's nice to kind of venture out and see the other faces.
Honestly, some of those older guys in the Mag 10 pit, they do have almost, I would say, I know more of the people in the Mag 10 pit percentage-wise than here, because here we've got a lot of younger, newer people that came later.
I don't know. I was on the floor for a lot longer, though.
I know, right. I left in 2004, so 2004, since 2004, we've gotten a lot of younger guys in the SPX pit.
I stayed till 2011, 2010, 2011. So yeah, we did get quite a few. I still know all the old faces. So but nonetheless, it's great. It's wonderful. I love it. And fun fact, when we were in Germany with Matthew, who's running around here too, that was when it was announced.
The Mag 10.
The Mag 10 was announced on our show while I had a beer in my hand. It brings me back.
It brings you back to Germany. It brings you back to the old beer house. No, it's cool. It's very cool. Mag 10, cash settled, another product to trade. And I hope we know when a product is brand new, it takes a little while to get active, very active, where we'll get the options and it's going to have tight markets. And it just takes a little bit of time.
Yeah.
So
but
yeah,
it's an
but it's exciting to have a new product coming.
Absolutely. Okay, so today is Tuesday, and so we have quite a bit of things to do because we have Kai's research piece. We are taking live tweets with the hashtag LIZJNY. I'm trying to think what else.
SPOOs are down 27.
Yeah, SPOOs have been...
the number came out,
and it didn't really move.
No, they were down. They were down as much as 30, then bounced back up to almost unchanged.
Almost unched.
And they've been teetering between down 30 and unchanged all morning, really.
Yeah.
So VIX is. I don't know if you want to pop into the platform.
Sure, I'd love to.
There we go. So VIX is 1665. It was over 17 earlier. So people seem to think that the market's settling down a little bit.
Yeah, it was over 17. It was over 17 when we were on the train, right?
It was over 17 when we were on the train.
Yeah.
Mm-hmm.
Yeah.
Mm-hmm. So
we were talking in the bathroom to the only female trader on the trading floor, and she believes it's going to rally. I mean, I'm not going to out her, but she's the last one. She's the last of the Mohicans of the women down here.
Liz asked her, "What do you think?" And we didn't even ask her about the Santa Claus rally. She brought it up.
She brought it up,
and she does think we're going to rally. She talked about some big rolls that are happening, some big rolls from D's to March. She's called them put collars. Or she called them put spread collars.
Put spread collars, yeah.
Yeah, she called them put spread collars.
Yeah. And that happens usually around. I mean, it makes sense. They're quarterly rolls.
And again, is it kind of like, buying a put spread and selling a call to pay for it instead of buying that put and selling a call to pay for it? You get your call much further.
Probably. Yeah.
I'm guessing sometimes the traders on the trading floor have different terminology than the retail traders as far as trades go.
And then the other thing that's on our agenda today, because we received an email from Tom yesterday asking about a spiked lizard. So we're going to set that up for one Tom Sosnoff.
The spiked lizard, I can't wait. I can't wait to take a walk down memory lane and go over the spiked lizard.
Oh, you want to take a walk down memory lane? No, yeah, stay right there. No, go back into it.
Go back.
This is going to be a walk down memory lane for you, Jenny, that I don't know that you're going to want to see. But here's what I did for you. Here is setting up a spiked lizard. This is 2019. We're in my basement. That was our basement setup.
That was.
And then look at how serious we were. And then here's another one. So if somebody
really
wants
funny.
a spiked lizard, you can go to the Liz and Jenny strategy series, which is easy to find, and the spiked lizard is right here too. So I pulled up both of these for a walk down memory lane.
Go back to the old. Are you back on it?
Oh, I can do this one.
That is so funny.
Uh-huh.
That background, I felt like we were in an aquarium. It looked like we were in an aquarium.
Fun fact, that is now my workout room, and so my tonal is up against that wall.
Your tonal's against that wall?
Yes.
They mounted it to that wall?
Yeah, you can mount it to anything.
But that wall was wavy.
You can mount it to anything. Mounted.
Against the wavy wall.
I think of you every time I work out, Jenny.
Oh, that's funny.
Yes. So we are going to set up a spike lizard right now, live on air. But I'm also going to show.
How far we've come since that old studio. That studio, so that literally was in Liz's basement and in the same room with all the plumbing. So if someone flushed the toilet, you heard it.
You heard it. And my favorite was when my irrigation guy, my husband calls him my boyfriend because he's like,
when he would come over, he would be like, what exactly happens in this room? Because there were lights and cameras everywhere. I was like, don't worry about it. I'm the talent. He's like, what the heck is happening?
And we would tell everyone, or it felt like we put a sign and would tell everyone, like, nobody can flush the toilet between 10 and 11.
Oh, we did.
Yeah.
Yeah, you couldn't run water between 10 and 11.
Yeah.
Like, I couldn't have people using my garden hose outside between 10 and 11.
Nothing. Because all the pipes ran through that room.
Yes. So, nonetheless, oh, wait, hold on. I'm going to do this again. So, let's go. You can go straight here. I'm going to go shows. Watch this. Shows. And then you go all the way over here to the Liz and Jenny strategy series. I'm just showing how to get it. And then you can look at the spiked lizard option strategy right here.
I'm going to say...
We're going to put this to bed right now and set one up, though, okay?
I'm going to say, this is the only place, those two pictures of us, this is the only place in the world you're going to see me tanner than Liz. Yeah.
You are tan.
I know. I think when we did that photo shoot with Ryan, I just came back from a vacation.
Team, I'm going to need some bronzer on that photo. Kidding. Okay.
Never before seen me tanner than Liz.
Never before seen footage. Okay, so let's do that right now. Let's jump into the platform. Jenny Andrews, sorry, there's my thing. And we're going to set up a spike lizard. And we're going to set up a spike lizard with a fat tail as well. Okay. I'm going to go to IWM since we were just in the Russell pit.
Sure, and I will say, just to like put you in a good mood, not that you're already in a good mood, Bitcoin it's over 87,000 now.
Oh.
It's moving in the right direction. It's moving in the right direction.
I want it over 120. Can I get that for Christmas?
It's possible. I could see it over 100 by the end of the year.
The volatilities are saying that it is priced to move, so there's a possibility there. Okay.
So anyway.
IWM Spike Lizard, Jenny, I'm going to let you guide me.
Okay, Spike Lizard, great, so fun. Let's go to 45 days.
Okay.
You want to go to, just go to a weekly. Now, spiked lizard, we would start with a big lizard, and to figure out the strikes, I like to start with an actual big lizard where you sell the straddle. So we're going to sell it at the money straddle.
I'm keeping the numbers. I went to the 250 instead of the 249.
You would buy a call so that your credit is pretty much equal to the width of that call spread.
Look at this. Look at the even numbers. You're selling the 250 straddle. You're buying the 260 call. That's a big lizard.
This is a big lizard. Go to the analysis page so people can see. So basically, it's like a butterfly without that extra put. You have this wide, it's a ratio spread, I guess. This is a ratio spread, but we're using one call, one put here. We've got a call spread, and we're collecting greater than the call spread. So if the stack goes up, we'll never lose. If it stays right here or stays in this $20 range, we can make money, and our risk is to the downside. Now, the spike lizard takes in the profit potential of a big lizard, but moves your risk to closer to the break-even of a jade lizard.
Okay, so in order to set up a spike lizard, we wanted to set up the principles of the big lizard. This is Big Lizard 101, that's also in there. Now we're gonna go, this is where things get fun. And I like fun instead of complicated. In order to do it as one single click, we need to use all puts. Now, tastytrade knows their synthetics, right?
Right.
So
first we're gonna turn this into a butterfly. So you could turn this into an ironfly or a butterfly. That's what we have to figure out. So if we've got the 250, 260, we'll be buying a 240 put.
Correct. So I'm going to get rid of this and put it over here.
So we're going to turn it into the 240, 250, 260 butterfly. Now that sounds confusing. We went from this 250 straddle, 260 long call, and now we're putting on the 240, 250, 260 butterfly.
Because that's not it. That's not where you end.
Yeah. And we start with that big lizard looking at the calls just to figure out strikes, to figure out what strikes we'd use in the whatever strikes we'd use in the big lizard, that's what we keep in the spike lizard.
So so keep an eye on this. So we went from the 250, 260, we shifted them over. I just have the ratio spread portion. Then in order to create the spike lizard, which is why it might seem confusing, what we did is go to the break even of where this is and sell another ratio spread. Buy one, sell two to finance it. So essentially we'd have the butterfly on for free minus cost that's going to put
I know this all sounds tricky, and if someone new is watching, they're lost. I know, because I'm almost lost.
What's Tom?
But here, cancel this bottom leg, and just let's first again talk about how, you make that symmetrical butterfly. You make this symmetrical butterfly, and we're paying for it, and we don't like to pay for it. So instead of paying for that butterfly, That's why we sell 2 puts to pay for it. So you make this symmetrical butterfly, and then you just have to find 2 puts that'll cover the cost of that butterfly.
It's funny because we didn't realize it was a symmetrical butterfly. I kind of look at it like 2 ratio spreads. I like looking at it break even to break even.
And that's how we
and it is. I like looking at it, be like, where does it stop? I'm going to buy that one and sell 2. So I like doing 2 ratio spreads. Some people like a butterfly finance with 2 puts.
Right.
But either way, it's the same trade.
And sometimes I like the butterfly financed with a strangle.
Yep.
There's many ways. There's other ways.
But this is just for Tom, who asked about a spike lizard.
Okay. All right. So here we have the $10 white butterfly. Sell 2 puts to pay for it, or like Liz likes to look at it, 1 ratio spread, and then add on a second ratio spread.
So if I have a ratio spread, I go to where my break even is. It's 240. I'm buying one. I look at the price that I pay for this. So now I've got 255 here that I need to cover with 2 puts. Now if I take 255, divide it in half, I'm looking for like 120, 130 each. That brings me down to the 227, and I'm going to sell 2.
So when you sell 2 of those, now you're not paying anything. You're taking in a small credit. You've got a 9-cent credit. Now you still have that $1,000 profit potential. So it's the same profit potential of the initial big lizard, but instead of having your break even at, where's that strike, 240, instead of having your break even at 240, this shifts your break even down to 227. So you have the same profit potential, but you've shifted your risk. For every gimme, there's a gotcha, in the words of Dr. Jim.
Your buying power effect. You at 227, you would belong 200 shares of IWM. It's a capital intensive trade, but once again, this was for somebody who.
Yeah.
We've met lots of people on the road who really like the spike lizard because this is for 45 days. Your break even is 227. You know what happens. In a margin account, it holds up $5,600 with a $10,000 profit potential.
I like it. Like, honestly.
It's too big for this account.
It's $5,600 is too big for this account, but I do like it. And so I had mentioned sometimes I don't mind selling a strangle because a strangle will cut the buying power down in half. If you sell both sides instead of 2 puts, then you cut the buying power down in half. But you're basically trying to get that P&L of the big lizard and shift your break-evens.
Okay, we wanted to put that to bed, so then we'll clip this and send it to him so he can see it. So there's 3 ways you can look at how we set them up. And they were asking which is the proper way. There is no proper way. This is a choose your own adventure. What we're trying to do is play with options to have a very high peak where we're not paying for the butterfly.
And I know this is tricky, but I think the best way to learn this would be watch that video we made, which is in the strategy series.
Yep.
The video in the strategy series goes much slower through this, walks you through step by step.
Well, the question was the 2 videos, put them on 2 different ways. That's what I'm saying. Yes, that's what I'm saying. These are a choose your own adventure. Just know what you're doing when you put them on.
Know what you're doing. Know what you're doing.
Yes.
Whether you want to look at it as 2 ratio spreads or a butterfly, and you're selling 2 puts to finance the butterfly.
They're all the same thing.
Yeah.
Okay, good. And I know our viewers are very smart, so that was good.
Down 40.
I know.
Yes, boost down 40. But at least we've got crypto up. And what else? Look, palladium. Good thing I didn't sell it yesterday. It's up every day. So let's take a look at that palladium
I wouldn't
chart.
let her close it, ladies and gentlemen. We're up again. Palladium. Can't stop, won't stop.
Take a look at the chart. Oh, maybe it's not. Yeah.
Oh, it's up.
Yeah, look at that.
Let's take a look at our silver and gold pair, too.
So didn't we... Gold's up $16. Silver's probably down. Yeah, down 32. We added, so it's tricky now.
Well, you can just look at the stock to stock.
Yeah, because we added on just an iron condor in silver.
Our iron condor is making when I say a little bit of money,
yes,
I mean a wee bit of money. I do not want that to be disillusioned.
Oil's down again, which is kind of crazy. CL's down to 55.15.
Wow.
Right.
And we have the 54 put. That's fine.
Now, we haven't looked at natural gas. We have no natural gas position because our upside broken butterfly came off for a profit. We haven't looked at it. Down to 3. Take a look at the chart. We've got natural gas that...
Whoa!
Yes, right? Exciting stuff, folks. Exciting stuff. Exciting stuff.
That's amazing. I'm jumping in right now.
I know. I knew you'd be excited about that. I knew that would make her day.
I don't want to go 10 days.
We've got to go 42 days.
You got to go 42 days.
And that's even lower, 360. We've got the 42-day natural gas. Is it because this heat wave's coming? Do you know, Liz, that it's going to be 45 degrees here in Chicago on Thursday?
What?
Yes.
Like 2 days from now?
Yes. 2 days from now, 45 degrees.
Oh, in Chicago, when it's been a cold snap like this,
Everyone's
negative
gonna be
12, people will be in shorts.
Everyone's going to be in shorts, right? Right, Jack? Are you going to be in shorts on Thursday when it's 45 degrees?
Yep. Yep.
My son's going to go golfing. Everyone cannot wait. We cannot wait for the 45 degrees after the negative weather we've had here.
I get it. Okay, Jenny, while you were talking to Jack, our producer here, I threw on a broken wing butterfly, a baby broken wing butterfly. We can make it bigger, but I kind of like a dip a toe in the water. I went to the 305-300. I put my short strike at the expected move for the 42-day cycle, and I broke it by 1.
Okay, and I'm fine with this. You can send it, but here's what I'm going to look at. Max profit's 580. This is a $500 wide spread. We're only taking 80 over. So if it pops up and the most we can make there is 80, which doesn't allow us to turn that broken wing butterfly into a butterfly. We have to take in more of a credit and take more risk if we want to get the opportunity to turn that broken wing butterfly into a butterfly.
So then here,
So we have taken more.
So I kept it at the 305-300 level.
Yes.
And I moved it, I just broke it by 1 more.
Yeah.
So I moved it from the 2.9 to the 2.85.
Yeah.
So now our max loss is 840. We're taking in $160,
We
which
need
gives
that.
us.
Yeah.
I agree. But it was a good starting point. I want to see what the first broken.
Sure.
Because with 42 days, sometimes you can make them narrower.
With 42 days, but we need to take in. So in the last one you saw, we were taking in $80 over that 500, or max profit $80 over that 500. Here we've got max profit $660, so it's $160 over that $500 wide spread. So I know $160 credit is if it goes up what we have to work with. If we want to try to turn this broken wing butterfly into a butterfly, it's possible if natural gas has a big rally. I just can't believe the drop it's had. If you go back to the chart, it's kind of exciting to look at. It's had such a drop.
Hey, keep in mind, I just like to state for the record, I love natural gas, and I trade it all the time. Warning, is it warning or danger? Danger, Will Robinson.
It's a big
dog.
That's why we're
It is a big dog, and it is a wild animal.
And that's why we're defining our risk.
Okay, so I'm going to press play on this, but take a look at the press play. I'm going to press send on this, but here, anywhere to the upside, this is where it's trading right now. Anywhere all the way to the downside to right here, we make $160.
Yeah.
Right here, this is our sweet spot. You'd make like 500, but our goal is to butterfly this off.
Our goal is to use part of that $160 credit to butterfly this off. And we could put in an order. So if we've got 160 over, we can put in an order to pay like 0.08.
When I get filled on that, we'll put the order in because we're letting it go real quick. Okay, that's filled. We did get filled.
Well, it's not filled. It's just working.
No, I said when we get filled, I'll put it in.
Yeah.
We didn't get filled on anything yet today.
No, we are not. I am working on pushing out trades.
And
no,
nothing.
So far, nothing.
Goose egg. Pitch and a shutout. Okay. Anything else we want to manage? We looked at ZB. We've got the 50% in for that.
No, we don't have anything to manage. No, nothing to manage.
Nothing to manage. Okay.
I still say.
You know what I'm going to do? I'm going to go into Twitter first, and we're going to go top down. We're going to give our Twitter peeps some love today because I love Blue Wackadoo. We love all these guys.
As far as SPX today, I'm curious to see if my calendar came off. We got into the put spread. We got in and out of a put spread.
Mine's butterflied.
Oh, you got yours butterflied. I just took mine off. So that. It was okay. I mean, I know we're down 37 now, but we have had some two-way action.
But that's why you need the GTC in.
I know.
Because I don't think I would have. I mean, there was a better lucky than smart butterflying off.
Well, I just put in we put in the order. I sold. Well, I did the calendar on the open, and I'm not sure if that's off yet. That's what I'm taking a look at to see if. Yes, they're both off. So I had to put on the calendar at 8:30, paid about $7.90 for it. Put in an order. We just decided put in an order to take $100 out of it, and then at closer to 9 sold the put spread, and then those came off.
Those did come off.
Those came off. So if you have orders in, we have had some movement. Down 30. Unchanged. Now down 20, up, down 10. Now we're down 50. No, that's crude oil. It's like now we're down 55.
No, we're
now
down 41.
40.
We're down 41. All right, but we are on Arun. Arun, thank you very much. Good morning, ladies. He sold the Jan 16 75 put in BE for $6 credit. Solid support at 74.75.
Now
we are in
do
BE.
have a BE put, or we did.
Nope, we're out.
Gone. It's
no,
gone.
Jenny, we traded BE very well. Let me go back to BE. We got into and out of it day. So we went bullish here, out, bullish here, and then we got out. So if you take a look at our BE history, we were pretty good with it. All symbols, I'm going to go back.
Yeah, just hit BE.
I'm going to hit 2 weeks.
But just
2 weeks, yeah.
Yeah, BE.
2 weeks. So watch this. We got in on the 8th, out on the 9th. In on the 10th, out on the 11th.
Okay.
We've traded BE pretty well. So Arun was looking
at the 75 put.
In Jan. Let me go to table.
In Jan. 580. Honestly, at this, like the way BE has taken this hit, I might give myself more room.
What were we in before? Let me
the
see.
80 put. We have the 80. But
so I might go to the 65.
Yeah,
I like to stay
might go
at
to
the
65.
cycle.
I feel like 280 is, look at this return on capital. Using 650 to make 280.
Yeah, we're in with Arun. I'm just going to go down one strike. And we're filled.
What price do we get? 280.
280.
Yeah, right, mid-market. Great.
All right, we're filled in BE, which is good.
So thanks to Arun, we got a high rank in BE. Now, if people still stuck in those 80 puts and didn't get out of them, they're tough right now. They're struggling. So
I just like that Arun said there's support at what level? What
75.
was it? 74.50.
74.50. So we gave ourselves a little more room with the 65 puts.
Absolutely. Okay, then next up we've got.
Do you want to adjust the natural gas by a tick, because we're not getting filled in that?
Well, it's big, and the markets were wide. Did you see that?
That's why, I mean, maybe give up one tick.
Because it's 11 cents at 20 cents.
So we're trying to take in 150 over. If we take in 160 over, now if we take in 150 over.
Yeah, so
we'll see what happens.
Like I said, I've been here before with natural gas, and it is, when it's wide like that, it's hard to get filled, especially on those legs. So we'll see. I want to let it work for just a little bit.
If we get a little movement down, we can get
each
filled.
tick is $10. So going from 15 to 16, you're taking a $10. So if you go from 16 to 14, then we're losing our credit. And now just the mid market just moved to 14.
I saw that. Okay, so right now the only thing we have so far is our Bloom Energy.
Now, if you get a little pop, you'll get filled.
No, if we get a little down move, if we get,
I'm sorry, we need to move in our direction. But you'll see, like 10 cents, but 10 cents at.
No, just leave it at 15.
Yeah, 10 cents at 20 cents is a big, wide market. So I want them to come to us.
Because we're moving out to the 42-day future. It's like they get busier and more active as it gets nearer.
Right. Okay, let's go back because I want to show this. Blue Wackadoo, 20 minutes ago, done for the day. Nabbed $4.99 after fees. And he's rolling the longer 68.20s. Prepping for a little Santa rally.
Blue Wackadoo, I hope so. At $4.98 after fees.
I want to see what time he put his on. Because he put it on at 6:33, which is 3 minutes after the open, wherever he is, right? So 6:33, 3 minutes after the open, and look at all these tranches he's got on. And he's done. 100 points wide in between the two.
I know. Blue Wackadoo.
I'm going to heart and like both
and Jack
of these.
Tucker, someday I need to level up my SPX. I need to level up. I'm like one lot Johnny, like one lot here, one lot here. So I'm $200 after fees. No.
Well, and I think part of the problem with us is that we are addicts, meaning like I have so many positions, I have so many trades, and just like I like looking at natural gas and I like Bloom Energy and I want to get into, any tech stock. I like it and I like to have all that stuff where I think, if we were just trading SPX, that would be the only thing that's in our account.
If I were just trading SPX, I couldn't be like traveling on the train, coming down here, doing other things. If we were going to be big by big in SPX, you need to be at your computer.
Jack's not. Jack's got a full-time job.
Well,
that's what I'm saying. Jack's got a full-time job, and I believe he takes care of lots of people.
Oh,
Jack is my idol.
If I'm going to be taking in like $21,000 in premium, I want to be at my computer.
I don't know. I think I'd want to walk away because I think I'd overtrade it. I actually like his style.
Huh? Jack?
If I could be like Jack, that's my new motto. I think I would want to walk away. Okay. But then we've got Bob on Fire coming in today.
And brace yourself, Liz. We've got Lennar.
Oh, I was thinking it was ACN.
No, tomorrow we have Micron and Accenture. Micron, I think everyone will be watching to see.
Well, then what are we going to do in last call today, Jenny Andrews?
Lennar.
Because if you didn't get enough of us today,
we're on last call.
In two different locations, we're going to be in a third location for last call.
Hey, all right, you know what we haven't talked about yet?
What?
The 7th day of Christmas.
Oh, yeah.
Yeah, how could you forget?
Because I forgot what it is.
Well, you haven't forgotten the song.
I just don't know how to end it. How about that? On the 7th day of Christmas, my traders gave to me.
Starting over on January 1st.
Oh, resetting P&L.
Resetting. Like resetting when your portfolio resets. When
you were so cute because you were waiting for it.
When your portfolio resets. So, now, not necessarily January 1st because the markets are closed on January 1st. But when we come in for the next trading day, which will be...
Not for us.
I know, January 2nd, is that just a half day? Is it a half market day or is it a full day?
I don't know, but and it was funny because I was listening to Chris Vecchio and Jamal. The market cannot be closed for more than 3 consecutive days. It is the law.
I know. It's an unfortunate law for those of us in the business.
It is the law. So unless there's a catastrophic event, the only thing was I think there was a flood at the SIBO one day.
Oh, really?
Oh, yeah, there was a flood. Yeah, I was there on flood day. And then
when
there
was
also
the flood? What year was the flood?
I don't remember what year.
Oh, wait, there goes Hollywood. Hey,
what year was the flood on the SIBO floor?
Come on over here.
Flood was in...
There was a flood.
Yeah, when the city flooded?
Yeah, and then the SIBO was closed for more.
It was like 92.
In 1992?
Yeah, SIBO was closed for like 4 days.
Are you sure it wasn't a little later in the 90s?
I thought it was like early 90s.
Maybe.
I don't remember the flood. Liz remembers.
92.
Was it 92?
I think it was 92.
Okay.
I think it was.
I started down here in 97, so I missed it. I missed the flood.
Do you know what?
In 1992.
Maybe 91 or 92.
It was okay. Yeah, because there was only that and that and 9/11 were the only time the floor's been closed for more than 3 consecutive days.
The flood was like 91.
Okay.
All right. You heard it here, right from Hollywood's mouth.
So
1990,
the
early
floor
90s.
flooded, so they had to close everything.
Yeah. See, maybe you just remember like seeing pictures of it.
Do you know what? I think it was when we were summer interns.
97?
I think it was 97.
We'll look it up. We'll look it up. We'll take it to the tape. I don't think when I was a summer intern, we flooded. I would have remembered that.
Why do I remember a flood?
Probably from like seeing pictures or something.
True. But nonetheless, so you can't be closed for more than 4 consecutive days. That is the law. So we'll come back on whatever day. But when your P&L resets, why does it happen? It's the greatest day of your life when you're down on the year, and it's the worst day of your life when you're up on the year.
I don't know.
I'm kidding, but yes.
Okay, so I don't know. I'll take pictures of my P&L sometimes. Like if I have
look back
like
on
a
old
really
photos.
great, if it's like a really killer year, I'll take a snapshot of it on the last trading day just to remind myself, like, you really are good.
And gosh darn it, people like me.
But I always like, I like my clean screen. I like the reset. I do like the clean start. I always do. Up or down, I like the clean start.
Well, I opened up new accounts so that I would have a fresh P&L in SPX just to start doing these SPX trades.
Yes.
So I do like that because things got a little out of control. I'm going to be so mechanical in SPX next year. That's my plan.
So mechanical in SPX next year.
Yeah, I'm going to be willy-nilly in everything else, but mechanical in SPX. No, so why does this happen? Because everything, and do you, Jenny Andrews, because everybody does their own thing, do you close positions going in knowing it's going to be a loss or a gain? Like, do you adjust your account before the Great Reset?
I do.
That's what I'm going to call it.
I do.
I do not. So that's what I'm saying. I don't think there's anything wrong with the one way to do it or the other way to do it.
Like if I have...
I do not. Like if I have winning positions, I leave them. If I have losing positions, I leave them. It does not bother me to carry them through.
If I have big losing stock positions, I close them just because... I do that. I do that.
Yeah, I don't.
I do. But again, we're not talking about taxes. We're talking about the reset. We're talking about the reset, and come January 1st, it's funny because we still have this incentive going, a 1% cash match, right? If you open a new account and put in deposit funds, you get a 1% cash match. And my in-laws, I was just helping them open an account, and they were transferring money over, and we had this discussion on should they wait until the new year so they don't have to do all the tax paperwork for just a few days in the year. You still have to, download the files and I said, no, you definitely have to get in now because now until the end of the year we're doing that 1% cash match. So that was good. They were excited about that. They made their deposit. They'll be getting their cash match, and they're going to have a few days of trading and then get the reset.
Oh yeah.
Yeah. But I said start it now so they get that cash match. Because I don't know what our promotion's going to be.
No, what's up?
I just fact checked.
All right.
April 13th, 1992.
1992. Darn it.
April 13th, 1992 was the flood
Was the Great
in Chicago and closed down the SIBO for I don't know how many days.
I just like that he walks by. You guys busy? No.
He likes to be on.
No, we're not busy at all. No, that was great. That was a good fact check, though.
Yeah.
I like that he's not afraid of us.
No, he's the only one. He's the only one who's not afraid of us.
Yes.
Yeah.
The rest?
Or not afraid to be on air. A lot of people don't like being on air.
A lot of people don't like being on air.
It's an acquired taste. We've been on air for 15 years. 15 years ago, we didn't like being on air.
Oh, and that shows in that first video.
Why don't you play that old one in your basement? Okay, so I like the reset. And honestly, when I was teaching those high school kids and giving these options of this put, it actually made me think like, maybe I want to trade a little differently. Maybe I want to reset. Maybe I don't want. I've got a lot of big positions of like stock and that I'm fooling with. Maybe I don't want to fool with that anymore.
No, and that's why I do like coming up on the brand new year, thinking about what worked, what didn't work, and what I'm going to do differently going forward. And that is true of any trader. But there is no do this, and this. Some people are going to look at things that worked for me, and we're trading the same thing. Things that work for me might not have worked for somebody else on our network, and things that work for somebody else on the network might not have worked for me. But that's okay.
I know. So, as I reflect on the year, I will go back and look at what were my bigger winners, what were my bigger losers, what do I want to change, what do I not want to, don't want to continue in the new year.
It's funny, and I don't want to mix words, but I know we've talked to TP before. I know TP will look at his losers and try to get into his losers.
I know.
I feel like I'm the opposite. I'm like a momentum trader, not like momentum following the stock, but what has been working.
What's been working.
What's been working for me, keep doing it until it doesn't.
I agree with you. I like what's been working. And so and he's a great trader. That's what I'm saying. He's just got his own style. I like to go with, if it isn't broke, don't fix it. Don't fix it.
Yeah.
Yeah.
And he wants to fix things.
He likes and I get torn. I get torn between the weeklies and the monthlies. Like sometimes I'm weekly. Then sometimes I'm thinking like, oh, maybe I should just go to monthly. I get torn between the weeklies and the monthlies.
Yeah.
So sometimes, like I've had years, if you go through and look, and we'll do that. We'll go through and look at our biggest winners, biggest losers. What are our takeaways from that, and what worked and what didn't.
Yeah, for sure, and we do that every year.
Yeah.
And you'll see us do it. I mean, probably not from the SPX pit because this is kind of a little bit. There's definitely more stuff going on when we're here. But we've always. Oh, there you go. There's a roll happening. We've always been kind of going through our best and worst. And you'll see that. You'll see that probably in the beginning of the year.
I like the reset because it gives you. I think as traders, so. We've been doing this. You just heard it here. We've been doing this since the 90s. We are that old. We've been doing this since the 90s. So, being a trader since the 30-something years, we're still learning. We're still changing. Our trading doesn't stay the same. It's still changing. So it's like you can always learn from what you've been doing and make adjustments or tweaks, which I think the reset helps you take a look at that. Otherwise, you might never do that.
Oh, and someone who says, I've got it, this is the end all be all, it's working until it doesn't, they're lying.
Yeah.
Yes.
Mm-hmm.
So it's pretty interesting.
Mm-hmm.
Okay. Now, in the essence of time, we have to get to, I'm going to go here. We're going to first, Mikey.
Yeah, sorry, they put the button where I can't reach it today.
You could reach that. What
I go.
You don't have to. You're so dramatically.
No, I have short arms. If I want to reach the cut button, I go out of my frame. I go out of my frame. They put it where I can't reach it.
I think you'll be okay. She's so dramatic. She's like, look, I can't reach.
No.
It's so hard.
The cut button. And every time I see this cut button, there's a little button that cuts from like wide shot to single shot. I think of this story of my husband when they were little. His mom said, we're going to go out to a Christmas tree farm, cut down our own tree, and they brought the whole family, went out there in the freezing cold, going through the field, finding their tree, and they literally stood by the tree. They found the tree, like, this is the one, we found the tree we want. They stood by the tree, and for like a half an hour, just everyone yelled, cutter. They kept yelling, cutter, cutter, cutter. They thought, like, someone would come and cut the tree down for them. So they just stood there yelling cutter, waiting for the tree cutter to come. There was no tree cutter.
Were they at a tree farm?
They were at some kind of tree farm. They were. In Michigan or something.
That's the weirdest story I've ever heard in my life.
Well, the cutter never came, and I don't think they brought a saw. I think they left without a tree. They thought someone actually cut the tree down for you.
Okay, well, let's see if you can do this without.
Hey, have you ever cut your tree down?
We get a real tree every year, but we don't cut it down.
No, have you ever cut it down? So we did once cut our tree down. The four of us went. My daughter was freezing. My husband took her to the car. He's like, I'm going to take Lily to get hot chocolate into the car because she was freezing.
And you cut the tree down?
So he left me and so my son, Logan, and me.
With a saw?
With a saw to cut the tree down. It was so hard, and you should have seen us. We were like two crazy people, and I was like, I'll get it. Like, get out of the way. So whatever happened when I did my final cut on the tree fell right on top of him. It fell right on top of my son.
It did not.
It did.
Oh my God.
No, it did. It really did. But he wasn't. He lived.
How old was he?
He was probably 8.
Rewind. So your husband left you and an 8-year-old in a forest?
Because he took the 3. I had a 2-year-old.
I get it. Why wouldn't he stay with Logan?
Have you met him?
That's insane. He's like, listen, you're going to stay with the 8-year-old. You got this, Jenny.
You guys got to cut down the tree.
You're going to cut down this tree.
Maybe he was 10. Maybe he was 10.
That's not the point of the story. He could be 12.
It was the year.
I cannot wait to talk to Keith.
It was the year, and you might remember this. One year I said, hey, Liz, we went to cut down a tree, and I ran into Nelly, NLY, an old trader from the floor.
Did he help you? Because Nelly was a strapping big guy.
He was a big guy. I was like, yeah, Nelly and I got this. Don't worry, go to the car.
Okay, that tracks a little bit better.
No, but the tree fell on Logan. But he lived. But I never cut down a tree again. It was harder than it looks.
Ladies and gentlemen, sometimes I don't know what to say. This is one of those
It was harder than it
moments.
looks. Anyway,
okay, hold on. I got to get to Mikey because we do need to talk about this. Liz, how many times must I tell you we're not trading addicts? Say it with me.
Trading enthusiasts. I love it, Mikey. I love it.
I like it too. All right. After that, because we are in the enthusiasm business, how about that, Mikey? We are going to go to Research Corner. Kai.
Forgot we even had this.
I know.
Monday.
I know.
Tuesday. Today's Tuesday.
Today's Tuesday. So this, I actually like going through this because we do it. It's very consistent each week. We get to see what the SPX, and that's my favorite part about this, was expected for the week. Ready?
Yeah.
So this is
Fire it up.
This is yesterday's. They did it yesterday, so it's about last week.
Yeah, this is talking about last
rates.
week. Recap from the previous week. So we had the rate cut in line with expectations. Tech Stacks weekend, and I'm kind of curious.
Here, I'm gonna
to see.
They'd like to be on camera.
Oh. Oh. Well, there we go.
I almost caught him.
I was trying to catch
Jeff. He's elusive.
All right, next slide, please. And silver reached new all-time highs. Silver and palladium. He forgot to include palladium, and I don't know if palladium's at all-time highs, but
I don't know. I don't think so either. But core retail sales were this morning, December 16th, and the Federal Reserve speakers and policy signals are all week.
Yeah.
Okay. Now here
but we
we
don't
go.
have. Okay, so do you feel? We were down 10, then unchanged, then down 20, then down 10, then down 30, then down 10. Now we're down 40.
We're down 33.
Are we
40?
Like, are we slowly stair-stepping down today?
We did
That's
yesterday.
what it feels like. Yeah, we did yesterday. It's kind of what it feels like today.
That is kind of what it feels like today.
I don't know.
Okay, but last week the NASDAQ was down, the S&P was down, but the Russell and the Dow were both up. So let's see what this week gives us.
Right, and the NASDAQ was down the most, almost 2%. So it's kind of, but like if you look at the S&P, it doesn't look crazy. It felt worse than it really was. And I feel like there's just, a shift.
Yeah.
Just a shift, moving from NASDAQ into some other products. Because what?
And then here, this is the one I like to get to. So the weekly expected move for this week for SPX. Jenny, I want you to go to the SPX for me right now.
Okay.
It's and this was, now it's Tuesday.
Okay.
So it was 95. What is the weekly expected move in the SPX right now?
From now till the end of the week is 81.
So it was 95, now it's 81.
Wait.
So the vols come down.
No. Yeah, the three-day will get us to December 19th. Yeah, 81. Still 81. That's
so
still
it was 95.
But that's still big.
It's still big, but 2 days have gone by, and now we're
only $15 have come out of it.
I know.
Yeah.
But you can see what's happened here, though. But keep an eye on this, Jenny. it doesn't matter if you get up days and down days. It's saying week to week, right? So we were down yesterday, we're down today. If we have a big up move the next time, then it could totally change those numbers.
And like VIX is ticking up a little bit. We're back to almost 17.
Yeah.
So
take a look at this. The VIX, the week of last week this week is at 15.7.
Now I will say this is, and a reminder, end of quarter. This week, this Friday is end of quarter.
End of quarter, end of month.
End of month. Well, no, it's not end of month because this week is December 19th. But
no,
we've got
it always ends on the end of the month.
But you've got the 2 day. We've got the AM settlement. So you're saying the 30th, the 31st, yes. The 31st end of quarter, end of month.
31st is end of quarter, end of month.
But we've got the AM settlement this Friday. This week is expiration.
This week is expiration, but it's not the end of quarter, end of month.
Yeah, this week we've got the December expiration, and then you've got the AM settlement.
So this is like the real expirations, like with the ones that we're used to.
Yeah.
This week.
Right. It's so confusing now. If you're new, like there's expirations constantly. It used to just be, once a month.
We sound like we're 100. In my day,
we
had expirations every third Friday of the month, and that's true.
Yeah.
The third Friday following the third Thursday. Does anybody else still know that rule?
Third Friday following the third Thursday.
Yes. So it could be very bizarre. Like it could be 4 weeks into it because it had to follow the third Thursday.
The third Thursday.
Yeah.
Well,
weird rule, right?
All right, so what do we have?
Okay, so then this is my favorite one. Major assets IVR, the direction they were moving, and their percentage.
And you see it. Look at the natural gas. Biggest mover in IVR is natural gas. And
well, it's not the biggest mover in IVR is natural gas. It's just saying that natural gas has had a high IVR, and it's up a little bit.
Oh, that's right. I keep thinking
I know
that's 74%. I can't stop. I can't stop. 74% IVR in natural gas.
Yes.
I can't stop thinking IVR in natural gas is up 74%.
And it's kept it. So keep an eye on this. So look at this, 77. Yeah. So next week when we see it 77, it won't be up 77.
So it's right. So it was 74 when Kai put this together, and now it's 77. So it's still ticking up.
Still ticking up. And we're still not getting filled.
I know.
And that's making me kind of mad. Okay, let's get through all of this real quick. Let me see. Silver climbs to a record high. So let's check the silver move today. We did. It's down a little bit, right? SLV is down 1%, but not that much.
Down just a little. But if you take a look at the chart.
That's not even really a down move.
And again, are we not going to get a big rally in crypto until the metals start falling?
I don't think they have anything to do with each other.
I don't know. I don't know what the correlation is. Like, what's the correlation
I used to think the market and crypto used to have a little bit more of a correlation. But I don't think they do anymore because the market's at all-time highs and crypto isn't.
I just didn't know if crypto had any kind of inverse correlation to the metals.
You know who we can call? One Ryan Grace.
Ryan Grace.
Yeah.
Maybe he'll come on.
Yeah. Okay. So silver's all-time highs. Russell and Dow hit new highs. So that's a shocker from last week. IWM hit new highs.
Yeah.
Did you know that?
Is IWM really at new high? Does it say that?
Yeah, it's at last week they hit all-time highs.
Yeah.
Wow. Okay. I guess I did not actually know that. And then here we go. These are the movers from last week.
I took
Oracle Hood, AVGO.
I took a poll yesterday, so went back to my class, my second one, and I took a poll. Do they prefer Lulu or Aloe?
And Aloe.
What?
Aloe is what I'm going to guess, right?
No, Lulu won.
Lulu won?
I brought it up in the class because I'm in this tonal class where everyone's on a tonal, and the people on tonal are wearing Aloe. Like the people, they must have some deal, right? So the people on the tonal video are wearing Aloe. So I brought it up and I said, does everyone here prefer Aloe or tonal? I'm asking because I have to buy some Christmas gifts and I didn't know what to buy.
How old were the people on the tonal?
So one girl is Logan's age, like 24. One girl's like 23. Okay. She said Lulu. Another, and maybe it depends on where you live and who you're surrounded by, because the more guys said they prefer Aloe and more girls said they preferred Lulu.
I would say it's the exact flip, and I actually answered that the other day.
That's funny.
Guys like Lulu, girls like Aloe.
From my poll in the tonal class yesterday,
flip?
Yes, I had all the girls say they preferred Lulu and the guys preferred Aloe.
That's crazy.
But again, probably where you are, what gym you're at.
Yeah. They're all the same. They're all athleisure. There's not a bad bunch, and that's why I was saying, I was sending it to Fazia the other day. She's like, what is that one that you prefer? I was like, here's the deal. Wait, what is the name of it? There's a really good one from Target. Really good one from Target that you can't tell the difference.
Oh, I don't know.
I wrote it to Fauzi, and I'll send it to somebody. But I was like, Aloe, Lulu, or this one from Target.
All right. Well, send it to me.
I will.
Send it to me. Okay, so Lulu up. And
yeah, Lulu is up on earnings. Those are all earnings. Royal Caribbean's up 10%.
Let's take a look at Royal Caribbean.
Okay.
Since you'll be getting on a Royal Caribbean cruise
Yes,
soon.
I will. So I did not buy the stock.
Oh, you didn't?
I missed it.
You missed it. You don't. This is gonna be your first Royal Caribbean cruise without the stock.
Well, because I'm leaving in January, so it needed to be.
Oh, you're leaving like January 1st. How are you gonna
Yes.
get? Yeah.
I couldn't get the statement, so I was like, I'm not forget about it.
Yeah. So it's had a jump up. And what's Carnival doing?
It's not up. Oh, I guess it is.
No,
but not.
You got the wrong symbol. You're in Care Cloud.
I was like, wow, is that crazy?
CCL. Oh, and that did jump up too.
Yeah, that did jump up too.
Huh, the cruise lines. Can't wait. So you're going to be getting on a Royal Caribbean cruise. I'm going to be getting on a Disney cruise. We're both going to be out of here January 1st.
We come back the Wednesday.
Yeah, we'll be back the 7th.
6th.
January 7th?
7th.
I think so, something like that.
Okay, let's get through this real quick because these are this was last week. So there's your Oracle, there's your Broadcom, there's your Lulu. And then
Toll Brothers, what did Toll Brothers do? Because if Toll Brothers and Lennar are similar.
Oh, they had it on Monday. I was like, where are you seeing
Toll Brothers had it, and Lennar is today. So I would say let's take a look at that must have been that jump.
Yeah, it must have been that jump.
Maybe we'll sell puts in Lennar if there's anything to do.
That'll
be last call.
We'll look at that on last call for sure. And then let's go this way. Now, this is so here's what's interesting. We've been leaning towards losers. 53.47 losers for 2 weeks in a row.
2 weeks in a row. Right. The market. It's
going.
even when some earnings you would think were good, some of those stocks were still down.
I know. It's kind of crazy.
I know.
And then this week. We really appreciate it. We have Lennar today, Micron tomorrow. There was another one, ACN. They don't have on there. CarMax, Nike, FedEx, KB Home.
We have 4.
Oh, Carnival is on Friday.
Oh. Maybe we'll sell puts in Carnival too.
Yeah.
All right, we have 4 minutes to go. We don't need to get back to Twitter. All we need to do is place one more trade because all we have gotten filled on so far today is our Bloom Energy put.
Okay, let's see. Do we want to manage anything? No.
No, there's nothing to manage.
Bloom Energy, we can take it off.
Let's find something. Let's find something to put on. You could put in a GTC for Bloom Energy, but let's find something else to get into.
Okay, so let's take a look at our natural gas. I will go down one more to 140. 140 is okay. I know in trading natural gas, you don't usually get filled.
Well, and again, we need to get movement in our direction. It needs to go down a little bit to.
But those are wide. It's a wide market, and you've been seeing it fluctuate a little bit in there.
Yeah.
So we'll keep an eye on that. If not, we'll start again tomorrow with it.
Right.
I want to take a look at Oracle. We put that on yesterday, and we're up $48.
Really?
Yeah, so yesterday we have the 175, 165 Oracle.
Yeah, sure. Take that off.
Let's close that.
We can take that off. And how is in Archer Aviation, it's kind of crazy. We've got the 8 put with 3 days to go, and we're teetering right towards 8. So I'll leave a lot of my weeklies like this if we're so close and just roll them on Fridays.
I'll leave that too because it's basically stock. That doesn't affect us at all.
Well,
I kind of want to look at PLTR because it's getting added to the Mag 10.
Oh yeah, that's a good point. That's a good point. Since it's going to be in the Mag 10.
PLTR.
Since it's in the Mag 10.
3 rank though. That's what I was going to say. It's kind of
3 rank. Then your only choice is a debit spread or a diagonal.
Yeah.
Which I think we could actually do an earnings setup. Like if you do the 190, I'm just curious. Like 190, 66 day, 45 day, it's still $6.
That's not bad though for that
it's
far.
not.
You wouldn't go 45. Oh, 66.45.
I went 66.45, just like buying the earnings cycle. No, I didn't do the 210. I just did the calendar.
Oh, you did a calendar.
Yeah,
okay.
The diagonal would be way too much.
Okay, so I'm going to do the 190 calendar. Let's see.
Did the 190.
610. That's not bad.
No, not terrible. It's an earnings setup calendar, meaning we have that call that's in the earnings cycle.
Lots to sell around it too. I'm sending it.
So, earnings setup calendar, buying the call that's gonna be in earnings, and then selling that 45-day option that will expire before earnings.
And I'm gonna pay $6.30, but I want people to realize, like, when you're doing this, it's a regular standard option. A penny is a penny. When I'm in natural gas, every time I go down by a penny, it's $10.
It's 10 cents. Yeah. So
like,
this
there's a big
is a slightly
difference.
bullish earnings setup calendar. All right, I'll push that out.
And I'm gonna put
that's it. And that's it for the day, Liz.
Oh, we're out of time.
We are out of time. I was able to reach you with my short arms.
I know.
All right, everybody. Thank you so much for tuning in. Tune in at 2:30 for last call. We'll be on again.
Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you later.
See you tomorrow live from the SPX pit.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
Hello.
And it is a fantastic Tuesday.
Kind of.
I do say so myself.
No, it is.
Yeah.
It is. I mean, the Bears are on top of the division. It's not as cold as it was last week. There's a lot of things to be positive about.
Yeah, it's like 20 degrees.
Yeah.
Instead of 0.
Yeah.
We're going.
Yeah.
We're on the come up.
Yeah. Yeah, for sure. There's no doubt about that.
But yeah, to your point, Bears playing a depleted Packers team this weekend on Saturday. Got flexed to a primetime Saturday night game. Come on now.
It's going to be funny because my wife's family, it's my family too, but like her brother is coming. His wife doesn't really care about sports at all, so that's good. It's one less person to fight against. But her brother obviously is a Packers fan, just like her. They grew up, in that area. And my mother-in-law, who's a Packers fan, her husband, who's not their dad, she remarried years ago, he's a Detroit fan. But point being, I'm going to be in the house and surrounded by a few Packers fans during this game. And it's going to be a thing. Dude, just to give you look, we actually don't fight about it that much. It's actually kind of funny. But yesterday morning, my kid was walking out with a Bears shirt on, and he was upstairs, and he was about to go downstairs. He's like, "Mom, are you driving me to school?" She was like, "Not with that shirt on."
My God.
This is what we do as in house. And you know what's great about it? I didn't notice it until I came home later, and neither did she. I noticed that his hat was on top of our Christmas tree, his Bears hat. I didn't notice, and then she looked. She was like, "What the hell is that?" She was like, "Did he do that?" I was like, "I don't know." And so then he comes home later, and I was like, I just pointed at him. I was like, kind of like, "Did you do that?" And he was like, yeah, my guy.
That's a Bears treat.
Yes.
Yeah, it's going to be an exciting game. Lots on the line, and I can't wait.
Yeah,
it's going to be great.
It's going to be fun.
But yes, things are looking up, kind of. Bitcoin up $1,900. The rest of the market was trying to sell off, and the NASDAQ just ticked green as I was talking here. E-mini's down 26, NASDAQ flat. Dow and the Russell down a little bit, but Bitcoin, Ethereum catching a bid here. Some of the currencies catching a bid relative to the U.S. dollar. Oil continuing its slide down to 55.44. Natty gas sub 4 now. Lots of products moving just a little bit to the downside, but also have some things to the upside. Bitcoin, again, up 2%. Kind of an inside day, though, when you look at all of the products that are within 1%, which isn't, anytime that happens, I don't even mention it because it's just your average daily chop.
Yeah.
We do have some earnings this week, although it is a slower week. We have Micron after the close tomorrow, Nike after the close on Thursday. We've got FedEx after the close on Thursday as well. So keep your eyes peeled on the News and Insights tab for some earnings previews for those. But
we got Lennar after the close today, which I'm not doing anything. The only reason why I mentioned, I think, man, we're gonna. And again, I actually tried. I'm actually actively trying not to play off of this yet, but I'm trying to keep my mind open to the idea that there's going to be a rotation coming next year at some point. Which, by the way, I think there is 12 Days of Christmas, right? The idea of what we do at the beginning of the year. I don't know about you, and this is, I guess, a two-part conversation about rotation and what you do with your portfolio at the beginning of the year. I don't typically change things just because it's Jan 1. It's just, I think we try to trade what's in front of us. And I can't speak for you. You can speak for yourself, of course. I try to trade what's in front of me. I try to trade what I'm seeing, what the market is currently doing, not what I think is going to happen. However, in the back of my mind, I think it's nice to prepare yourself and be open to the idea that things may change. We may see more of a rotation. Home builders have not done a thing in the past 2-3 years. I don't know the last time I traded a home builder. I don't know about you, but it's been a while. And we've seen some rumblings about changes in healthcare. Same deal. I haven't traded many of those names, but I'm open to the idea of trading those names if the liquidity is there and if they're actually doing things. And I think it's possible we could see something about that. Tech has dominated for the last 5 years. So I'm open to this idea, and that's why I see Lennar's earnings. I'm not trading it. I don't think the markets are even that great. Yeah, they're not. But it's been a long time since we've heard much from healthcare for a reason. I mean, interest rates have not been conducive to these stocks doing a whole lot. There really hasn't been a whole lot of liquidity. But I can promise you, once upon a time, there used to be. These names used to trade a whole lot. Lennar, PHM, all of them, and just haven't traded them in years. But that could be something that changes with the coming year. At some point in time, and everything doesn't happen on Jan 1. So that's why I don't say, oh, okay, Jan 1's coming, cool, I'm going to flip my whole portfolio. Nah, I never do that.
Yeah, that's fair. I mean, the only thing I do is I do like to do kind of a annual roundup with just like biggest winner, biggest loser, why that happened. Was it something for the winners? Is it something repeatable? For the losers, was it, a bad earnings trade or just consistently being wrong or, that kind of thing. But for Jan 1, the only thing I do is just readjust my year-long trades. So I have a working order in to start the year-long trade for next year in MES. I decided to get into the sell-off today, but also because when you look at MES, the Jan end of month is 45 days out, so it kind of puts you in that sweet spot as well. And then I liked these strikes as well. So 6,600 to the downside, 7,100 to the upside. Kind of been in that range we've been trading for the last couple of months here, but yeah, I'm trying to get in, see if we can do it. These markets are kind of flying around a little bit, which is going to be annoying for the year-long trade because you can see these bid-ask spreads will just like drop to zero, and that's going to create some weird P&Ls. But MES is the best bang for your buck in terms of buying power requirement relative to notional value exposure and premium offered relative to buying power. If you go to SPY or XSP, you're putting up way more, like 10 times more buying power. And I'm just doing this one contract, I can withstand the variance here in this product. So just looking to keep the buying power light, and the risk is just one contract. So,
So wait, you got a working order to do what?
To sell the strangle in MES for next year's. No, this is. This is for next year. Yeah.
Gotcha. Okay.
But yeah, the whole idea behind this is I'm gonna approach it similar to IBIT. So my IBIT position, I never had short delta, or if I did, I got rid of it immediately. Gave myself upside room. I'm actually trying to roll this out to the end of the month for a couple pennies here, just to reduce my risk of being assigned and keeping that bullish stance throughout the end of the year. But yeah, MES, whole plan here is open with the strangle. If we get tested to the downside, I might roll the put out and down and just do that once. If that new put gets tested, I'll just roll that put out in time continuously. Probably get rid of the call unless there's some premium that makes sense to sell against it. If we're tested to the upside, I will shift the whole thing up. So if the market rips from 6,850 to 7,100, I will buy back this whole package and then roll up my put to, let's say, 70.50, and I'll move my call up to 7,200 or somewhere around there, and basically just shift the whole package so that if I'm tested on the upside call, I'm not under hedging by rolling my put up. I'm just moving the whole thing up because I don't want to have bearish delta in the E-minis. I think next year, even if we have volatile environments, if you look at a chart of SPX or SPY, every single dip has been bought in the past year. If you look further back, it's the same story. So until that changes, I don't want to have upside risk. I don't want to be rolling a short call down here and just defending for half the year. I'd rather roll up with the momentum in SPY. I know you're doing a similar thing in the NASDAQ, but that's the idea, is just shift the whole thing up, get rid of bearish delta, and just collect premium along the way. I did that in IBIT. And even with this big sell-off in IBIT from 70 down to 50, it's still a profitable trade because I collected a ton of premium along the way, and I was able to withstand that variance. And this thing is literally almost 20 points in the money, and it's still a $1,500 winner at the end of the year. Now, the difference is I picked up a lot of premium in IBIT relative to MES, but the strangle in MES is still a $500 opening credit. So it can be a similar, it can certainly be a similar credit received. The notional risk is higher in MES, but it is going to be less volatile, or should be less volatile. So yeah, that's the plan. And if I get filled, I will let you know. And at the end of the year, I'll do more of like a formal write-up. So you have the strategy written down if you want to follow along.
Nice.
But yeah, outside of that, haven't really done too much in this portfolio, given the fact that everything is pretty much flat in here. You're seeing some movements in either direction, but nothing too crazy here. My SPX positions, this 6,900 call calendar spread turned into a vertical spread, not going to work out. That was a short-term play. The 15-day short put spread to finance a long call spread, that's now in the money with this sell-off. The only thing working out in this SPX tranche is this iron condor, the 6,500, 7,100. Similar position to what I'm opening in MES. But this is a defined risk 10-point wide, small trade. So we'll see. We need a rally here to end the year, and we'll be okay with these positions. But Santa's chilling.
Santa's
He's
chilling.
sipping whiskey somewhere.
Sipping whiskey somewhere. Yeah.
But yeah.
I did a few things today. A few rearrangements, honestly. BE, I did get a strangle in here last week. Dancing with the devil again, of course. But I rolled down the short call from the 150 to the 120, and I am short the 80, 120 strangle as of now. What else did I do? I closed a couple of long-term positions that I had, both out in Feb. So I closed the Super Bowl for Meta and Palantir for some nice gains in there. And I don't know, our rigatoni was just an old position. It was an inverted strangle. That's not going anywhere. Just close that.
Rigatoni.
It's not happening. What else did I do? Oh, yeah, I had a strangle in Intel. Closed that for a small loss, like $90 loss. Stock's down there. That doesn't seem to have any lift. MicroStrategies, also a Super Bowl that I had in January. And again, this has been a theme that I've kind of started since yesterday. I mean, you heard my talk. You heard the way I was talking about the markets. I don't necessarily want to be long anything in Jan right now. So rolled that out to March, was able to get the same amount of credit, just give a little bit more time there. And Coreweave is actually a strangle that I put on yesterday. That stock's down. It's not looking good. Closed that actually surprisingly for a $25 gain, very small gain, but just closing some risk in there. I still have a Super Bowl in there that's in February, so underwater on that. But again, it's in Feb. So as of now, I'm mostly just short. If there's anything in January, I'm short vol in it, whether it's 9 Condor or Strangle or straddle like IBIT. And anything that's long, directional, it's in February for the most part.
I like it. Yeah, I think that's another thing you can consider for like end of the year portfolio management is just rolling things out from obviously December to Jan, or from Jan to Feb, or to March if you're looking more long term. I think all of those are on the table, especially with the assumption that a lot of people will be away from the platforms over the next couple weeks. Better to get ahead of it than wait till expiration and then you're scrambling. So
exactly. I mean, I would like to see a rally, of course, based on positions. Like I said yesterday, I'm a little worried that some of this news, this negative overhang is still hanging around, if you will. And today didn't help when we got the jobs report. It was very mixed. So as a result, I'm just trying to safeguard myself on some of these positions. Like I said, anything that's long or directional, I've pushed to either mostly February at this point. I don't think I have any March longs, if you will. I'm comfortable with all those. Honestly, the things that are probably the toughest to deal with right now or that annoying is the MCL long. I'm long from 58.80, and again, nat gas is a put spread at this point, but that sucks. But outside of that, chilling.
Yeah, I have a lot of Jan positions, a lot of Jan calendars here, some diagonals too, but I kind of want to hold those since those are debit trades, and a lot of them are not working out, but could work out if there's an end of the year rally.
Yeah.
So those I'm not adjusting. SMR, I have 100 shares. This one bit me. I have 100 shares at 40. It's trading at 16 now.
Yeah.
This one is just going to be another one that's in the bag. But implied volatility isn't terrible in here. I have this call ratio that's going to be worthless, but you can see I can still sell premium here around, well below basis, but I can sell premium around 20, 21, pick up some more premium into a rally. I want to do that, not into a sell-off, but I can always roll up and out. So like if I sell this 21 or a 20 for 80 cents and then we get a rip to 20, I can buy back Jan and roll it out to Feb and move it up to like the 23, 24, or 25. This premium will appreciate to a similar amount to this one. And then if that one's hit, I can roll it up to March or April. Like you can still defend pretty effectively here with 100% IV product. But again, I want to wait till there's a rally there before I make any adjustments.
I understand.
And that's pretty much it. I have a suite of products with 100 shares. So that's always fun.
Yeah, speaking of SMR, URA is one that I'm still short a straddle in. The 50. I want to roll it to Feb, but as you can see, there's no Feb yet. It's waiting till after expiration, I'm sure, for the Feb options to show up. So
yeah,
I will do that next week.
Yeah, if you ever see that, for those that are watching or listening, you can see there's a gap from Jan to March. There's no Feb monthly. Once DECE rolls off in 3 days, they will open up Feb monthly. That's typically how it happens in some of these products. So just something to note.
I remember when I was first learning the game of options. I remember like it used to be like dudes would if you sometimes they do them automatically now and they're really good. And again, like you just said, if it's not there, it's because they're waiting for a certain reason. But there used to be times where you had to call the exchange and have them open up like certain options expirations. Shit was crazy. I was like, really? You can do that? And like, yeah.
Just call up Joe.
Basically.
Joe at a uranium. Give me Feb. What are you doing? That's funny. All right. Popping over to the YouTube chat now. We got plenty of time for questions. If you want to head over to the tastylive channel, you can see us streaming live and throw in your trade ideas, questions along the right-hand side chat. I've got the referral program pinned to the top of the YouTube chat. If your friend opens an account, funds it with $2K, you both get $100. So check that out. If you've got some friends with some idle cash, maybe a little Christmas bonus cash.
Bonus cash.
Yeah.
Are they really, you know what? Are they doing stimmies? I mean, I'm seeing more and more on it, dude. Like
2K stimmy?
Where is it? I'm looking on Kalshi now. I'm trying to see where it is, but
They did one for New York. New York got one.
For real?
Yeah.
No kidding.
Tariff
stimmies?
I naturally searched, will Illinois get one? And they said no.
Yeah, right, yeah.
Are you stupid? All our money's going to the Saudis with our parking deal.
There it is.
What a trade. What a trade that was. But yeah, I haven't heard anything, but I'm keeping my ears open.
Yeah, I just see the stuff that they post on Twitter, which, by the way, is funny to me. Like, if you follow either one of them, Kalshi or Polymarket, on Twitter, they definitely do stuff to try to get the people going. It gets the people going. They do it all the time.
Get the people going. Yeah, let's see. What do we got here? What kind of trade ideas? Ooh, the short put spread in IBIT chimed in for 25%. I set it low so I could get out of there quick. I assume you placed it yesterday. It's a nice trade. Yep.
Nice.
Yeah, buying the dip in Bitcoin can work. It's been a tough trade recently, but there's still plenty of green bars here over the last couple of weeks, especially after big red bars. So that's the nice thing about two-sided markets. You can have bullish, bearish assumptions and still make some money on it in a short period of time if you time it correctly. Help me with Costco. I have a deep in the money put spread. Keep waiting for a bounce to close it, and it keeps going deeper in the money. There's not much to do with an in the money spread. Wow, this thing is just...
I know.
What's the problem here?
I don't know.
Did they not hear me yesterday? I spent $500 over the weekend.
I don't know.
Revenue.
I was thinking about pushing this out. I know I'm taking a loss on the current trade and just going to staying with the 910, but going to Feb. Because, yeah, this is, it's tough.
Feb Jan?
Yeah, Feb Jan.
Yeah, the Feb Jam and calendar trading for $7. Yeah, I have the Jan Dees.
Yeah, I have the Jan Dees as well.
I mean, I guess we could move this. There's still 3 days left, trading for 20 cents. If
You got Dees. I think I rolled mine to the neck to Dees 26 last week.
Yeah. I mean, that's the move. It's trading for 70 cents right now. With these shorter term calendars, it makes sense to give as much space between the short and long as possible, because if you time it correctly, if you roll into Dees 26 at 910 and next week Costco goes to 900, this option goes to 0 by Friday.
Yeah.
Where if you roll to Jan 2 or Jan 9, now you basically have a vertical spread feel where if you rolled into this, yes, it's going to reduce your cost basis a lot more if you rolled right now into the Jan 9th cycle. But if Costco rallies 50 points, you're going to see hundreds of dollars of losses on the short option, where the December 26 option is going to be worthless. So if you want to stay aggressive, it makes sense to roll week to week. If you're trying to reduce basis and just wave the white flag, you can go to the 17 or 24 day, but I prefer to stay aggressive, especially into how big this sell-off has been.
Mm-hmm.
But I still have a couple days left. I'd rather extract all this value in the 3 day, because rolling right now to the 10 day isn't yielding too much premium. Now, of course, this premium will go down if Costco doesn't rally, but if I can if I can roll it into a rally, now all of a sudden I'm picking up 70, 80 cents net credit as opposed to 50 cents, 40 cents.
I mean, there's really no news. It's just clearly, I guess, tariff related.
Yeah.
There's no recent news, I should say. It's just tariff related, and again, they're filing a lawsuit.
Yeah,
it's the government.
So short put spread. I mean, I don't know where it's at, but if you have like a 900, 890, something like that, it's trading for $700. Still have $200 of value to lose on this one. The problem is if you turn this into an iron fly, you just kill your probability of profit. It just turns it into a really narrow butterfly. Even though you're picking up $1.50, it just ends the trade. You might as well just exit the trade and save yourself from max loss if you're doing something like that. But depends on where the strikes are. It's just going to be tough to defend it into the hole like this. I would just wait, see if you get a rally with the put spread if you're willing to take the additional risk. What up, thick kings? Let's look at nuclear stocks. SMR, looking at a long call and selling calendars against it, more of a long-term play, but this is going to explode in 2026. I hope you're right, because it just imploded, going from 50 to 16 in a matter of a month, 2 months. But yeah, I mean, you're dealing with a $16 stock price now. I don't mind the idea of going out and buying a call leap, if that's what you want to do. And then, of course, like you said, you can sell premium around it. But yeah, there's not much else I would consider doing here. But yeah, you can do like a 10 strike long, 300 day out, almost a year, basically a year out, over a year out, and then sell a 30 day 20 strike against it. Definitely possible. And you have less risk than owning the stock for sure. RSPH was looking at that for healthcare long term, which is not an interesting trade right now. RSPH, equal weight healthcare ETF.
SPH.
Yeah, there's nothing to really do here either. These options markets are barren wastelands. Zero bid, $2 ask, right at the money. So this is a stock only thing if you're going to do it. XLV is the healthcare spider ETF. Different price point, of course, $150, but these options markets are a little bit better. Still not great, but if you stick to the round numbers where the open interest is, so like 150, 155, 160, you can see there's plenty of open interest on these strikes and 20-cent wide bid-ask spreads, 30-cent wide bid-ask spreads, as opposed to dollar wide or more. But yeah, tough trade so far. For the year-long trade in MES, I guess you'll be sticking to the end-of-month expirations. I'm guessing this has the best liquidity. Yeah, I mean, I'll definitely be checking the liquidity here, but yeah, end-of-month they're generally going to bring more liquidity than some of these weeklies, especially the fringe, like Jan 16 weekly. Like, there's not a lot of liquidity there in general, but yeah, you can check month to month, week to week, see where there's more open interest, go with that. I just went with the 45-day option, but I still haven't been filled on this, and it's been like an hour. So gonna have to be patient and see if we can get filled there. But yeah, I'll try and stick with the more liquid cycles, but end of month doesn't seem like too bad of an idea here. Just lost my spot here.
Santa baby.
Why is energy getting disproportionately rocked?
He's getting smacked today.
XLE down 2.5%.
Yeah, I mean, oil's down, obviously, basically the same, 2.4%. Nat gas getting rocked. I don't know the answer. I actually don't know the answer. I don't know the answer. I mean,
yeah. Sometimes there is no answer.
Yeah.
It's just, it is what it is.
Yeah. As far as trading goes, again, Mikey and I have traded this MCL a whole lot. And for the most part, for the last several months, you've been able to buy dips in here. But yeah, MCL, I mean, oil in general, like, what is it, 7 days in a row that it's been in the red. And, you know, again, I still have an MCL contract from 58 and change. I mean, I looked at the idea of, I mean, it's probably worth selling a call in MCL right now. I probably should. I hate the idea of selling a call against the long that I'm already down on. You know, and vol is not particularly super high. Like, I know, you know, IV rank is 24. I don't really love it. I mean, I can do it for the culture.
Yeah, I'm long at like 57.50 and just one contract, so I'm down $200 on this, but I agree. I would rather not sell a call against it. Although this F contract is going to expire in a couple days here, so
where are we at? Is that?
I might need to just roll.
Yeah, you're right. Good point. Good call.
Yeah, I'm gonna have to roll this thing.
Roll. How much are we doing with Contango?
See me rolling.
Oh, it's pretty simple. No, it's not.
There you go.
Oh yeah, it's actually better. Yeah, well, yeah. Nice.
So I will do this. I will roll. I just rolled to the G contract, which brings us out to middle of January. And what I'm going to do is I'm going to deploy a call ratio near my break even for a 30-cent credit. So a 55-57 call ratio against my long contract. Bring in 30 cents, and then if we get back to 57, it will net out to be a $100 winner prior to expiration, $200 at expiration. That way I can kind of accelerate my profit potential here without taking any more risk.
Okay.
There you go. 28 cents, 55, 57. My basis on the contracts are around 57.5. So no harm, no foul.
I'm too far upside to do it. Doesn't quite price out the way I'd want. 50 or 80, yeah.
Yeah, this thing's been moving though, so.
Yeah, it has been.
We'll see if you get a little rally. XLE and energy in general is way overbought and has been for a while. Just like tech, we're going to see more rotation into emerging low cap markets as well as dividend payers this year, I think, or next year. Yeah, it's possible. That's what Jamal was noting maybe you see rotation into some of these products that haven't seen any light of day. But yeah, when euphoria is at highs, eventually you shouldn't be surprised if you see a rotation out of it. What are you doing on RGTI? I got some at 23, and I'm looking to do calls back at 35, back to 35 at least.
Yeah, so this was one that was just a loser pretty much on the year. I had it from a while ago, and I just closed my position. So I got to the point where I was inverted. I had an inverted strangle. I was short the, what was that? I think I had 23 as well. I was short the 20 call, 33 put. And just seeing if ball was going to come down here, which again, I mean, it did kind of calm down. I didn't really make a whole ton of money on it, but it did calm down. I mean, you remember how these names were going. I mean, these quantum names were crazy for a while there. Ball was crazy high, but it really hasn't done a whole lot. And I've that's actually probably the first time I've ever really been inverted. I know there's a lot of research on it. I don't really love the idea. And so it was just a close for me. I'm out of it. I don't have to think about it anymore.
There you go. Yeah, there's still 100% IV if you wanted to stay in it. Just depends on where you're at. But yeah, you can roll and manipulate it, but it is volatile to be sure.
Haven't heard much about quantum stocks in recent weeks.
Yeah.
Since the craziness.
Nobody cares about the computers anymore.
No.
Any bearish positions on Tesla? Why did I just type Tesla out fully?
No position in Tesla for me.
Wow, Tesla's near highs.
Yeah.
Interesting.
Mm-hmm.
I haven't traded this in a minute. Last trade I had on here was a 350 calendar in August. Long time. Bearish position on Tesla. I would probably do something like long Feb, short Jan. Because Feb, you can see there's an IV expansion into Feb. Implied earnings are early Feb, late Jan. You can see the Jan 30th actually has the implied volatility spike related to earnings. So you might see this Feb 4 shift into late Jan. So yeah, something like a bearish 400 strike calendar. There's not much else you can do here. But I do like the idea of inventorying delta in Feb in the earnings cycle. So you get that elevated extrinsic value until the earnings cycle happens or earnings announcement happens. And then you sell premium against it with the full theta decay of the monthly cycle in Jan. Still not too cheap. It's an $800 calendar spread, almost 100 points out of the money. But if you think that if you want to be bearish on Tesla, that can work out. If you consider the fact that this $1,200 might turn into 20, and then you can get all this premium in Jan, but you can make a couple $100 on this trade if there's a sell-off in Tesla.
This was another one of my super bulls from the 20th of November. I could have held this one. Yeah, I was long the 470, 485 call spread. Who knew? Took that off about $400 too early.
Yeah, I saw some crazy numbers on Elon, how he's the first $600 billion man, something like that. Crazy numbers.
Mm-hmm.
Crazy.
There's bets as to whether he's going to be the first trillionaire.
That'd be wild. That would be wild. But yeah, I think for us, it's calendar spread. Diagonal spreads are too expensive. Credit spreads are okay. I would just go to maybe Jan instead of Feb if you're doing a credit spread because you want to get that decay in Jan. Where can we find the write-up on the strategy year-long trade? I don't have it yet, but ultimately it's going to be sell premium on both sides. If you're tested to the downside, roll the put out and down for a small credit to the next cycle. If that new cycle is tested, just roll that put out in time, get rid of the call. In the money put is a covered call, and I'd want to be in a covered call scenario if the E-minis are down 3%, 4%, 5%. to the upside. I don't want to be dealing with upside risk. So if we're tested to the upside, just shift the whole thing up for a small credit. And then over time, you are left with ideally downside risk, very little to no upside risk, and then the premium you've collected throughout the year. Why is the market down the last few days, but the VIX is not up much at all these days?
It hasn't been that big of a down move in the market, to be honest with you. That's why.
Yeah. Yeah, these intraday ranges, I mean, you did have this big move in the E-minis on the 12th, $100 range, 100-point range, but the last couple days, pretty muted. 68-point range yesterday, 60-point range today, and you got to remember, like, down 40 is nothing when the E-minis are at almost 7,000. It's a half percentage point move. So this is not going to move the VIX really much at all. And right now, VIX is picking up a little bit, but still, 16 VIX is nothing. And the vol futures, we're looking at 17 in the Z, 1860 in the F, 20 in the G. Like we have almost a 2-point contango between these three contracts, which tells you that the market is not projecting much fear at all, at least as of right now.
So guys, the VIX is the volatility index, not like the down determinator index. You know what I mean? Like if we could go down 40 points for the next 20 days in a row, just 40, and the VIX would barely move. That's just kind of the way it works, right? You got to think about it in terms of daily moves. And so right now, the VIX is forecasting, looking at this front month at future, it's forecasting a little over 1% daily moves. If you think about it in terms of the rule of 16, 1% daily moves over the next 30 days. So 40 points wouldn't be 1% until we got to a point where that's 1%, which would be a long way down. But like you got to think about it in terms of that. Just because it goes down doesn't mean the VIX is supposed to go up. I know you're used to that. We see that. You're even seeing that today. But truth be told, by the end of the day, I think if we sit right here, this would come in a little bit. I would think the VIX would come in a little bit. So stop thinking about it in terms of just because the market is down. If the market is down 10 points, doesn't mean the VIX is supposed to go up. It's just not the way it works. I know we see these relationships. You see the chart of, inverse relationship between VIX and SPX, but it is more about the actual velocity of the move in the SPX than just being down.
Yep. Would being long MES indefinitely be a viable portfolio strategy for static delta and then trading options around it? If you can afford it, I would rather do that in SPY, because then you have dividends in SPY, you have long-term taxation if you hold it for over a year, where MES, you do have the 1256 tax treatment, which is beneficial, but you're still rolling month to month. You're forced to exit and re-enter. If you can afford it, I'd rather do that in SPY if you're just trying to hold static delta and sell options around it. And then Brian, back to your question. Yeah, in SPX, if you have a 500K portfolio, you're essentially cash secured. The whole point of 600K matching up with one strangle in SPX is just the fact that when you have these announcements that create panic in the markets, if you are ultimately cash secured, you don't have anything to worry about in the sense of increasing buying power, creating issues with you being able to hold the position, and just general risk. If you have a strangle on an SPX or just a short put on SPX and you're cash secured, you can absorb any downside movement in the market. Yes, you will see losses, but you can hold the position and you can roll it, and you can watch those losses dissipate if the market moves back up over time. And when it comes to like a year-long strategy or a strategy that is something you're trying to be super consistent with, I want to do it in a consistent market like the E-minis or the NASDAQ, where you have historical data points that point to recovery over time anytime you have a massive sell-off. But you also have to trade small enough to where you can withstand that variance.
There's really interesting history around that 1256 contract treatment. They actually made us learn that very, very intensely at SIBO. And there's a guy, I can't remember what his position was in Illinois government, But I feel like it was like an Illinois lawmaker who came up with the idea, or at least, I don't know if he came up with the idea, but helped push that idea. JJ used to talk about it a whole lot. I can't remember I think he knew who the guy was. Well, not only did he knew him, like I think he actually knew him. But yeah, it's really interesting around that. And again, that's a situation where you get to be treated on your taxes for those trades. I think 60% long-term gain, 40% short-term gain is the way it goes, which again, not everything is like that, right? Like if you're getting rid of a position that you've had less than a year, you get treated at 100% long-term. So it is really interesting. It really is fascinating.
Yeah, it's great for cash settled indices, SPX, XSP, even the VIX, I believe is.
I believe so. Yeah.
But yeah, futures products also fall into that. Anything that's basically cash secured, not equity secured, you can get that treatment, which is really nice for keeping those profs. Coreweave, sell a put, any adjustment? That's the one you did, right?
Yeah, I have a Super Bowl in there. So currently it is. So I actually just adjusted as we were on. I was initially short the 85.75. I still am short the 75.85 put spread. I was initially long the I was initially long a further up call spread. I was initially long the where do I have it? I was initially long the 110, 125 call spread. I put this position on when Corey was around like 85, 86. But I just rolled that call spread down. I paid $1.30 for it, given that basically this put spread is $7 credit as of right now if you were to put that on today. So rolled the call spread down. Now I'm long the 90, 105 call spread. Just need a bounce.
90, 105. Yeah.
Not happening soon, though, as we go down almost 50 in markets.
Yeah, I mean, this has been a tough trade. I mean, it's all of these stocks that have just had such pure euphoria, and now it's been zapped out. Still, though, plenty of premium to be had if you are staying consistent in here. But yeah, the put premium here, totally viable. You're picking up 5% notional on a 60 strike put in Jan. Like that's big.
And my position's in Feb. So again, it's another one of those situations where I'm further out.
Yeah, this is crazy. The 60 strike is offering $6, 10% cost basis reduction.
Yeah.
So yeah, plenty of volatility there, but lots of premium as well. NLR versus URA. Which would you trade for options?
URA 100%. I mean, look at the volume in here. I'm not talking option volume. I'm just saying the stock volume is 300,000. URA, obviously a lot more volume, and that's where we're always going to go.
Yeah, I don't even
mention the option markets. Jeez, it's criminal.
I don't trade options on any product that does not have a weekly options expiration. That's just a reflection of liquidity. So NLR, they have Dec, Jan, March, June. No other options expirations means there's not enough participants in this product to open up more options expirations. Also, 300K stock volume. You go to URA, you have twice as many monthly expirations and 5 weekly expirations for options. 2 million shares traded today. And we can just do this to prove it, but URA, 20-cent wide bid-ask spreads, NLR, you're looking at $3 wide, $4 wide bid-ask spreads. So can't trade options in NLR. URA is definitely where we'd go.
Mm-hmm.
What's the ticker for the MAG 10? Is there a MAG 10 ETF?
Well, it's MGTN, but we're in negotiations. We're in negotiations right now. But yeah, as of now, there really isn't much going on in there. And look, again, it's similar to the answer we just gave for these uranium ETFs. I mean, there's not going to be volume in this thing right away. It's going to take a little bit of time. At some point, I'm sure it'll catch on. And when it does, we'll be there. But until it is, we're not there.
Yeah. Grain's getting hounded today. Oh boy. Yeah, I mean those products have had a real tough time. Wow.
Oh, by the way, I will add on one more thing. MGTN, if you do MGTN CGI. You'll be able to see the index if you want to do that. You can definitely look at the index. But yeah, nothing's trading on our end as of right now. Sorry. Go ahead.
Yeah, that'll be interesting. Just a hyper concentrated product. Yeah, wheat getting killed here, down to annual lows. Insane. Yeah, doesn't seem to be a very positive market here, even though the E-minis NASDAQ aren't down that much.
Well, Tommy Tuesday's not feeling well.
Yeah.
You get better soon, buddy. And as a result, you can see the grains are suffering without him. They need him. They're suffering without him.
Maybe this price action is making him feel unwell.
I think so. I think it is. All the grains
yes.
are not doing that well today.
All kidding aside, hope Thomas feels better.
Hope you feel better, Tommy.
We can have him on next week before we head off to the Christmas Santa holiday. Maybe we get a little Santa rally.
Yeah, you need it.
Let's see. MVST bought 100 shares, looking to sell calls against it. Earnings in March. This one's been beating revenue estimates, but Wall Street doesn't appreciate it. Highly undervalued, in my opinion.
Can't really trade many names under $10.
Yeah.
Good luck to you, however it goes.
Yeah, it's a $2 stock. From a notional value standpoint, the premium is decent. Picking up, 17, 20 cents for a 3.5 strike, which is pretty far out of the money, relatively speaking. But yeah, you just have to make it make sense. Like if you have 1,000 shares, then that's a decent chunk of change. But if you have 100 shares, I would rather just keep 100 shares, give up that 20 cents, uncap the upside movement, especially if you think it's going back to 6 or 7. Like this premium isn't going to change the world, but if you get a move that doubles the stock price, you'd rather have that without the capped call against it.
The last name I can think that I traded on $10, EXAS. Go ahead, pull it up.
ES?
EXAS, Exact Sciences.
Damn.
Yeah. Yeah, I had shit in here. Yeah, it was like 2010. Yeah, man.
Did they get bought out?
No, just so they're the ones who do colorectal cancer, and you like poop in the box and you send it to them. Yeah, they're the ones who do that. I've been buying this in like 2010, never held on to it. Yeah.
Yeah, I feel like something's going on in here. Just looking at the
I think
options.
it just got bought out, actually.
Yeah.
Or it's currently in the middle of a buyout.
Yeah.
But I'm pretty sure, yeah.
There's some premium if you go really far out, just near the current stock price, which is reflective of a final price point.
Yeah.
But yeah, you saw this gap higher and then this sideways movement here, and there's zero bid on at the money options anywhere you look. So.
Yeah, I can't remember who bought them. Some big, I forget which company. One of the big companies. Oh, never mind. Was it Apollo? I guess it went private. Yeah, I guess Apollo brought it. No, Abbott. Yeah, exactly. Right. No, I think it was originally going to be bought by Abbott, and I think private equity bought it. I think that's how it went down. But yeah, I remember having this thing at like $5 and change, man. And again, this is way prior to buyout. I think it was higher than where it is right now. At one point in time, you go back, I was like, my God.
I wonder what the pitch was for the name Exact Sciences. Like, we're gonna get exact with your science. You just have to give us a little something.
A little something.
Yeah. Oh man. Trying to nail down my portfolio buying power usage guidelines based on VIX. Do you consider 20% portfolio buying power usage low, high, or about right for current VIX level? I would say that's about right. VIX is in the teens. VIX futures are in a steep contango. That is reflective of not too much premium here to be had across the board. Of course, you can always find equities that offer higher implied volatility. But yeah, keeping some cash on the sidelines for better opportunities, I think is where we're all at, really. Like I have a lot of positions here, but a lot of these are just like leftover positions that are just sitting there waiting to expire. I don't really have too much true risk on right now. But speaking of that, I was just filled on the MES position. 6,600, 7,100 strangle for Jan 30th, 466 credit received. So again, if we get tested to the downside, I'll roll from Jan to Feb or even March and roll it down, get rid of the call or just let it expire and then roll that perpetually. If we're tested to the upside, I'll move this whole package up to 70-50 put or 7,000 put and then roll the call out to still collect a credit. And I'll just keep rinsing and repeating that. If we get tested to the upside, I might not change the expiration. I might just shift the whole thing up. Just depends, but yeah, that's that.
So it begins.
55 delta SPY on the portfolio. Considering a put calendar in ES to reduce delta, does that make sense? Looking at the 6750 puts for Dece Jan.
Nice trial.
So yeah, you could just go straight to SPY if you wanted to. 6750 puts Dece Jan. So it depends on what Dece and what Jan you're talking about, but 6750 for end of Dece, and then the long 6750 for end of Jan is a $3,000 trade.
Woo.
So it's a pretty expensive hedge, depending on what you have here in ES. But yeah, I might just go directly to SPY. Might make your life a little easier. You could go Feb Jan. 6650 would be 665 put in SPY. Long Feb, short Jan. About a $400, $500 hedge. Super liquid markets. Just depends on how much actual monetary value you have outlaid relative to delta, but SPY might be the way I would go, because then you can adjust this in $500 increments if you wanted to scale up with these contracts. Let's see. Yeah, XAS buyout by Abbott Labs. Last question here. When setting up a calendar, are you looking for any particular delta, or are you looking more at trend and support resistance? Yeah, I don't look at any particular delta with calendars necessarily, but my setup is usually the same in the sense that if I'm doing a long Feb, short Jan, I like to set my short option up near the expected move on the upside or downside. So you lean a little bit directional, not too crazy. The reason why I like to set it up with the short option is because if I'm at the expected move in Jan, I know I'll be inside the expected move in Feb, which will help me maintain some of that value. So the 655 to the downside in SPY is an example, or to the upside, the 700 or 695, something like right around the expected move for the short option, and then buying the same option in the longer term. But
agree.
Similar.
It's very similar, yeah. And then sometimes maybe as an additional check, might look to see if there's any moving average that kind of correlates with those, and they usually do somehow or another. That's how you know moving averages aren't completely something you just throw out the window. A lot of times they do correlate with, especially if they do correlate with sort of our expected move and moving average. Bingo, I'm all in.
Yeah. Brian, if SPX is too big of a product, you could use SPY. XSP is 10 times smaller than SPX. Liquidity.
And an index product, so it's cash settled.
Yep, you still get that cash settled 1256 treatment. So I would use XSP if you wanted to do that.
Have actually gotten better in XSP. They used to be a little wide.
Yeah. XSP for me is just too much buying power. So the same trade, the 66.71, $1,400 in premium, so 3 times as much, but 10 times more buying power. So $11,000 in buying power for XSP, but this is certainly a smaller trade, and it's the same sort of idea. That's it. We're out of time. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. We have a lot more content coming your way on the YouTube channel as well as tastylive.com, so stay tuned for that. And we will see you same time, same place, 11 a.m. Central tomorrow. Have a great rest of your trading day. We'll see you then. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Every front porch got a beat, yeah, it's homemade, no drama. To see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, whirl out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam, out here raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday, a little bit of a mixed bag, if you will, a little bit of a choppy market, but we got more volatility overnight. We kind of been talking about how volatile this market has been, opening up, opening down, but not really going anywhere. We got FOMC later this week, so I'm excited for it. But before we get into everything today, how's everybody doing? My brother Gus, how are we doing today?
Doing good. Yeah, as you know, I am nursing a nosebleed.
Yes.
Just as a PSA to everybody watching, there is a non-zero chance, and in fact, a rather sizable chance that I might have to put a funny piece of tissue in my nose in the middle of this stream. So just nobody laugh at me. This is a judgment-free zone. Immediately.
Immediately.
But yeah, no, I'm feeling good. Yeah, we kind of got a little fake out from the market today. I was complaining to you, quickly off open that we keep doing this thing where we open one way and then immediately just shoot in the other. And it looked like we were going to open red and then immediately move green today. But since things have cooled off a little bit, we've opened red and stayed red. Looking at from where we're at now, and yeah, as you said, it feels volatile. And it just really isn't. I mean, we are starting to actually see a little bit of a slide, a break out of this range that we've been in for the last, 2 weeks on the S&Ps. VIX climbing a little bit. VIX currently at 1738. So, yeah, VIX a little bit elevated, but nothing crazy, nothing that's making me want to get short VIX right now. That's for sure. So yeah, interesting mixed bag we got today.
It really is a mixed bag. Donna, we hope you're doing well. Let us know what you've been kind of getting into, what you're looking at, what you're managing. Right now, market or micros at least, the NASDAQ market is trading around 25,100. We have FOMC later this week. I wonder if we're going to have a directional market until FOMC, so we'll see. We got a couple days until then, but FOMC Thursday, so we have something to look forward to, some type of binary event, because I'm not going to be looking at anything other than that. This is the last full week of the trading week, and then we got Christmas next week. It'll be a half day, and then no trading hours, I think, on Christmas, and then it's going to be a little bit of a weird week with New Year's, too, so last full trading week with FOMC in the last week. It's only right, I guess.
Yeah, it is. Yeah, and Santa Claus rally. Hopefully,
little Santa rally
for us here soon. I could certainly use it with my current portfolio allocation here. But yeah. Oh, also. Random here. This is just jumping out at me for the first time today, even though I've probably looked at it 10 times. But Tilray is flying. Can anybody tell me why Tilray is flying? I had no idea that this was going on. If anybody has intel, it would be much appreciated.
Thing is, Tilray is pretty high right now.
Whatever happened to Fetty Wap? I'm just happy somebody caught the reference.
Yeah, me too. Especially in the chat. Pleased. Yeah. I don't know what's happened to him.
Here's a rap deep cut for you guys. Did you know that Finetto by Chief Keef is actually like a diss at Fetty Wap?
Oh no, I didn't know.
Yeah, Fetty Wap called himself Zoo, and so I can't speak the chorus. But yeah, when he's saying who is you to the zoo, he's saying he doesn't know who Fetty Wap is. What? And when he says I'm gonna shoot New Jersey up, that's also in reference to Fetty Wap.
Oh.
Yeah.
Yo, no, that's actually huge. Anybody in our generation, that's huge. I mean, college, Benito, bro, don't even get me started.
Yeah.
Couple floors went down, but you can jump into the Tasty Trade platform, see what the market's been looking like over here. With that being said,
Donna, you're long silver? Yeah, no kidding. I bet you're sitting pretty on that. Congratulations to you.
Yeah, let us know whenever you're getting out of silver then, because it must have been a great long. I recognize those words. You were speaking, but I recognize none of them. 1738. No, that's the finito.
I like your funny words, Magic Man.
With that being said, got to throw a little bit of pop culture in there.
Yeah.
But with that being said, we actually got out of these QQQ call spreads today. That pop off the open, I was like, I'm good. I'm good. I'll take it off at break even. So we had one that we got in a little bit early, and then we sold another one. So one was kind of making money, the other one was losing money. Then we sold off a little bit, and then we were kind of able to squeeze out $20 off of 2 trades. So all of that for 3 weeks was kind of a waste of time. No, it's not a waste of time, but we were able to squeeze out of that and hedge that position. So ended up taking QQQ off, but mainly just because of all the uncertainty that's surrounding FOMC on Thursday. And then I thought to myself too, it's like, this was a get out of jail free card, right? One of those strikes was so far in the money. So with the market finally pulling back a little bit for me, I wouldn't be able to sit with myself if the market ripped to the upside come FOMC. So that's why I decided to make that call, because I could sit with my emotions a little bit better. So that's all that's been sticking out to me for today, at least. We had taken a couple stabs at the micros that we'll get into here in a moment, but we can take a quick look at VIX. See the 1738, see where we're at now.
Yeah, and thank you, Tape Dozy and Donna, for the Trump legislation news. That's why Tilray's moving. I figured it had to be because of that, the federal legalization stuff. Now that's what was knocking it down in the first place, was that it looked like things were looking a little bearish on that front. But yeah, I suppose that's officially the death of my Tilray shorts that I took pre-split. My 50-cent strike still Tilray puts are gone. Oh well.
I gotcha.
Tiny trade.
Hey, we got more coming down the pipeline though. Let's check out Meta real quick before we shift gears. Meta, Apple, not really done anything over the last couple of days, so nothing else too exciting. But let's quickly check out our watch list to see what else has been moving on us.
Yeah, I have. I picked up some Zillow yesterday.
Okay. What is that, ZM?
Yeah, just Z.
Oh, Z.
Just Z. Yeah. through this in the account. They took a giant dive yesterday because Google announced that they're going to start trying to include real estate listings in search results.
Okay.
And I just don't believe that that's actually going to be like a tangible enough hit to Zillow. First of all, that's a long-term thing. They're not even thinking about doing this immediately in the medium term. But beyond that, I don't know that it could really make that much of a hit. And here's why I think that is because I remember when Google Shopping came out and it was supposed to hurt Amazon and it didn't. I remember when YouTube Reels was supposed to hurt TikTok and it did not. I remember, there's all these times.
Remember Threads? Threads is supposed to.
Gemini is supposed to overrun ChatGPT, and it's got a 1% market share. So I just feel like time and time again, Google tries to do these earth-shattering things with their search results and how they're framing things, and everybody thinks the sky is falling because Google is doing it. But I don't really think it's going to tangibly impact Zillow all that much having these in there. So yeah, that's already up a little bit for me. And then additionally, today I put on. What did I put on today? Coreweave. Yes.
A little bit of Coreweave.
Yeah, finally scooping some Coreweave, a favorite of our very own. CRWV.
CRWV.
Yeah, a personal favorite of our very own Jamal Chandler. But yeah, I just think that this has gotten to be a little bit oversold at this point. I was really afraid to get involved with Coreweave for this entire time. I've been sitting on my hands, just watching it, just because there was so much hype involved with it. And it's the same thing I was talking about yesterday, where at what price does this switch from hype into actually substantiated and something that maybe is worth a buy? And I feel like Coreweave has crossed that threshold. There's pretty good technical resistance in this like 64 to 67 range. So we, I feel like this is the spot where I want to try to take a shot at Coreweave. Hindsight being what it is, I probably should have waited until EOD today to enter. I took this pretty much right off open, but I have some time, 122 DTE on these. So yeah, finally taking a stab at some Coreweave, what's Coreweave even? Are they quantum? Are they AI? Are they a little bit of both? I can't ever keep track.
Well, that's Jamal, man.
Which buzzword is this company?
Jamal might be on the board, to be honest.
No kidding.
Google starts and abandons projects with glee. That's what happens when you got a ton of disposable income or disposable capital that you can just throw at projects, and if it doesn't pan out, you just brush it under the rug. So when you're a company like that, hey, you can throw anything at the wall, see what sticks.
Yeah, and how hard could it really be for them, too? I mean, all they need is, you just need to be able to get into the, what's it called? The CMS, I think, is where they, keep all of the, listings. That's, the undercarriage of how home listings work. All they would need is CMS access nationally, and I'm pretty sure that they could do that all fairly easily.
Do you hate Google's move in trying to put their hands in there? I feel like opportunity cost for them.
No, I don't hate it for Google at all.
Yeah.
I think it makes a ton of sense for Google to try this, and yeah, I honestly think it's going to be fairly low cost for them to try to integrate. But at the same time, though, is it just going to redirect you to Zillow? Because I think it might. Because that's what Google Shopping is, right? Google Shopping is supposed to be this big disruptor, but really it just winds up sending you to Amazon or sending you to Zappos or wherever.
Hey, Google, don't get binged by Zoom or by Zillow.
Yeah.
So
is Zappos still around, by the way?
Zappos. Haven't heard that name in a long time.
They were public for a while.
Haven't heard it in a while. ZAPPOS?
Yeah. Used to, I'm not sure. The Family Guy episode where they mail Tom Cruise back in the Zappos box is really funny, if anybody can relate to that. Unemployment figures, maybe. Yeah, I know. We got jobs numbers coming too, right?
Yeah, I had the schedule right here, actually. If I'm not mistaken, we have some CPI. Let me pull this up. So, over here, so today, an hour before the bell, we had our average hourly earnings, right? So some of these red folder events, it's like, is this going to be important to you? Who knows? Who knows if the market's even going to have a reaction from some of these other little events that goes on whenever you look at these economic calendars? But it's nice to be aware of them. And depending on where you're looking at, sometimes they'll color code them depending on what the folder is. So like the impact of that news. And so far, CPI, an hour before the bell, Thursday, if I'm not mistaken, somebody can correct me if I'm wrong, but I haven't been too ambitious this week diving into the market just because of, FOMC and some of the volatility that's going on, but some news on the economic calendar for the week.
Yeah. Donna's saying you have physical silver, which is very interesting.
I've seen a lot of people posting their physical silver on stories. Yeah.
I think that makes sense. Lots of people do.
Like the topic of conversation is silver. It's usually gold, so that's interesting.
Yeah, I thought about in 2021 or whenever they first started doing it, when Costco first started selling the bars, the physical metal bars. I don't remember when they started doing that, but silver was cheap at the time, and I thought about buying a silver bar just to have and that would have been a hilarious investment at this point. It's probably 4x since then.
No, with that being said, we can jump over to the TradingView platform, see what's been going on over here. We got in a trade a few moments ago. but we'll break down the couple of the trades that we did take so far today. Just wanted to take a stab at this one near this value area low because we swept this morning low. And this morning, we got a response off that value area low. I got a question the other day. Somebody asked, like, how do you know if the market's going to respond to a value area or a high volume node, whatever you want to call it? And I'm just like, you don't.
You don't. you wait and see if it does.
You don't. Yeah, you don't. And you just see how the market responds. If the market starts to disrespect one of your levels like it's doing here all day, I mean, I'm not, like, after I recognize it, I'm not touching it. You know, if you can get a clear read on that, you know, execute your setup. But if the market isn't acknowledging that level to the level that I would want it to where I get enough clarity to gain enough conviction in the trade, then I'll take the trade. But if I can't gain the conviction, then I won't. And today was a pretty good example because this value area high, we got a lot of choppiness. And let's just go ahead and break down some of these trades. But also, let me put in this stop loss because this market's really weak.
I was going to say.
And it's nice that
you're dwindling over there.
It's nice that the market's moving, but the market's super weak right now. So, hold on, maybe we can just watch this together. This is a 15-second chart, if anybody is wondering. That's why it's going a little, you know. And look, this is what we're going to do here, because if the market can hold at the value area low, I'll stop out on 2 contracts if the market holds. But first, what I'm going to do, just in case the market dumps on me too fast, is just put in a floating stop loss, sell 1 stop. I just like to have that in there just in case right when I'm adding to the market just like yips to the downside and I just not quick enough and there's a little bit of latency sometimes. Where does that stop? It's not populating.
What are you looking for?
Seeing if the stop was oh, there it is.
Oh, yeah.
It's a little
delayed.
delayed. There we go.
I was going to say, I thought I saw it.
But no, if we were going to come back down to this value area low, sometimes it'll do another kind of similar fake out move like it did on today's kind of morning action. Sometimes those will give you opportunities to add to the position, but you got to be careful because if you don't want to add twice the size and now you're getting stopped out on twice the size without controlling that risk. But let's keep an eye on this because I don't want to put the stop too close to here. Like we could risk the 5 to 10 points. But we could also add to this position. And it's looking attractive just because this has been beaten down all hour. We'll watch it together, though. We don't know what's gonna go on here. But if we don't get the opportunity to add to, we're going to sell this contract right up here. So we'll put a sell limit over here around these swing highs. You'll notice like targeting the swing highs gives you nice structure to kind of form your trade. And we'll touch on that here on this first trade that we took today. Out of the gate, Gus. I mean, the market just breaks out to the upside. I'm like, yo, what is going on with this market? So we break out to the upside. I'm thinking, okay, we might be shifting from balance to imbalance. And if that's the case, if we're shifting from balance to imbalance, maybe we could get a directional move to the upside. But to get some decent risk to reward, it's like maybe we can get a pullback closer to that value area high to get a better risk to reward, just in case it keeps dumping on us so that we can maybe stop out on 5 points, maybe 10 points, maybe 15 points, but not like a 50-point range. So the market pulls back to the value area high. I look to get long. I get wicked out at the bottom, and then the market rips. I'm sitting there like this. I look over at Gus to my right, and I'm just like, brother, what is going on with this market? So anyway, stop out of that position. And then we had one more over here. This was another break-even trade. It was one where I got in and just immediately got out. So there was really not much of a trade there. Was looking to see if this would act as a level of support. But when the weakness came through, we just scratched that one. But those were the 2 trades today. Honestly, like I wish it could have been a little bit more exciting, but it really is that straightforward. Like I thought the market was going to shift from bounce to imbalance, get a pullback to the value area high, maybe get some better risk to reward, and just to give a little bit of a better visual, right? So this is balance, and the market can tend to be a little bit more directional outside of here. So if we're trading inside of here and you're looking to get long to seek new value, this is where a trade can kind of invalidate your trading thesis, if you will. Not too much excitement, though.
Absolutely.
That's what we got on the day.
Got a solid arrow chart going here. Nice and drawn.
This is a very ugly chart for the day. Very choppy. Hard to get a clear. Honestly, I call these charts like, hey, yo. All I'm saying is, if you get caught in this price action, your brokers are going to love you. That's all I got to say. Look, I'm going to keep it a buck, but let's be real. When the market is super, super choppy, you're going to take 1,000 paper cuts and die by, what is it? Die by 1,000. Death by 1,000 cuts. There we go.
Okay.
Death by 1,000 cuts.
But saying die by, I was like,
die by 1,000 cuts. Death by 1,000 cuts. There we
go. Edward went through all stages of grief here with silver in 3 messages. So sell silver, No, ... It's the new BTC ...
Said stop is a 4-letter word, Earl. Frank Walsh will throw hands. You're right. Let me get that stop in there. Hey, maybe we can trail this stop live.
Thank you for the kind words. Lazy pun. I apologize if my pronunciation is not astute on that one. Donna's saying, don't get contrary yet on silver. Yeah, okay. The one with all the physical silver is suddenly saying, keep on buying silver. Okay.
Who do you work for?
I'm just hacking on you, Donna. That trade is a juggernaut upwards that can run you over like a 10-ton truck. Yes, absolutely.
What is silver?
With this price action that we've seen, I am just too scared to get contrarian. I tried to do it twice with silver already. I'm done. 2 strikes, I'm out. I might do it again. Who wants to, maybe not.
Who wants to be the hero?
We'll see. But there might be a point where I feel like I need to get short silver, but it's definitely not now. I would like some kind of confirmed anything to the downside before I start doing that. And even just 3 days ago on Friday, we got a confirmed, bearish engulfing on silver, and it didn't matter one single iota. It just rips back to the upside. So, it legit looks like Palantir. It looks like a Palantir chart. It looks like a 2020 Peloton chart. Are you buying and selling the ETF or selling options and buying back? Options are the vehicle. When I've tried to do this before, I think both were short call spreads. Both of the silver trades that I tried to put on. But yes, I use SLV specifically as my trading vehicle. 15-second charts. Yeah, Errol likes to.
It helps you get a little tactical, kind of.
Yeah,
really snag.
Well, especially if you're trading on 10-minute time frames.
It looks
15-second candles make a lot of sense.
It looks crazy. It looks super high, but you stalk the market for a long, long time, and then you gotta lock in for the execution that lasts maybe 5 minutes, but you have to be very technical about it or you'll mess it up.
I think it's totally sensible. My only complaint is when I look over and you got a giant red candle in your chart. I'm like, what the hell are you looking at? And it's really just $1 on the NASDAQ. But you're.
To that point though, risk to reward is everything, and I think it kind of shines a light on percentages and probabilities all the time because people talk about 8 to 10% on the market over the year. That's a great return, but a lot of times, it's big banks, institutions, so that risk to reward kind of works out. And then on a smaller time frame, it's almost like you're playing the game, but zoomed in, but everything is the same and the risk to reward still pans out. So although you might snag on a smaller time frame, maybe if it's 20 points or 30 points, the risk will decrease a little bit, but those red candles will catch you off guard. And then you go to the 1 minute or 5 minute chart and you're like, beep. You know what I mean? It's barely even pulled back.
Yeah. Yeah, and like I said, if your planned time to be in your trades is an hour at the longest, 15-second candles can make a lot of sense. Everything's only valid on the time frames you
follow. One thing that I found though, trading around value areas on a smaller time frame, I don't know, if there are higher frequency trading that's going on or whatever, but they will snatch liquidity stupid fast. You won't even if you even look here on MNQ, no joke, they'll snatch the liquidity so fast if you're not on the trigger.
Let me float this one to you.
Yeah,
Do you think that we are seeing more algorithmic, more high-frequency trading now that the ability to build these things is becoming progressively more available to the average person with AI?
Yes, more, but I think they're all shitty though. Honestly,
Sure.
I think they're all going to be so. Yeah, there might be more, but it's not that. I don't think it'll make too much of a difference. I think they're going to be pretty shitty algorithms for the most part because most are.
Yeah.
Yeah. Most are.
Most are.
And then if you have good ones, you're probably working with Goldman, Morgan Stanley, those big banks, maybe some other private funds, whatever. But for the most part. Wait, what was that? Was that the question?
Yeah, that was basically the question, yeah.
Yeah. I don't know though. But that's what I would think. I've seen some younger guys in high school getting into quant trading a lot. So fascinating though.
I think vibe coding is making this stuff a lot more accessible than you're giving it credit for. I think I don't know. It depends on the depth of what we're talking about as well. I think that pretty much anybody has the capability now in the age of AI to build something that focuses on one stock or index and on one set of criteria and makes trades on that thing. As far as a market-wide thing that's doing scans every millisecond, finding the 10-cent spots on random assets you've never heard of. I think all that stuff is still reserved for the ruling class, shall we say?
That's a great point. Maybe I'm discrediting it a little bit.
And I'm not sure.
It might be. That might be true though.
It's an interesting topic of discussion.
Absolutely.
And I think that we're going to inevitably, regardless of where it's at right now, see a great rise in prominence of these sort of automated trading strategies.
Yeah, great point.
It makes me curious. It makes me curious about a lot of things, about how people are going to trade these things. Obviously, retail has a lot of power now. Like, I envision a situation where, and I'm going to really oversimplify here just to keep everything easy, but, everybody says, okay, model, if you see a cup and handle, buy it to the upside.
Yeah.
And then enough people do that such that all of a sudden, there's much bigger breakouts on these things because a bunch of retail traders have algorithms trading their own small portfolio and moving things around. It's interesting. And that's been happening in market psychology forever, right? Like patterns are kind of a self-fulfilling prophecy because people know to look for them and trade accordingly, which can just cause them to happen. But I think with algorithms, it might become even more pronounced.
Quick question.
What DTE are your options? If that was in reference to silver, I don't have anything open on silver currently. Sorry.
What are your thoughts? Markets being open 24/7. That's been going around a lot lately. I think they were bringing out more headlines, I think last night about it, but the markets, you're going to be able to, trade through the night. What came to my mind was, during New York session, what's kind of nice is you can it's very predictable when most of the volume is going to be coming through the market, right? First 2 hours, around in the afternoon as well, we get a lot more volume. I'm wondering if this is going to spread the volume a little bit more thin throughout the 24 hours with.
Oh, yeah.
And I'm just curious how the actual effects of that's going to be.
I mean, I think it definitely would. I think it would it would become the way that like polymarket or these prediction markets are now, where it's just because the reason there's so much volume every morning is because a lot of information comes in the time from
which creates a lot of opportunity
since it closed last. Yes,
predictable opportunity.
Yes, and so lots of people want to dive in right away. But if that closure didn't happen, then the volume would just spike whenever the event happens, and also just for each thing as it happens. It wouldn't be this market-wide spike in volatility. It would be Microsoft news breaks at 5 p.m., Microsoft moves, and then Meta news breaks at 7 and Meta moves then. So yeah, I absolutely think it would spread out the value a little bit. My opinions on it as a whole, I don't think we need it, but I will say I have come around a little bit to I don't think it would hurt us very much either. That was sort of my initial thing, was that I think this might wind up hurting people more than it helps having access to these markets all the time. But I don't really think so anymore. I think if the big moves are going to happen, they can happen after market, they can happen pre-market, and you're still in just the same bad boat that you would have been in, unless you're one of the lucky few who can somehow get a break-even fill when the stock's about to open $10 lower because somebody left an order sitting on the chain. So yeah, holistically, I kind of think it would be zero sum. I think we should do this gradually if we're going to do it, just in case any unexpected things are going to pop up. I don't know that we should necessarily go from we trade for less than a third of the day every day straight to we trade for all 24 hours of the day. I feel like maybe we go 12 hours first, see how that feels, and move from there. I don't know that we need to go straight to 24, but I don't necessarily have a problem with it.
No, I hear you. I don't necessarily actually.
I don't know. It is nice having everything kind of constrained and knowing when you need to be at your computer and those kinds of things. And anything can happen. It could be 7 p.m. and you're at the bar watching football and suddenly some giant catalyst happens that's going to murder your portfolio.
Right. That's what I was thinking. I was just thinking about the overnight risk. Right. I mean, when you're trading intraday, you don't have to worry about overnight risk. Right. You're actively monitoring your position. We're all actively monitoring the position right now, so we can get out if we need to. But that overnight risk, especially for a lot of swing traders, that's what I kind of think of. Especially if I was a swing trader, that overnight risk, there's even more uncertainty, overnight. So I just think, how is that going to pan out? Maybe it's better. Maybe you can manage your positions a little bit quicker, a little bit more efficiently because of the extended hours.
Well, yeah,
double-edged sword. You know what I mean?
Well, it gives you time to process things too. I think, and make a plan. Right. For instance, let's take the most extreme situation possible. The U.S. gets nuked, okay, by a foreign power. All right, so let's say it's 7 p.m. and some city far away in the United States gets nuked. Okay, if the market is open 24 hours, you have to right there in that moment be thinking about what you're going to do with every single position in your portfolio immediately and do it because you're losing money right now, brother, because everybody else is selling. Whereas with the standard market, the way that we have it now, that would happen, and you would have you'd have the rest of the evening and the next morning to prepare and think about what your highest priorities are and what you're going to try to do off open. And I think that just creates a better environment for everybody. Not to mention, the market closing can do a lot in cases of giant crashes happening. We halt for a reason, because after we halt, people generally tend to chill out a little bit, or the government resolves whatever they need to and we're able to chill out. And I think that panic selling could really compound on itself if there's a 24-hour market.
Great angle. Yeah.
I don't like the 24-hour. I also like the ability to not think about what's going on. Yes, that's true as well. From a mental health, trader psychology perspective, I do think 24-hour.
I would maybe give up if I went to. Jason, don't ever let me hear those words coming out of you. Come on, man. Give up. What is that? Come on. No, I'm just playing, but I don't know. We'll see if they actually go through with it. It's funny to hear a lot of the newer generation's opinions on it. I'm like looking at a bunch of 18, 19, 20, and 21-year-olds talking about the market is extended. I'm just like, this is lit. Like, we have a massive 18, 19-year-olds just talking about Wall Street 24/7. So,
yeah. And I suppose it would be very easy to figure out if there are 24-hour markets now, right? Do people, or is there higher risk of ruin in those markets now? We could figure that out like, empirically pretty easily, I think, like crypto futures, whatever else. But
as we wrap on today, we're going to move the stop loss up just beneath these lows, just because we've already almost went about 98% of the way there. And this isn't a position that we should even be taking $1 loss on once you get to 90% of the way there. So with that being said, if we pull back, it'll be a little disappointing if we get stopped out. At least we got to cover some of the commissions on this. But we're going to continue to pay attention to this value area low and see how price responds. Sometimes we get stopped out. We can find a re-entry. We don't have to either. Maybe we can just sit on our hands, but we can sit comfortable knowing that the trade is managed and we have our stops and limit orders in. Use your stops, signed by Frank Walsh. Anything else top of mind before we wrap for the day?
Yeah, no, nothing else top of mind. I guess Zach Parker makes a great point here. Would options be 24 hours as well? That would be a terrible idea, and liquidity would become a huge issue, IMO. That's a great point. And also, when do they expire? Is it 11:59 p.m.? what does that become?
Yeah, that's actually very interesting. Yeah. A lot of questions arise with these new.
Yeah, and then could you? Yeah, I don't even. You put on a 0 DTE. You put on a 0 DTE at like 10 p.m., but I guess like
never expires
in the morning, but it doesn't expire.
It never expires.
Or maybe it cuts off at 5 p.m. and you can put on a 0 DTE at 6 p.m. that actually expires at 5 p.m. the next day. Wow.
We'll see what we get. Get. Are you guys scalping or day trading M&Q live? If so, this is awesome. Yes, we are scalping live. Scalping is a form of day trading. Day trading is whenever you get in a position and out the same day. Swing trading is whenever you get in a position, get out the next day, or the next few days, or the next day after that. So you just got to hold for one night, but everybody kind of, has their kind of different definition for scalping. It might be a minute, 5 minutes, but scalping is a form of day trading. With that being said, we are running out of time here. Thanks for taking the time to hang out with us. We'll see how the markets digest into the rest of this week. It is the last full week of the trading week, so let's manage our positions and have a great Christmas next week. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I got a good feeling. I got a good
We're back. It's still Tuesday, December 16th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, strap in. Tough day.
It is a tough day. How you managing over there? You doing all right?
Surviving. Not thriving, but surviving.
Yeah.
Does
that have to do with the market, or does it have to do with, I mean, I know you lost somebody recently. And by lost somebody, I mean a player on one of your teams. We didn't talk about Pete Alonso. How you doing? You okay?
No.
Just want to check in with you.
Not doing well at all. It's been tough. Makes no sense at all. Good thing we signed a second baseman to play first base for us this year for $20 million when we could have had Pete Alonso for 30.
Yeah. I mean, the home runs are fun and all, but I mean, you'll be all right, I think.
It's more about the spirit, but the really disappointing thing from my view is that it means that the Mets don't see a path to competing in 2026, and then there's for sure a lockout in 2027. So why even bother getting anyone on the books until you really see a window of contention post 2028? It's disappointing knowing that I'm only going to have the Knicks for the next few years.
I'm sure that's something you could bet on prediction markets, whether there'll be a lockout in 2027 in baseball, I'm sure.
Oh, yeah. I mean, for sure. It's happening. The Dodgers have over $1 billion in deferred contract money right now after their signing of Edwin Diaz.
Yeah. Wait, they did? I didn't know that. Oh, yeah.
No, the Mets lost him too.
I did know that, actually. I did see that.
Yeah. Fun time in New York sports. Great times. Well, hey, the Knicks are playing in the NBA championship tonight, sponsored by Emirates. Classic NBA sponsor.
I didn't even know. I mean, I know about that. Like, that is a thing, the NBA cut, but I didn't really realize it was going on like that. I really haven't paid attention to NBA at all.
It's actually a better brand of basketball during the middle of the season, which is, hear me out, players. Regular season basketball isn't a great product in my view. It's good enough. Playoff basketball is fantastic. The NBA Cup is more like playoff basketball, the way the players are putting some effort into it and the game style changes.
Yeah, I mean, it was the same thing the last couple of years, however long they've been doing it. I just personally haven't really paid much attention at all. Usually I have tried to use fantasy basketball as a way to stay engaged, and I didn't do it this year. I'm just tired of the amount. And again, I know that they, still to some degree manage players, and it's just a little hard to kind of stay engaged in the sport when, it's like somebody played 2 games in a row and then they're out in this different game because of management. I just can't do it. So as a result, I haven't paid much attention.
I hear you. I have NBA League Pass. It's $15 a month. Last night, got to enjoy an awesome game between the Nuggets and the Rockets. So it's worth every penny. And then plus I got to see Shea and Wemby go off the other night. There's some good up and coming talent.
Yeah, Wemby.
He's a free. He's a freak. They're playing tonight against the Knicks. I'm really looking forward to that. A good test for my Knicks. Anyway, Jamal, we're vamping here. It's a post NFP world this Tuesday on Futures Power Hour because, of course, we had 2 jobs reports released this morning, or more like 1.5. The market's saying that we're going to get rate cuts for bad reasons here. Oh gosh, that's the kind of thing that the stock market doesn't like, and that's exactly what we're seeing here play out. The non-farm payrolls numbers from this morning were okay, I guess, if you're rooting for rate cuts. Well, for November, 64,000 jobs added versus 50K expected, but it's the October NFP print of minus 105K that raises an eyebrow. The unemployment rate goes up to 4.6%. Labor force participation rate is 62.5%. Relative to a year ago, there's north of 720,000 more people who are unemployed in the economy. Wage growth was a little bit weaker. I don't think there's anything to like here. So while we see rate cut odds pull forward for, the first few months of 2026, and certainly for the whole year of 2026, it's not for the reasons you want to see, right? It's for the bad reasons. It's because in its economy that's slowing down, perhaps even recession looking more likely. The distribution of job gains here, Jamal, is like really ugly. Outside of healthcare, not seeing much of anything. Healthcare added 46,000 jobs. Construction added 28,000 jobs. After that, losses all elsewhere around the economy and the labor market. So not much to like here, quite frankly. I don't see any much of a silver lining at this juncture for today's data set.
I mean, no, I don't follow the jobs report that much. I actually didn't even pay attention to the one this morning. It is kind of late, but look, I think the general consensus here is that the job market has been sort of flailing a little bit, and the real worry is if the job market is going to crack to the downside, right? I mean, look, just real talk. Like, I have a 22-year-old kid who's probably going to be entering the workforce soon, and I've tried to tell him, like, he's already attached to a job in a way, working with the university, working with the basketball team. I'm like, stay in that field if you can. Try to figure out what are ways you can stay linked to it, because in general, the consensus is that we're in a low hire, low fire job market right now. So it's kind of what it feels like. And I'm really not that surprised by these numbers this morning.
You say no hire, no fire.
Low hire, low fire.
Low hire, low fire. It's a hiring recession for sure. Jobless claims are low, even accounting for the seasonal wrinkle that the late Thanksgiving this year provided for the market. But firing is low, hiring is low. If it's tariffs, if it's AI, if it's companies just cleaning up, payroll bloat following the 2020, 2021 expansion, which, as you know, if you were an internet-facing company, so many of those companies saw payrolls balloon and subsequently have been dealing with a little bit of digestion thereafter. But yeah, so the number is 710,000 more people unemployed now versus November 2024. And most of the hiring has occurred in healthcare, which healthcare is important, super important. It's a very unproductive, relatively speaking, portion of the economy compared to tech or, mining, for example, things that provide direct economic value, even a services job, right? Healthcare does not produce more things for consumption or for really anything else, any other sector. So not to diminish the importance of the role, but it's just by productivity measures, it's at the bottom of the totem pole, Jamal. So it's an economy that's in stall right now. It's a weird economy, though, because if you look to the Atlanta Fed digested today's data and said that the economy is growing at about a 3.5% growth rate for the third quarter going into the fourth. New York Fed nowcast is still sitting at a fairly healthy 2% level. Not sure what to make of that, but it's not something the stock market likes today. And I think price action speaks above everything else.
I think it does, yeah. And look, it's almost like the market caught a little bit of wind of this yesterday heading into today. That's why I've kind of, I sort of feel like we're going to be in this situation where we see a lot of movement. Expected move for the week as of yesterday was 88 points. I'm not sure what it is currently, but I feel like we could maybe get around that or eclipse that even, but still wind up in the same place, mostly because I don't expect markets to sort of take off higher. I think we're all waiting on this, market to go higher to probably 7,000. I think a lot of us feel that way, and I just don't think we have strong enough sentiment to get us there right now.
It's interesting because we think about a lens with which we now interpret CPI data on Thursday, right? Is the labor market a little bit softer? 105K lost in October, 65 added in November, net minus 40K between the 2 months. Okay. Now we have CPI. What if it comes in hotter than expected? A labor market that's losing jobs while inflation's pushing up. That's not quite stagflation, but it certainly smells like it. And the market does not like that setup where interest rates must be pushing higher to solve an inflation quandary that will ultimately lead to a further decline in growth and drag on employment. Whether or not that's the reality we're in, the data the next few weeks, just to be clear, will be very unclear, Jamal. There's a lot of volatility within the figures themselves, even within the statisticians' note on today's NFP report. They note that there's going to be a higher degree of volatility in the readings that are here and forthcoming for the foreseeable future. So by the time we get to maybe February, when we get to the January jobs data, perhaps this will be ironed out a bit. So a market today just not really liking what it's seeing. I wouldn't say it's hating what it's seeing. I still don't see an IVR north of 20 in any of the 4 major equity indexes here on our screen. The S&P 500 is off by a little bit more than 0.5%. The NASDAQ down by 0.12. But vol hasn't really gone anywhere today. And quite frankly, as we're looking intraday for the NASDAQ, price action is starting to show some signs of improvement here with each passing handle or tick of that clock.
Yeah, I mean, we'll see. You know, we still got a few hours here, but it doesn't look good overall. The market hasn't been able to sustain a bid for the most part here, even though we're punching up a little bit here, but it's been tough. And look, we were kind of headed in this direction with regard to the economy prior to the government obviously shutting down. I mean, I felt like we were headed in this path. We saw inflation numbers kind of bumping up a little bit. We saw a little bit of weakness in the job market. We just had a couple of months there where we didn't get to see that data, and now it's manifesting itself at arguably the worst time, Chris. I mean, this is usually when we look for a little bit of positive light for the markets at the end of the year, and we're just not getting it right now. And again, we're 2 weeks away from the end of the year, so we'll see how it really unfolds. But I've definitely sort of been fixing some positions here, and I've tried to get away from longs that are in January. And again, we're coming up against a 21-day window anyway, but I've moved a lot of longs to February. That's kind of where I live there. I do have shorts that are in January. Nothing like, nothing big, I would say. Just a few names here and there that are a little bit on the higher IVR side, probably taking risks. And these are individual names for the most part. But like you said, I mean, the major indices are not high on vol, and I don't think they really should be because we're still not that far away from highs more than anything. It just seems as though I personally am trading this market like we're going to trade right around where we are right now, 68.50, with markets sort of moving around a decent amount, because I think the sentiment dictates that. A lot of people feel like we should be higher, and the data we're getting right now from the economy almost says we should be lower. And I think as a result, I think we're going to trade around the area we currently are for the rest, maybe the next week and change.
If that's the plan right now, that would buck seasonal trends, Jamal. The past, going back to 1950 in the S&P 500, yesterday was the day that stock markets tend to bottom for the remainder of the year. From yesterday henceforth, if you're looking at an average return of about 1.4% in the S&P 500 in the month of December, since 1950, about 1.32% of that comes from today onwards. So this is the bullish window for the rest of the year. Tax law selling subsides. People start to deploy capital. Also, Jamal, if you're taking profits, right, or you're tax law selling, what do you do to reestablish your position? You sell out, you collect your tax loss, benefit, and then you just buy calls. So you got a better structure for your ultimate position here. Whether or not that window's opening up, NASDAQ may be turning positive soon, only down by 0.08%. 3 consecutive 4-hour green candles here, perhaps. Breath today is terrible, though. The only things that are in positive territory, GDX and GDXJ right now. Everything else is red. 23 out of 25 in red, led lower by oil services, XOP, OIH, XLE, which when we go over to oil and natural gas, I don't think that's going to surprise anyone. And reassessing prior is absolutely necessary in the energy names. But beyond there, you're looking at telecom, home construction, anything little rate sensitive is softer in the session. A little surprised that we're seeing the Russell lead to the downside today, Jamal. Is that shocking you, or is this a much needed correction after almost an improbable lead higher by small caps in recent days.
I don't know how much you can really read into it. I think it's just one of those. I think you're right. It's just kind of more of a corrective situation, given the markets are a little bit weak. Why not sell some of the Russell that was at near-term highs? I think that's kind of what we're seeing there.
Russell has a 9 IVR. Is there anything to do here with this, or because given the time of the year that we're in, managing our book, and I know that we're doing our 12 days of trading series right now, Jamal, perhaps this is a viable topic for today. Maybe this is what's going on for today's programming. How are we handling this? Is this something that you ignore? We talk about the end of the year, how people are taking positions off, how they rebalance their portfolio. Does a 9 IVR stay away from you? Stay off your books this time of the year?
Volatility, yeah, for sure. I think these are, based on what I was saying earlier, I think one of the ways to do this is to scalp things. That's probably the best way to trade. I think a market that you think is going to kind of trade around a certain area, like I said, probably around 68.50. At least that's kind of how I feel. As far as volatility, you mentioned it earlier. I mean, none of these have a volatility above 20, and I'm really not going to force that action right now. Because again, the market that I'm talking about, and again, I'm positioned for a market to go higher, but I am not trying to be overly positioned for that sort of stance, given the way how weak things are. We're not necessarily seeing, just this overwhelmingly positive trading market, but we're seeing the volume, that's for sure. And so as a result, I think maybe you can scalp around this. For those who love to scalp, I think this is going to be a great market over the next couple of weeks, because we really are in the middle sentiment-wise. Again, there's people who feel strongly that the market should be trading higher towards the end of the year and ending on a positive note, and there's those who feel like there's really not enough to support that. So I think it's going to make a great scalpers market, but as far as trading vol, I don't feel the need to sort of position myself to try to get short vol. I would rather see if the market ends up losing it a little bit here and vol does get above those 20 IVR levels or so to be able to put in some short vol trades.
Bitcoin and Ethereum are recovering today, so perhaps there is a silver lining to the market action that we're seeing. And again, volatility here on Friday, today, you got to give me more than 13 cents for me to really feel like this is a market that's going to come unglued. Same thing for volatility futures, both in the F and the G26 contracts. This is not exactly screaming people panicking, people getting worked up. It's OPEX week, Jamal. We just had non-farm payrolls.
Yep.
The rate cuts may be coming for a bad reason, but price action wise, if I was a bear, I'd be saying, how come I'm not getting more out of this right now? Right. So I'm like trying to think of the other side of this. As someone who's long MES, who has an ES call spread that's looking for a market to move to 7,000 by the end of the year, which I suppose would put me on bad footing for our, yearly predictions for where the market would close, because my market close for 2026 was 68.50 in ES, not in the futures.
Look at you.
It was.
Well, you're right here.
Well, this is ESH6 and SPX. That's what we were basing on at 67.91 right now.
Okay. Yeah. For SPX. But you did say you thought of your idea based off of ES, and there you are.
Well, it's working out well enough, but I need that to work a little bit better. I'm just not seeing anything here today that says I need to take off the positions that I have on right now in stocks that are aimed for trading with DTE still in 2025. But, the question that we're asking ourselves a lot on network today, because of this 12 days of trading series that we're doing, and again, go to tastytrade.com/12 days. What's a portfolio reset, and why do traders do it to start the year? For me personally, I'm going to be working part of next week. I'm going to be working part of the week after. So I just came back from paternity leave, Jamal. Who am I to take vacation time after being gone for 2 months? But, so it's a different story for me per se than it usually is other years. If I was off my typical week of Christmas, week of New Year's, anything that I'd be taking profit on this week, even if it was a setup where I'd be interested in rolling it, unless I could execute it in something like a 60 or 70 day cycle with proper pricing, it's probably not something I'm revisiting until I come back to work full time come start of 2026, just because I don't want to deal with that agita of, okay, I put something in at 45, I'm now gone for the next 16 days. All of a sudden, this is a position that's at 29 DTE.
Yeah.
And I have not looked at the market or absorbed what's happened over the past 2 weeks. It's just now a week away from expiration before I got to roll. That doesn't feel like I have enough time to work with and actually digest things for my own comfort level.
Well, as you mentioned that, I mean, and this is a really good conversation, by the way. I think there's 3 different animals here to take a look at. One, you mentioned the idea of positioning and positions that you have on that are certain days period, certain within a certain time period, and one that you would eventually have to think about. Again, we're talking about a short vol position that's probably in a 45-day window that if you ended up taking time off, what are you going to do? And you're analyzing that ahead of time. And it sounds like you said you would figure out a way to roll or do something with that position so that you don't come back to it and it's in an area where you don't necessarily like. I think that's one thing to think about, right? Like for those who are taking time off, you definitely need to look through your portfolio probably this week for sure. And figure out a way to roll positions or close through the end of the year to next year, January, February, whatever that may be. So I think that's one thing. Then I think there's portfolios, just those who literally think of things as a year encapsulated, right? Like 2025, I had this, way of trading. And again, this is not me because I don't really do. Outside of I do a lot of the first thing, and I actually did a lot of that today. I positioned some things to February. I got most of my longs in February. I do still have some January positions. Most of those are shorts. And I feel like the market right now is going to trade around 68.50. That's kind of my thesis. And if it goes higher, perfect. I got longs for that too. Cool. I think the other thing to analyze is, and this is what I thought when I first saw the 12 days question. What do you do at the end of the year? And I'd pose that to you. Like, is there a situation where you close things at the end of the year because it's the end of 2025 and you're starting off 2026 in a different way with a new thesis, with a new type of idea? Personally, I don't do that. I actually just continue to trade as normal. I don't think about the fact that, sure, I know that we're coming to the end of the year, but I don't think like I have to change trades because a new year is starting and January 1 is completely different. I actually don't think about it like that at all. I think for right now, and as far as I know, there's 2 weeks away to January 1 or so, a little more. We're still in a situation where inflation, like you said, inflation is high, job markets are starting to struggle, AI is still the biggest thing going on, but there's questions around, like all those themes are still the same, and I don't think those things are changing Jan 1. So therefore, my trading positions and assumptions haven't changed yet. So I don't change with just Jan 1, I change based on what's going on. I'd like to know what you think.
Yeah, I don't think I really have, it depends, right? When I was more of less of an options trader, less of a futures trader, and I was trading more spot FX, more single stocks, I really did think of it year to year to year and segment it out. Positions I'm putting on in December, that's a 2025 trade, even if it expires in January or early February, right? So like that's a trading decision that was made this year, not next year, even though it's a position that will be cashed in or closed out for a loss in 2026. So I think of it, I'm viewing it more on like what's my rolling 1 month performance, what's my rolling 3 month performance, what's my rolling year performance, as opposed to just simple, this was my fiscal trading year, so to speak. Jamal, this is a topic that I know that we covered a bunch here today on network, but it's part of our 12-day series. Guys, we can just throw this up quickly on screen. It's the holiday special that we're doing with our friends at tastytrade. It's their 12 days of trading email series. Nudge, nudge, production. There we go. Their 12 days of trading email series is a daily email with trader-ready topics, easy reads, good reminders as we head into next year. You can opt in now. It started on December 8th. It's running through December 23rd. tastytrade.com/12 days. Jamal, I know it's a question that I've been asking a lot to you, to Nick, to Tony. It's interesting to see, the people who come from trading as opposed to like investing, so to speak. Mm-hmm. They don't really care about the end of the year.
No,
it's just another expiration cycle.
No, it's not. Now, I mean, obviously there's something to be said for those who are looking for tax law situations. I actually still never personally thought about that, and maybe I've missed out on some things in that way. But I've never really cared about the end of the year in terms of how I've traded or how I'm closing things, or, I don't know. I don't think about it in that way at all.
We turn away from stocks here, 0.1% on the NASDAQ, 0.5% on the S&P. Dow, Russell off by 0.75%. Nothing really has changed here over the course of the session. So far, volatility remains mum. We have come off the session highs. It's been chopping around 1850, 1860 or so for the better part of the last 5 hours now, getting close to it. Not sure there's much to write home about, but keep an eye on that vol, Jamal. I think you'd agree. That's really the tell. Why isn't it going up more if this is really a market that's so spooked, even if the sector rotation is pretty ugly today? Bonds are trading higher right now. They're not as high as they were, though, and that is one of the intricacies of today's market action, where we're not seeing this uniform, the world's falling type of response. ZB here is up to 115 and 8 ticks. It's off the high of about 115 and 16 notes, up to 112 and 15 ticks, 14 and a half, off the highs of 112 and about 22 and a half ticks. Volatility is not going anywhere, though. Notes, negative 1.1 IVR, bonds, minus 3.9 IVR, Jamal. That is exceedingly frustrating for folks who may be looking for the typical tasty type of trades, as we've frequently lamented here in recent shows. But that seems to be a constant right now. And I would question if it's not a non-farm payrolls report, if it's not a CPI report this Thursday. A look at the SCOTUS blog calendar suggests that we're going to get the tariffs now in January. What's left to wake up the bond market before now and the end of the year? And it has me questioning, looking at a trade that plays for a little bit long volatility to transpire, if that's the right thing to do, given that we're going to have to whittle off maybe 2 or even 3 weeks of time before we start to see any catalyst that can meaningfully move the bond market again.
I don't know. I think it has to be something that scares the children, honestly. And again, that idea means bonds go up because things aren't going well in the economy, I would suppose. That's the only thing I can think of. So I'm way ahead of you, my friend. I got a February trade. I got the 115, 117 call spread. I put it on late last week. And that's my play for, I don't know, chaos to ensue, maybe. I'm not sure what else possibly causes it to happen. Maybe it's not that. Maybe it's something else. But I can't speculate either way. I just know that it's more the chart that drew me to the trade, right? We've seen how bonds have fallen off more recently, and it's basically below the big bid that happened and around a little after Labor Day, I think it was, or around that time period. And it's the vol is the lowest that we've seen in a while. So why not try to see if bonds end up catching a bid here at some point in time via this call spread.
There is a level, we're looking at the 10-year yields here, right around 4.175 up to about 4.2%, where throughout the summer months it was support, throughout the fall it's been resistance. It's a mirror image, of course, of what we're looking at in the continuous contract in 10-year note futures, where it appears right around 112, you have more or less a neckline. And it's a neckline that coincided with a break of the uptrend off the lows that you have from January or so. It kind of looks toppish. That's how I'm playing for it, at least at the long end of the curve. But things change, and we always have to update our priors here, particularly as a technician, because technical analysis is definitely less science and more art. This is starting to look like something that may be trying to turn a corner of sorts. And that's fine for notes. I just need notes to turn a corner. I don't care if they go up or down. I just need them to move away from 112. But as it pertains to, say, bonds and the way that I'm approaching this market right now, if we start to see that some of this downside momentum is lost, and all of a sudden after today comes around the corner, we're peaking back into 116, there is something down here, technically speaking, in terms of a bullish falling wedge. And all of a sudden, Jamal, if we see ourselves breaking higher here and we're back above this neckline and we go back to our continuous, and all of a sudden we're trading back into the uptrend off the yearly lows, you start thinking about that data. Low vol, what does this portend to? Well, having some long exposure, like you said here, may not be the worst thing in the world. Because once we get through Thursday, there's not much to change the narrative economically. Where are we heading? Is it a recession? If rate cuts for bad reasons, best place to hide has been gold in the bond market for the past 36 years, going back to 1980. Longer than that, 46 years, going back to 1980. Yeah, I mean, I think you have to look at those trades. I think you're right. I think I need to reassess how I'm approaching this market.
And the other thing about it is it's when I put it on the 115, 117, it's risking 1 to make 1.5. Vol is always on an absolute basis really low in bonds, right? In the single digits. And so even if this just sits here, it's not going to bleed out too much as far as you losing money day to day by theta. It's not going to, destroy you that much. So that's the other reason. I mean, we've done these trades in the past before. Well, I don't need to convince you guys. You get it when you're buying call spreads or put spreads in bonds. The vol is not high. It's just a matter of if the move is going to happen. And look, we can guess on why the move eventually happens, but I mean, we don't necessarily. It just happens at some point in time in bonds. I didn't foresee the move in September, and it didn't end up happening. I didn't have anything on at the time, I don't think. But bonds make these moves at some point or another, and it's usually somewhat out of fear or something that we just don't foresee. So I figure it's a decent trade. Why not? And again, it's a low vol, low impact trade.
Thinking about the M6, the June expiry here, okay? The highs that we have in the contract history up near 113 and 20 ticks. Getting long a 113, 115 call spread with 101 days to expiry gives you a coin toss chance, 50%, but risking 1 to make 3. If you can take 50% payout bets, Jamal, and you lose 1 and you gain 3 50% of the time, that's good. you will
sure.
net be a winner,
For
right?
sure.
This is right. So I'm thinking now at 101 days, what's the bleed out here? Well, we'll call it 100 days. Max loss, this is going to cost me $5 a day. If this thing stays still or doesn't move in the direction I want, it moves lower. The buying power is a bit handy, $550 or so. But you know what? If we're thinking that things could be getting worse, this is a way to express that view. It is a long gamma trade. We want realized vol to outpace implied vol here, and we want it to move directionally. So moving up quickly with more volatility would inflate this position's value, and you could probably cash out for 50% or so profit well before expiry if that were to transpire. And again, that's just looking for a move back towards the range highs. We're not there yet. I haven't crossed that bridge myself, but a little bit more price improvement from here, Jamal. And all of a sudden, thinking bullish in the bonds at the long end of the curve, it's the way that you got to lean, which is to say that given that we're in the last 2 weeks of the year, maybe for me, unless I'm going to do something at like 101 DTE, I just stay away from this if I'm planning on closing on my book the next few weeks, because the lack of volatility is just.
Yeah, no, it's low. Like I said, I'm just looking for a directional shot. And again, it's given how it's fallen more recently, I don't know. It's kind of like pot odds. We'll see what happens.
Good. Glad I clicked on a link Nick sent me and it popped up on Microsoft Edge on the screen. That's wonderful. Thank you, Microsoft Edge. Don't use you ever. Metals are slinking around today, Jamal. Frustrating day in that regard. They were up higher. They're now off a bit still. Gold's back in a positive territory.
Frustrating day. You are hilarious.
They're not moving up in a straight line.
You just want gold to go $50 to $100 every single day, aren't you? How spoiled have we become in 2025?
Is it not too much to ask? Just like another $100 in like the next 7 sessions? Okay, so I am definitely talking my book here because I'm still sitting long that 4350, 4400 call spread. Just $50 once more. What's the worst? So, okay, yeah, I'm sticking long. I like the price action. It looks like consolidation. I hear the people in the back saying, Chris, that looks like a head and shoulders forming. Maybe, but that left shoulder is higher than the right the head. That's not how that's supposed to work out. And also, I see lower highs and also higher lows. I'm going to play this as a triangle that from bottom left to top right means continuation following a very large triangle breakout in recent months. Yeah, we have some room to the upside here still as far as I'm concerned. So gold and silver, instead of trying to be cute and saying I'm going to, people playing the gold silver ratio, I'm just a little bit more long gold than I am silver, but I'm not playing favorites. I love them both. So just the structure here is what matters, but both of these remain in uptrends and they survived a day like today when risk appetite was coming apart in stocks. It's still there in crypto. It's still there in metals.
Yeah, I agree with you. I'm playing them both long too. I'm using the ETFs to do it, but I mean, they've remained in an uptrend. Why try to fade them? They've been really strong. And again, this is not a situation where I'm like, oh, they had a great year and maybe they're going to reverse next year. Until they show me otherwise in a meaningful way, there's no reason for me to not be long them. And again, I'm long them in interesting ways and using SLV. I'm short a $5 wide put spread and long a $10 wide call spread. So I collected to get into the trade, and then GLD, I got the crab trade on. And I'm long Feb. And so that's just the way I'm going to play it. Why not?
4-hour time frame, as we spoke about yesterday on the show, multi-time frame analysis, and how I really got into this from when I first started trading, and really not just buying and selling stocks, but trying to learn more about trading itself and delving into all the literature and all the market wizards things, learning from the greats. We highlighted yesterday a 2009 conversation that Stanley Druckenmiller had with Citi's FX team, talking about why he looks at certain time frames. So like daily, he's looking for something 8 to 20 days out. Weekly, it's 8 to 20 weeks out. Monthly, 8 to 20 months out. So when you go down to a 4-hour time frame, if you're applying that 8 to 20 hour, multiple mindset here, you're really thinking about a chart setup that's giving you something, 32 hours, 8 times 4 out, 20 times 4, 80 hours out, perhaps 1 to 4 days, maybe. I point that out because the silver triangle that we're seeing play out here, which spring coiling, storing that potential energy. We want to play for the kinetic energy uncoiling. This looks like it's something that's going to resolve in the next few sessions, Jamal. With a move, if we do break out here, it would call for a return back to the high that we had north of 65 just last Friday. So should we be looking at some exposure here to the upside, maybe?
I thought about doing it on last Friday, actually, as the market was closing and it was down. That would have been a winning trade. I don't know why I didn't do it, but I don't know, man. I mean, it's always interesting to put on a long in silver and watch it go ham at some point in time.
It's so fun.
What are we targeting? 67 and change, right? 67, 68. I mean, that's clearly the next level. I think I must have said this at the time when we first pierced 60. I know I was looking for another $3 to $5. And depending on the fashion, I was looking at the possibility of a turnaround, which essentially happened last Friday. But now you're right. Now it seems to be hanging just like the week before, right? We had the big pierce through going the beginning of the month, and as much as I thought it was going to pull back, we kind of held in that range, and then boom, another leg higher, and so we're here again. I like the idea, actually.
I do too. And sometimes, Chip, you got to race. Hey, listen, being on vacation doesn't change my feelings on the metals. And at 70 DTE, what should we do? You know what we should do? We're going to do two things here. We're going to kick this out and get this position going. Hopefully we can get filled on it, because right now it says my futures pricing is theoretical, but I have something at 42 days here, which this has worked really well, but how much more can we milk out of a 55 and a half call spread? There's basically no convexity left in this here. So I prefer to get something a little bit out of the money. Incidentally, what profit will be taken here will be at risk for the next leg of this trade, and it buys us significantly more time. There's no reason to get rid of anything. I'm going to swap these out. So liquidating the first part, which worked out beautifully. Hopefully we can get filled on this next leg. I need silver exposure here, Jamal. If this doesn't get filled by the end of the show, I might just put on an SIL position until this gets filled, because this thing looks like it's about to break out. And, silver's been good. We're going to keep rolling the dice on it as long as it gives us these bullish continuation setups.
Yeah, I hear you. It's been looking good for real. It's been silver and gold have been the best trades of the year.
They've been the best trades of the year. And I think we can take a little bit of pride in the fact that we've been on it from day one before they all became in vogue recently. In any event, copper's right there with them, except today's a 1.02% loss. It's a continued consolidation above a breakout level, which is not getting a lot of traction. And that probably is a cause for concern. But it hasn't broken down just yet. And there's a lot, for whatever reason, there's so much bullish narrative out there this week about copper. I've seen stories on Business Insider and CNBC about how the inventories are running low and there's hoarding going on. And next year is going to be gigantic. Who's trying to unload a position right now, Jamal?
Yeah, right. Exactly. I don't know if I'm using that to initiate trades, but I would just say, I mean, look, I know the metals are all somewhat similar, but they're all not the same. And so if I'm in anything, I love doing gold and silver. I mean, platinum and copper, I think you got to trade at your own risk. Just depends. I liked trading copper a couple of weeks ago using a calendar call spread. That worked out well. Probably should have held on to it, but I had the 6-strike spread. Haven't had anything since then, but it might be worth exploring another one.
It's something that I'm comfortable holding on to, although, what's happening in oil today, oil and copper usually march to a similar rhythm or drumbeat, given that they're both the growth commodities that we pay attention to. Dr. Copper, black gold, they have their sensitivity to economic conditions. So the fact that oil is falling out of bed by 2.5% may be a drag on copper itself, and something we need to keep an eye on right now. Not time to panic just yet, because there's plenty of time in the calendar. Volatility decently high, but not on the highs of the 60s or 50s IVR. So is there a range trade here? I don't think so right now. You don't want to be directionally neutral. This is kind of a vol can break either way situation, which...
Yeah, I don't want to be directionally neutral in any of the metals right now.
No, it's been very tough to do that. It was very easy to be directionally neutral in energy in recent weeks and months, but at 23 DTE and this contract sitting at 54, 52 on the short put spread side of the iron condor, I am feeling heat under the collar here, Jamal. Today's data from the US, if we're inching towards recession, right? Higher unemployment rate, lower demand in the economy. People have less money to spend. One of the stats that we've liked to talk about a lot here on the show over the years, which we haven't referenced recently, but hey, good a time as ever. Demand for oil on a quarterly basis, if you look back over the past 30 years, has a positive correlation with GDP globally to the tune of about 0.91. That's 4 quarters in a year, 30 years, 120 data points, Jamal. This is a large enough sample size to say that there's a meaningful relationship. And it's not one of those, is it spurious correlation? Like whoever, if the Redskins win the Sunday before the presidential election, then a Republican wins, I think, is the whole. That worked out every year up until I think 2020, oddly enough. But that's obviously nonsense. There's no economic relationship there between the Washington Commanders, Redskins, whatever, and whatever's happening and voting booths across the nation. Out in Alaska, right? Alaska voters are not looking at the Sunday box scores.
If there was, there'd be a lot more sports rigging and politics rigging.
Well, the sports are definitely rigged, but that's a different podcast. So oil doesn't like today's news, right? Lower jobs growth, higher unemployment, less demand for an economy means less demand for oil, for energy products. So a pretty straight relationship there. But reassessing all sorts of priors, Jamal, if we're going to have anything happen in Venezuela, the market is telling us, Chris, your ideas about having some geopolitical hedge on, you've just been giving us money. Thank you for feeding us. I see vol going up as this thing's coming apart. I see Russia, Ukraine. Are we destined for sub 50 oil, Jamal?
Kind of feels like it. And yeah, I've been bearing the brunt of it. I've been long an MCL contract since 58.80. I actually have to roll that contract today because it's expiring in 3 days. The G contract, I just rolled out to the H contract. But yeah, I'm still long it. I mean, again, I'm long it as a result of the roll at 55, but really I'm long it from 58. So look, I mean, this is a real big breakdown here when you look at the last couple of months here. I mean, you've been able to trade oil in a range, whether you've sold an iron condor or whether you've bought, MCL contracts and rode it back up $2 and change. But this time around, I mean, it's, 7 straight days down? And it's been nothing but negative news or news about a supply glut, if you will. So, and then you add on today's news, like you said, about possible less consumption. It sucks. However, I am buying gas at a cheaper price now, especially since I have a vehicle that is 15 miles per gallon, which is a Bronco. So I don't mind staying long this oil contract, Chris. I mean, it's another way to think about hedging my bets. I'm buying lower gas, but my MCL contract is suffering.
Yeah, I have a gas guzzler now. It's not great on the wallet, but it's a fun ride.
Same.
Yeah. Break evens for oil. We talked about this on yesterday's show. We brought it up on overtime as well. It is more or less a North Star that I'm affixing to my desk here every day, because there's a certain point where if oil keeps falling, you start to see significant wells shut down here in the United States. It's still a ways away. $10 is not that far away, because we were just at what, 60 a week ago? So we've made a third of the move there. You have to go $15 down to 45 to start see some significant well pressure here in the US, Jamal. I'd like to think that unless we're heading into a recession, oil is underpriced. And that was a point I made yesterday. And then we got today's data and oil falls apart, which is almost to say that there is another notch in the column, a tally for recession fears are percolating. But as we get down into this area, okay, as we start thinking about what does a $50 barrel look like, I am going to be very inclined to look on a long enough time horizon and start to say we have to look at oil puts. We have to start thinking about selling something like the 47, 45. We're not there right now. This is not the trade we wanted to take. But thinking about going out that far, you could start to think about something that's going to be $5, $6, $7 out of the money. You could risk 3 to make 1 in that 60% probability of profit range. There's a certain economics to it all where, like, unless something really bad is happening, oil is not going to stay in the 40s.
Well,
That's
really bad is a good point, because, and again, I mean, we might as well go ahead and skip to it, because we don't have to skip. We can go back and forth. It's the same conversation. When you talk about really bad, it's the energy complex right now, and we've gotten a lot of questions about it in general today. You look at both of these very similar charts, and so again, I'm already short a put spread in here. It was originally a iron condor, but it is an iron condor no more. I actually took the call spread off because it was way upside. It was $6.20 call spread that I was short, but I am short the $4.380 put spread with 42 days to go in nat gas, and it's just been a straight up landslide here. Nat gas has been, I mean, straight down ever since touching 5. So I don't know. You're seeing a similar move in oil right now, and I'm long both of them. But again, I don't mind being long the spread in nat gas, even though it's 2 cents wide. It's still, I don't mind being long. It's a spread. It's risk defined. Same thing with the MCL contract, also risk defined to some degree. Well, sorry, it's not risk defined. It's just kind of static delta. But I don't mind being long it. We might see 50. It's possible, but there's a lot going on in this energy complex right now. Way higher vol though in nat gas than oil.
I remember a much younger, stupider version of myself was looking at natural gas when I was trading near 470 and saying, you're letting me know that I could sell calls above the yearly high and puts below the yearly low before the end of the year. And I can take a decent bet that's nearly 1-to-1 with higher than a 50% probability of profit that will occur. I'll take you on that. Of course, that was a younger, much less wise version of myself, Jamal, which the short call spread side is working. That could be monetized here for a nice quick $140.
Yeah.
But if we wanted to get rid of the other side of the position, oh gosh, this has now become a bit of a loser when it was actually a really nice winner less than a week ago. But there's 42 days to expiration, and there's a lot of time here, and sitting now at the lows, gosh,
There's
that's
some
a
time
hell
for
of
a
a
cold snap, right?
I don't want to say I hope so, but gosh, I hope so. Is the day after tomorrow a real thing? Can that happen real quick?
That movie, yeah.
But not too quick, because then we might have a different problem where, like, the tops. Anyway, this has been a tough trade. It's melted down way faster than I think, certainly I anticipated. Otherwise, I wouldn't be in the position I was in. If this was at 22 DTE or 32 DTE, I might cut the sucker. But I'm not going to just yet, even though we're basically at my pain point.
Look, if this were like a individual stock that I was seeing doing this, I'd be like, there's something really wrong and all the news is not out yet and I'm going to be gone. But, it's a commodity, and commodities move like this from time to time. And I guess the best thing you can do is give yourself a little time or have a low impact sort of future, which MCL kind of is. And let's just see if they'll get a bounce here at some point.
We will see if they get a bounce here at some point. And that's a question we're asking about the US dollar here, which coming up around the corner, Jamal, not tomorrow, but the day after, ECB, BOE, and Bank of Japan rate decisions. the dollar is not having fun on the other side of this jobs report, which losses deepening here in equity markets as the session's going on. Russell, Dow now down over 1% each. Your S&P is now down 0.8%, and the NASDAQ's down by half. So sliding away here as the session goes on. But your British pound is getting a little bit of a bounce. Your Canadian dollar getting a little bit of a bounce. The euro flat after an earlier rally. The yen here really is the top performer as that wedge where all of a sudden the BOJ is hiking as the Fed may be having to cut more for bad reasons. So much for yen intervention. I guess it's not going to be necessary. But Jamal, this is not a great setup for the US dollar, as it were. It feels like it can't really find traction, even if it's off the lows today. Dollar down, stocks down. Bonds not on the highs. Gold up. Not quite sell America, but certainly close enough to it.
I mean, it doesn't make a lot of sense, honestly. Like the idea of the dollar, look, it does make sense that the dollar went down after getting the rate cut. If there's more rate cuts coming, the dollar should be going down. Yet what we were talking about here today is what? The idea that the jobs market is starting to struggle and inflation might still be around. And so for those reasons, you would think the dollar would be higher. I can't really make sense of it. All I know is once I saw the dollar start to move and we had the rate cut, I was just like, I'm going to be out of this position for now until I can really figure out the angle. And like I just said, I mean, there's some confusion, I think, overall around which way to trade it. So I just decided to be out for now because I can't figure it out.
Yeah, I cut all my dollar exposure a little while back, and I'm glad that I did because it's continued to fall over the past few weeks. Whether or not we're getting to an inflection point, maybe that's 135 in the pound, maybe that's 118 and a half or so in the euro. We've been struggling, and we've struggled here previously in October to get through. You got to really make the case that the Fed's really late, that the Fed's running out of time. I have a difficulty doing it. Also, maybe this is still just end up Pax Americana type of price action that we saw April onwards. I'm having a tough time squaring the circle that's the US dollar right now. So in terms of planning for the end of the year, this is always one of the things that I like to do. If there's an asset or a product that I have not had success in recently, it's not something I'm going to trade as we're in the final 2 weeks. You know, what are we doing these final 2 weeks here, Jamal? What are they saying Superbad? Drilling holes. Like we're not doing anything else as it pertains to the US dollar except drilling holes for the next 2 weeks. Screw it.
Yeah, I mean, you know, it doesn't really make that much sense right now to me. So, yeah, I just can't figure out how to trade. And as a result, I'll wait until it makes more sense. But, you know, when it made sense last July, remember that? Such good times. Last July, it was like the dollar is completely oversold. It's time to look for ways to get long. And I need more of a trade like that. So when that comes, I'll be ready. But for now, I'm out.
I was talking with some people recently, and they said they had never seen the movie Superbad. It's like, isn't that kind of to like a certain segment of people like 40 and under? That's like our generation's Ferris Bueller's Day Off.
Whoa, I don't know about that. Ferris Bueller's Day Off? I don't know about that.
Yeah, for a certain segment of people under 40.
I don't know, man.
Find me a better coming of age teen comedy from the late
American
2000s.
Pie. Oh,
that's 2000.
Oh, it's 2000.
Late 2000s.
Late 2000s? I don't know. I wasn't coming of age. So I can't give you an answer.
Well, sorry. Don't mean to date myself here. Yeah, not me. Not me. not that I'm aware of, I should say. Calendar for tomorrow, Jamal. We do have some more interesting information coming up, particularly as it pertains to the U.S. consumer, more retail sales figures, purportedly. You never know. Business inventories. There are some Fed speeches as well. I'm interested in what New York Fed President John Williams has to say tomorrow morning at 9:05 Eastern, 8:05 Central Time. He is the guy that kick-started the rally at the end of November when he came forward and said 25 basis points in December is possible. He's the second most important person at the Fed next to, of course, Chair Powell himself. I get into that because that day when he made those remarks in the morning right after 7 a.m., odds for a December rate cut surged from about 38% up to about 75% in the span of a few minutes. So clearly the market takes what he has to say very seriously. That might be low-key the most important event of the session as we get ready for the CPI report on Thursday. Jamal, that's a silver call spread being filled. Only out for a few minutes. That's what we love to see. We'll be back. We'll be back later today, of course. More programming coming up here on the network. Tasty Live continues next with Dr. Jim Schultz from Theory to Practice, and then the usual smattering ending the day with Last Call, and then I'll be back with Overtime, Jamal. So everyone should take a quick break. They should get a cup of coffee. They should strap in for the rest of the session because stocks here are not looking too hot as we wind down the final 90 minutes or so of this trading day. You're watching Tasty Live. See you soon.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the Jobs Number Tuesday, the NFP Tuesday edition of what it is that we are trying to do. Somehow, some way, we made it. I still can't quite believe that this is indeed real life, but maybe again, it's Lost Season 5, Lost Season 6, where you're really not quite sure, having survived or maybe not survived an NFP Tuesday print. But thank you guys for being here and being a part of what it is that we are trying to do, because it is only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, it looks like you can celebrate if you're a bear, you can commiserate if you are a bull, because the NASDAQ is down another 60 points. The end has indeed arrived. So Ryan, go ahead and bring us into the market here. And of course, if you have a question for me, I would drop it in the chat box. Try to get as many as you can. They're in the chat box, and I'll try to get to, I don't know, maybe somewhere between 1 to 3 questions for the entirety of the show. And of course, drop random comments in there, random little, stories and jokes and whatever you've got for me and for the algo, because we know that the algo loves it. And so, all right, even the S&P is down 41. It's a pretty quiet 41-point drop, if I don't say so myself. You've got the NASDAQ instrument, the risk-free instrument, which is, of course, extraordinarily high risk, down 44. You've got the boomers down 404, and you've got the Russell 2000 futures index, the weakest of the bunch, down 20 points, almost a full percent. You got bonds up 16 ticks. You got notes up 7 ticks. You got oil down $1.50. UB40 is up. Gold is up a little bit, so the shifties are celebrating. The British pound is up. The euro is up. Volatility, I would imagine, on a day like today is probably up a little bit, maybe even a lot of bit. Volatility futures only up 10 cents, and so volatility futures not up too much, but spot volatility not up very much either, only up 37 cents here today. And so maybe that crowd in Tampa Bay was right in terms of the VIX question. I mean, I'm going to take it to my grave with me and say that they were wrong, but maybe they had a point, but I digress. So VIX at 1688, almost 17. Hey, I mean, today's has today not been like a quiet little, almost a 1% drop in the market? I mean, yeah, obviously the NASDAQ is only down 50, 60 points. And so it looks a little bit odd because you've got, the Dow. The Dow might actually be the weakest of the bunch. The Dow down almost 1%. The Russell down almost 1%. Even the S&P is down, 0.75%, maybe 2/3%. And so it's just quietly kind of moving lower when it's like, all right, is nothing really crazy happening in the market. I mean, I don't even know what the number was this morning. Can somebody please tell me what the number was this morning? Did they beat consensus? Did they meet consensus? Was the jobs number weak? I actually have no idea what it was because it's all made up anyway. And so sometimes I'm like, I don't even really want to look because I could read, the fairy tales that I read to my 5-year-old daughter, and it would be the exact same level of realness. And so, all right. So let me know, though. Let me know in the chat. If for no other reason, the algo will love that. The algo will 100% love to know what you think about the jobs number and the jobs number itself. So, okay, what I want to do, though, let's go ahead. Let's do a couple of things in the portfolio, and then I want to get to you guys, man. I want to see where you guys are at in your neck of the woods, your neck of the world, your neck of the woods and the worlds, wherever you might be. I want to see where you guys are at there in the old YouTube chat. I see you guys already. Line it up, man. I appreciate you guys. I see Weiss in the house. Man, I see Arjun Purja snuck in. Man, I appreciate you. Eric Seller is in the house. Ranch in the house. Sam L. Robert P. in the house. Man, Farmer Gazing in the house. Theta Trader is here. Old Two-Face is here. Stephen Bivens in the house. Man, look at this. Arjun Pur, real quick, said like 63,000 just above consensus. Of course, it's 1 million full-time lost and slightly more part-time gain. Yeah, it's all, I mean, again, it's all made up, man. It's all made up. Like when you actually dig into these reports and you like actually look in like the actual numbers, it's like you've got all these different things. It's like, it's a shell game, man. It's like they're moving it over here. They're moving it over there. You got full-times, you got part-times, you got seasonal workers, you got labor force participation rates, you got private sector jobs, you got government sector jobs. You got so many different things. And so apparently it was 63,000 just above consensus. Man, the consensus now is only like 60K. I remember back in the day when like consensus jobs would be like 200,000, 150,000. And so now, I mean, the robots they're just doing it, man. Like they're taking over and we just got to be happy. We got to be thankful for our 60,000 jobs that are left, that we can indeed, kind of latch onto. So, all right, let's go ahead though. Let me see here. So there's not too much going on in my portfolio. We talked about this yesterday. There's no real reason for me to kind of go down each position because we just did this yesterday. Nothing has really changed, in the markets. Although I do want to say one thing. So on my notes for yesterday, I don't know why I forgot this because normally if I have a trade ready to go, like we do that trade, like that tends to be, sort of the focal point for, my portion of the show where I'm going through what I'm teaching. I'm going through the trade I want to do, whatever. And then usually around the second half of the show, like we get to you guys and we just kind of, we kind of shoot the breeze and see where you guys are at. But I had it on my sheet to do an SPX butterfly. And based on the market reaction today, do you know which direction I was going to do that SPX butterfly? I would like to know what your guess is. Put it in the chat. I would love to know which direction do you think I wanted to play SPX yesterday based on the market reaction today. I would love to know that. And one other thing too. So we've got the 6th or 7th day of trading now. And so the 12 days of trading, today we're talking about doing resets going into the next year. I'm actually curious where you guys are at when it comes to this too. Do you guys, because I mean, the new year with the reset and things of that nature, it's like the P&L is going to get reset, which some of you can't wait. Some of you are like, man, that's going to be an amazing day. Like we start over, it's a fresh slate, like blah, 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 clean sheets. Like everybody's happy, right? But when it comes to the portfolio itself, are you guys going into next year kind of trying to clean out the portfolio, like clean out the cobwebs and maybe get, a fresh book going into 2026? I am not necessarily going to do that myself. That's not usually something that I do. I don't normally like clean out the portfolio and kind of override or usurp the natural process of whatever positions might be doing going into the next year. But the one thing I will do, so we've got holidays coming up. We've got Christmas next week. We've got the New Year's. We've got New Year's the following week. And so one thing I will have an eye on, because there's so many days off, the markets are closed, and like Christmas Day, New Year's Day, all those things. I will look at my undefined risk positions and I will say, all right, is anything in a spot where it's going to make sense for me to take this off? Now, what does make sense mean? It can mean a couple of different things. So number one, if I have a profit and it's economically significant, but it's not quite at my profit target yet, that makes sense to me to take off. Like if I have a profit and, maybe I sold the strangle for $2.50, right? I'm going for 50% of max profit, which is $1.25. Maybe I'm looking at my portfolio and it's Christmas Eve or maybe December 23rd or whatever. Like we're right on the cusp of obviously the greatness that is the Santa Claus rally, but also a lot of days off and a lot of like market shutdowns and whatever. Maybe I'm looking at that trade and I'm up like 80 cents. I'm up 70 cents, right? I'm probably going to take that trade off. Like it doesn't make a ton of sense to me anymore to leave that trade on because it's done some nice work. It now has an economically significant profit. So maybe we take it off and we just move on. Like maybe we take it off and we clear out that risk. We take that risk out of the portfolio, the undefined risk, and then we go into 2026, with that not necessarily weighing us down. Defined risk strategies, I don't typically override those processes because they're defined risk by nature. Like by definition, the worst case scenario is already baked in. So I don't necessarily feel the need to go in and kind of usurp that process because there's just no reason to, in my opinion. And so that's how I kind of view my portfolio specifically going into the new year and the end of 2025. You won't necessarily see me do a hard reset, but you will see me maybe clean some things up around the edges. And then, of course, this is going to be so much fun. So on the last day of the year, so this would be New Year's Eve. On the New Year's Eve show, that'll be that's like a Wednesday or something, right? So in 2 weeks from tomorrow, I think. On that show, I will give you guys my results for this year in terms of my predictions, my market predictions at the beginning of every year or the end of a given year or whatever. The last few years, I've given you guys my market predictions. SPY, QQQ, maybe some GLD. I think we threw some bonds in there, whatever. Like I gave you all my market predictions and we're going to see how close I was. Like how close was I with my market predictions? You don't want to miss the New Year's Eve show coming up 2 weeks from tomorrow. It's going to be super fun. And then of course I will give you my predictions for 2026 so you can fade them all year long. It's just something that just keeps printing money. Like you think Uncle Jay's got it made with his printing press? Nah, man, you've got it made because I am going to give you the ticket to paradise 2 weeks from tomorrow with my predictions for 2026. And you, sir or madam, should do the exact opposite. And so, all right, let's go ahead and I want to, what do I got? Okay. So I want to do one new trade. So I want to do an MCL trade. So MCL. So we haven't traded oil in a little while. It's moving around a little bit. It's a wee little bit slippery. Pun intended. You've got oil down $1.50 here today. The IV rank in here is 26.9. And so there's a couple of redemptive qualities when it comes to trading oil. Number one, at least right now, number one, the IV rank is higher than what we might find in other individual stocks or even equity indexes. I mean, SPY is much lower than 26.9. QQQ is much lower than 26.9. And so it's going to be difficult to find higher volatility plays. I know volatility is ticking up a little bit today, but still it's fairly muted the last couple of weeks. So number one, we have a higher volatility play, but also number two, we do have more of an index exposure when it comes to Well, maybe that's not fair because normally when you think of an index, right, you think of a basket of stocks. You think of like a conglomeration of stocks, right? I don't know if you personally think of a conglomeration of stocks, but you certainly could, right? You've got 100, 200, 1,000, 500, whatever. When you're trading oil, it's just oil. Like, so actually the point that I was going to make about indexes and oil being an index actually doesn't make any sense at all. Now that the thought has left my head and it's out there in the wilderness, free from the chains that are inside of my head. So maybe you do have a little bit more, maybe we do have a little bit more kind of single stock risk, but I still don't really, me personally, I don't feel like oil carries like the same risk in terms of idiosyncratic risk that, you know, like a Tesla carries or like a Snowflake carries or like a Snapchat carries or what have you. I feel like those individual stocks still carry more idiosyncratic risk. Now, again, as those thoughts leave my head, I'm like, man, you're wrong again, because go back to 2021. Like if you go back to 2021, right, you're going back to oil when it was negative. You're going back to that moment in time, that brief moment in time when it wasn't a typo, it wasn't a bad quote feed. Like the oil futures were trading for like negative $31 a barrel or whatever, which that literally means like here's a barrel of oil and here's $37 or whatever. Now, obviously, you got to do the multipliers and whatever. Here's 1,000 barrels of oil and here's, you know, $37,000, right? I don't know how long that lasted. Somebody let me know in the chat. How long was oil negative for? Was it only a couple of seconds or did it actually persist for more than like 2 minutes? Like I know it happened, but did it happen for more than just a couple of seconds? Somebody look that up for me and put it in the chat because now I'm super curious. But anyway, we're still going to trade oil because I've already done so much work in preparing this strategy. But maybe it's closer to a Tesla or closer to a Snapchat or closer to a, you know, First Solar or whatever. First Solar is not still in business, are they? Is it FSLR? I think that's right. FSLR. Look at First Solar, $255 a stock, or a share, I should say. Wow, look at First Solar, man. Doing pretty well for itself. Let's go back. Hang on a second. First Solar. Wow. So if you look at First Solar here, I mean, you've got a stock that has just been, look at that. Look at that chart, man. I mean, I'm no technician, which is rather obvious if you've seen the show. But even I know that, my friends, is an uptrend. Like that, my friends, that is looking pretty nice indeed. Right? What do you have? You got a high? You got a low. Right? Yeah, sure, you've got a lower high, but if you're a good technical trader, you don't look at that. Right? You got a higher high right there. You got a higher low right there. Right? We got a higher high right there. We got a higher low right there. Right, got a higher high right there, got a higher low right there. Right, once again, that low is low, that high is lower, but again, just disregard that as any good technician would do. And we're focusing on the high that's about to come. I mean, this is rather advanced technical analysis. So if you can't follow along, like I understand, maybe catch up on some YouTube videos, or obviously watch Tim Knight after me. Like he's gonna bring you guys up to speed on all this stuff. But yeah, First Solar, man, that's looking pretty good. That's a pretty solid uptrend if I've ever seen one. But anyway, let's go back to oil. Let's not get totally off the reservation. I mean, it's only a Tuesday. Let's see. So let's go into MCL. So I'm kind of thinking, so the nice thing about MCL, so first of all, it's a micro. So again, we're doing micro futures options. I've done this a lot with MES. I've done this a lot with MNQ. They're very, very liquid, pun intended. And so I would actually say MCL is more liquid than MNQ. MES is probably still more liquid than MCL. But in terms of like, you know, decent markets to trade where you're going to have a relatively easy time getting in and out and doing whatever it is you want to do, I would put the pecking order as MES, MCL, MNQ. But I don't trade MCLs often for the same reasons I don't really trade the commodities as often as I'm looking at equity exposure. I'm looking in the indexes. I'm even looking in individual stocks. And so it's just not normally on my radar like, you know, the stock market might be and kind of the equity exposure might be. So let's go into MCL though. So if I go into the trade page here, if I do, let's see. Okay, so a couple of things. So number one, the January cycle, so January 14th, that's only 29 days to go. I don't necessarily love that if I'm going to do something undefined risk, which I'm definitely going to do something undefined risk. That's the reason why I use futures options, because the buying power relief is just so favorable relative to what you might find in some equity options. Now, with oil, it might be a little bit different because you could trade USO, and USO is going to be the equity option oil ETF. Let me bring that up really quick. Yeah, that's only $66 a share. So actually, yeah, we'll do a little compare and contrast here in a second. But let me go back to MCL. So January is 29 days to go. February is 63 days to go. So I like that one a lot more when it comes to an undefined risk position that I want to make sure that I'm not getting too close to expiration. I'm not getting too close to 21 days or inside of 21 days. You know, I kind of want something that's going to be a bit smoother from start to finish, which of course there's no guarantee that I'm going to make money. In fact, most likely I'm going to get completely crushed, but you guys will be along for the ride one way or another. And so I typically like to choose the longer duration relative to or rather than the short-term duration, I should say, when there's something that's not that close to 45 days to go. So when you're in kind of that no man's land, like 30 days in the front month, 60 days in the back month, which is exactly what we see right here. If I'm doing defined risk, I might go with the shorter term because I want to be a little further down the decay curve. I want to be a little bit closer to expiration because I want the decay to kind of pick up steam, and it's not going to naturally do that because it's defined risk. But if I do something that's undefined risk, I'm almost always going to be choosing the greater days to expiration so that it's a little bit of a smoother ride from start to finish. At least that's my hope and that's my thinking. So for MCL here, I would do this February cycle. We'll take a look at, let me grab a different color. Let's grab this Glacier Freeze here. Look at that little H that's like just hidden right there, man. It's right there. I mean, it's plain as day, but it's a little bit hidden too, right? Like if you... You got that H there in the February cycle. So now, again, what does this mean? We've gone over this a couple of times, but if you're brand new to the show, welcome aboard. I'm really glad that you are here. If you're brand new to futures options, hey, welcome aboard. I'm also glad that you are here. You know, this can be something that it can really throw you for a loop until you kind of go through it a couple of times, and then it becomes fairly easy to have to reconcile. When you look at a futures options quote and you're looking at the characters that are attached to the underlying instrument, you know, MCLG, MCLH, MCLF, what have you, you want to make sure that you understand what month that option contract is essentially settling to. And if I were to trade January, you can see that January is G, but February is H. And so what that means is, you know, like right now we're trading the G contract in the micro oil world. We want to take a quick peek at what H looks like. So MCLH6. Okay, so you see it's a little bit different. It's not that different. There actually isn't too much difference between a G and H right now. In fact, G is actually above H. So there's a little bit of backwardation in the oil markets, which is not normal. Generally speaking, oil is going to be in contango, similar to equity futures, similar to volatility futures, because of storage costs and things of that nature. But when there are different moves in the marketplace and storage costs change and, you know, the market just moves around, it can certainly be in backwardation for at least short periods of time, if not even negative like it was in 2021. But right now we do see a little bit of backwardation, but the difference between the two, the absolute difference, is only 7 cents. That's not a big difference between, you know, the G contract and the H contract. So when I look at the option chain, it's not going to be that big of a difference. But still, just as a good practice, I want to get comfortable with making sure I'm tracking to the right, you know, underlying expiration when it comes to that futures product. Right? Just because G and H are really close, I don't want to get sloppy. I don't want to get kind of careless to where I'm just, you know, looking at the G option chain, thinking all is well in the world and whatever. And it's going to be fine now because G and H are so close. But you run into a situation where, you know, it's a financial future, it's gold, or it's, you know, it's silver or whatever else, and there's like a big difference between the two. Then all of a sudden you can really be, you know, you can really be left kind of confused as to what's going on. So I'm going to go into February here. If I go into February, 63 days to go. And I've got, you know, obviously the H contract is 55.11. So that's going to be my at the money strike, which is right here. So, okay. So let me take a look. If I sell, let me sell like a 20 delta strangle. So I sell the 49.25 put You can see the markets are really tight, as I kind of alluded to a minute ago. 3 cents wide is pretty tight. That's pretty good. So I'm 49 and a quarter on my put strike. That's about 92 to 94 cents. Let me find my 20 delta call. It might be a little bit higher. I would imagine there's a little bit of skew. Oh, wow. There's put skew in oil? Interesting. Very interesting. Normally see call skew in oil. So I was expecting the 20 delta to be higher than 92 cents, but it's not. It's only 73 cents. $1.69 on this oil strangle. We may have to do a little bit of work on those strikes and bring them in a little bit to collect a little bit more. But look at that buying power, guys. Look at that. $300? I mean, they're just giving these things away. And again, this is not my opinion. This is not subjective analysis. It's right there on the screen. $300, right? I mean, that's what you put up for like a $5 vertical at McDonald's, right? This is an unlimited risk. This is an undefined risk trade in MCL, and the buying power is $324. This is one of the reasons why the futures options can be so favorable, because the buying power relief and the margin efficiency is really, really, really nice, especially if you happen to be in an IRA, which I've talked about many, many times before on the show. So I'm not going to belabor that point right here. But all right, so that's only $300 for a 20 delta strangle. Let me go to USO really quick. We have an extra couple of seconds. Let's go to USO. I want to do, let me do a 20 delta strangle in USO. Oh, wow. Look at that. Oh, this is not going to be apples to apples. They don't even have, so I have a January cycle. Because of the futures expiration days are different from the equity option expiration days, this is not going to be an apples to apples comparison, because I don't even have a 63-day option. The best I have is 45 days, and that's in a weekly cycle. And I would really not prefer to do that. I'm going to open that one up because it's the closest one we have to 63. But man, that's really something. They got us, man. They got us. Oh man, look at these markets. Is Vinny Batista running the USO pits too? I mean, man, I'm going right back to MCL. But before we do, take a look at this, guys. These markets are worse in the equity options, which I would not necessarily expect that, because like MES to SPY is way better than MES. MES is pretty good, but SPY is like, I mean, that's the king of the jungle, man. Like that's the grand poobah when it comes to liquidity. And so I would expect that to be much better. MNQ, as we've talked about before, quite craptacular when it comes to the liquidity. QQQ actually very, very good. And so the equity options win again. But right here, we actually see the equity options for USO are just not very good. I mean, I'm just looking on down the list. I mean, you got 7 cents wide. I got 9 cents wide. I mean, I'm just kind of cherry picking stuff. At the money strikes, 10 cents wide. Yeah, these must be Vinny Batista markets, because he's learning from the best. And by the best, I mean pretty close to the worst, because these are some super wide markets that hurt the retail traders, right? But again, Vinny Batista's not, he doesn't care about the retail traders. He just cares about carrying on the Batista legacy, of course. And so, all right, I'm going to pass on USO. And let's go back to MCL, because, yeah, that was bad, man. That was really bad. Let's go back to February. Let me just put on this strangle really quick, because I want to get to you guys. I'm going to do I'll do like a 22 delta. So I'm going to sell a 50 put for $1.07. I want to collect a little bit more than what I had there. And then I do maybe like a 61. Yeah, we'll do like a 61 call. Okay, that's a lot better. Now I'm collecting $2 as opposed to what we had before, like $1.60 or whatever. That's a little bit better because, again, remember, we are taking an infinite amount of risk. Now, in order to lose an infinite amount of money, which, again, to be clear, that means you reach a state where you are never not losing money. I'm going to say it's not super likely to happen, but theoretically it is possible if oil does indeed print bid infinity, offer infinity plus one. And so let's go ahead and let's put this strangle on. And then we can just be done with it, man. Wow, $300 buying power. That's nice. That is super nice. All right, let's try $1.98. And then we can just be done with it. All right, there you go. Okay, beautiful. All right, so we got in our MCL strangle. Let me get to you guys, man. I see. Well, look at you guys, man, doing some work. Doing some work in the chat with the algo. Man, I'm just scanning the chat. I see Errol Coleman is here. Errol, man, we're hooking you up with the Errol Coleman settings. Everybody is on board. Like, we know the contractual agreement that you have with tastylive and IG and all that kind of stuff, and we're just trying to help you out, my man. Like, we know that every time we click on the 1 minute chart or the 2 minute chart, we unlock the Errol Coleman settings, and you get a 16-cent royalty. And so you are welcome, man. We got the whole crew on board, myself included. So it's good to see you, my man. I appreciate you. I appreciate you being here. But I do see some people at the very end are asking about the multiplier for MCL. So I'm going to surprise and delight some people at the very end that thought that they would never get surprised or delighted. And yes, the multiplier for MCL is $1. So when you look at an MCL quote, you actually read it the same way that you would read an equity option quote. So when it's $2, right, it's going to be $200. And so for the total, right, it's read the same way that you would look at an option in McDonald's or an option in Pepsi or an option in IBM or whatever. And so that's kind of nice in terms of it being very similar in from a multiplication and a multiplier standpoint. And sorry, so let's see here. Okay, so you guys are helping me out here. I see you guys. Bricker's Mash is saying in the middle that oil traded below zero for 20 trading days? No, there's no way. It must have been like a minute or two. It had to be, right? It wasn't 20 days. Really? No. Let's see. Oh, Patrick Maslanka says in mid-April 2020, the May futures contract went negative because no one wanted to accept delivery. Yeah, I mean, that makes sense to me because, again, you have to take delivery of the actual thing. So they were trying to juice. They were trying to grease the wheel so much that they were like, man, nobody wants this oil because obviously global pandemics and COVIDs and what have you. That's like, man, nobody will take this oil, right? So here is $37 to just kind of move the chains a little bit. Like, you know, the first 5 barrels are on us. Right, like here's your 1,000-barrel contract. The first 5 are on us. Like that's what they were trying to do, and still nobody wanted it, man. Nobody wanted it. And so, let's see though. Where are we at? Where are we at? Let's go. Are we going back to the beginning already? Maybe. Hold on. Oh, Rex Kramer. I see Rex Kramer 22 in the house. Rex Kramer, what's going on, my friend? I see Rex Kramer saying, Dr. Jim, do you have a preferred strategy when it comes to selling puts? I mean, selling puts is the strategy. And so, so that is the preferred strategy. So you already nailed it. So nice job out of you. But if we wanted to go one step further, I mean, it's going to be all the things that we talk about every single day. It's going to be around 45 days to go. It's going to be, you know, generally speaking, 30, 35 delta is kind of my reference point. Now, when would I choose to go higher or lower? Right? I mean, if I'm selling a put in a stock where I want to be more bullish, then obviously I'm going to sell 40 delta. I'm going to sell 45 delta. Hey, I've even sold some in the money puts from time to time. If I want to be like mega pint bullish on this stock, then I might sell a 55 or 60 delta. Because remember, in fact, here I'll even show you really quick. Like, let's say, I don't know. Let's give a quick shout out to my father-in-law, Steve Mills. Great guy. Saw him earlier today. And again, I told you guys, I set him up with my toe guy. He's all squared away. My toe guy got him going. I got him out the door, brand new toe within a couple hours. Like this guy is unbelievable. So if you are in the Southeast United States and you need a big toe guy, specifically, I can't help you with the middle guys. I can't do very much for the pinky toe. But if you need a big toe guy, man, I've got your guy. I've got your guy. You just let me know and we'll take care of you. But anyway, this is the Tesla guy too, right? So he's obviously feeling pretty good about himself on a day like today. Let's say I wanted to be bullish on Tesla. Like, let's say I wanted to join ranks with my father-in-law and let's get mega bullish on Tesla. So what I might do here from an option standpoint, I might go to January with 45 days to go. I know they have earnings right after this, and so maybe discard that for the purposes of this example. And I might sell something that's like, you know, maybe I sell like a 505. Like maybe I sell like a 505 put, you know, from the standpoint of, you know, now I'm actually 20 points in the money, right? I'm 20 points in the money on this 505 put, and it's a 55 delta. And so in this situation, I'm actually picking up more bullish deltas. And so when I sell this price, this $48, it is a combination of both intrinsic value and extrinsic value. And so, excuse me, if the stock does rally, I'm going to be in a situation where if the stock rallies and the option were to expire out of the money, now obviously I'm going to manage it early. I'm not going to hold it all the way to the end and all the things we talk about. But just for learning purposes, assume I did hold it all the way to the end. If Tesla went over 505 and stayed there, then the option would obviously expire worthless. It would collapse down to zero. And so that means that I would essentially make the intrinsic value that I sold it for on entry and the extrinsic value that I sold it for on entry. When we sell out of the money options, which is kind of our go-to default setting, we're only selling out of the money premium. So we're only selling extrinsic value. And so when you make money on that trade, it all comes from extrinsic value. But if you were to sell something in the money, now you're able to pick up a little intrinsic value and extrinsic value. Now, is this a good strategy? I mean, you're giving up buffer, right? You're giving up some wiggle room for you to be wrong directionally and still, kind of, have an easier time getting to whatever profit targets you might have on the strategy. And so anyway, those are a couple things to think about there, Rex. But yeah, 45 days to go, 30, 35 delta. If I want to be more bullish, I might choose something a little bit higher. If I want to be less bullish, I might choose something a little bit lower. And so that's generally how I think about it, though. I don't really try to get super fancy with those guys. And so, all right, let's go all the way back to the beginning, man. I got to scroll all the way up on the screen. Look at all that algo work, man. Look at you guys doing work today, man. You guys showed up in spades. I appreciate you guys so much. Appreciate you guys so very much. But let me get to the beginning. Let's see. Brian Dowdy, best trade was an Oracle short put. Man, there's no way that's true. That's got to be misinformation. Nobody makes money in Oracle to the upside. Not anymore. I mean, obviously 6 months ago, it was the easiest trade on the board. So maybe that's what you're talking about there, Brian. But Stephen Bivens says, Dr. Jim, I got to sign on my Meta short puts. Since I have lots of cash in this portfolio margin account, my buying power, BPU, I would imagine that's buying power utilization, didn't really change. I'm thinking of box spreads on SPX to offset my margin loan. Thoughts on boxes? Yeah, so, I don't know that much about box spreads. I learned it a long time ago. I haven't done a box spread in a very long time. If I'm understanding the box spread correctly, which I may not be because I haven't looked at this in a while, box spreads basically just sets you up to earn the risk-free rate, right? Essentially, like you're just earning the risk-free rate. I don't think that there's an ARB there. I don't think there's anything more or anything in addition to the risk-free rate. And so to me, I would just be like, man, just buy some BIL, just buy some SCUF. Now, maybe I'm misrepresenting the box spread completely. And so again, I haven't looked at this in years because I think when I did look at it before, a lot of people talk about it. And a lot of people talk about it being like, this risk-free trade and like just like free money and blah, 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 blah. And then I worked it out a couple times way back in yesteryear. And I'm like, you're getting the risk-free rate. Like you haven't beat the system. Like you haven't discovered the Holy Grail. Like you're getting a T-bill. Like you basically just found a T-bill. Like you opened up your drawer and there's a T-bill. Like that's what you got, right? And so that's kind of how I think about the box spread. And so I don't know there, Stephen. It doesn't really seem to me to be too much of an advantage over just a BIL or an SCUF. And so hopefully that helps at least a little bit. But again, that's not necessarily my my area of expertise. Or Denu. Hello, Dr. Jim. Is it me or the high risk today? Doesn't seem so much high risk. Yeah, I agree. I mean, volatility hasn't really been moving, even though EMA S&Ps are still down 30. NASDAQ's about unchanged on the day now. You've got the Russell down 19 and, the metals, obviously. You've got gold. Oh, where are the Hunt Brothers at? I didn't even look at the Hunt Brothers earlier. Wow, they're back to 64. There you go. Okay. And so they may be able to take a couple days off from the cheese and pepperoni. Like you may not need to get any more Hunt Brother hot and readies. Like you thought Little Caesars had that thing on lockdown? No way, man. You need to get yourself a Hunt Brother hot and ready, right? $4.99. They're even undercutting the price of Little Caesars these days to push some volume. And so they know what they're doing. But yeah, I agree with you there, Organu. It just feels a little weird today. I mean, now the market's rallying back, so maybe all is well in the world again. But today's been a bit of a weird one. Maybe it's because we had a Jobs Tuesday, which that's not right in any neck of the woods or neck of the world or neck of the woods of the worlds or worlds of the woods or whatever. Steve Aguilera in the house. I got filled earlier today as well. You inspired me the other day. It was a nice little winner. Oh, you're talking about ranch. Good stuff. You guys are making buddies. I like that. Brian Dowdy, hey, Dr. J, can you please take a look at GIS? I don't understand. Liquidity is 4 stars. IVR is 63. Expected move is $1. Man, are you sending me into the dumpster again? Man, are you sending me into the dumpster with Gains by Gus and Errol Coleman? Is that where I'm headed right now? I don't know that I want to go there. I think I'm going to fight tooth and nail. GIS. Okay, $47 stock. General Mills. Okay. They've been around for a while, I think. And so, yeah. You've got, earnings tomorrow morning. Man, are we going to do some General Mills? Man, I don't know. Let me see here. Look at these options. These are garbage, man. Look at this. 2.5 point wide strikes on a 3-day cycle. I would expect dollar wide. You don't need to give me 50-cent wide. Like, we don't have to go and get all overzealous about it, but give me at least some dollar point wides in a 3-day cycle. I can't do anything with this. I mean, what am I going to do? I'm going to have to sell the in the money put, which is just what we were talking about, right? Like, the only trade on the board, in my opinion, is to actually sell the 47.5 put. And do I want to be mega pint bullish in General Mills? Not necessarily, right? I can't even remember what they make. Is General Mills, is that Honey Bunches of Oats? Or is that Kellogg? Or is General Mills and Kellogg the same thing? I don't even know. This whole world, I mean, box spreads, cereal companies, like, you guys are really testing my limits here today. But I mean, the only trade on the board, in my opinion, is to sell the 47.5 put. I'm not going to do it, but give it a go there, Brian Dowdy. Let us know how it goes. And so now you know which direction I was going to play it. So you're welcome, my friend, as you can load up on some puts to the downside. So Theta Trader, Dr. Jim, what is your favorite nuclear power trade, and why is it Ura? Ura, U-R-A. Global X Uranium ETF. Okay, so this actually is an ETF, not like that garbage I was spewing earlier about oil and single stock risk and not having single stock risk and all this rigmarole. But wow, look at this 78.7 IV rank. All right, what if we go into January with 31 days to go? Whoa, look at those markets. Theta Trader, what are you doing to us, man? This isn't back alley street dentistry. Like, you got to do things on the up and up here. Like, we got people watching, man. Like, this isn't just you and your patients in the shadows. Like, this is like, look at those markets, man. 80 cents wide, $1.25 wide for the at the money strike. Man, no thank you. I mean, again, if I need a crown on the down low, you're my guy. But Ura, I think I'm going to pass, man. Like, I think I'm 100% going to pass. But I appreciate you, man. I appreciate you very, very much. And, yeah, just try to keep that garbage off my radar next time. Old Two... Theta Trader is a good sport. I know that he is. Old Two-Face in the house. Hey, Dr. J, I've got an Avgo Iron Condor in January 16th, 453.60, $10 wide. The put side is in the money. I'm thinking of closing the call side and just waiting for Avgo to bounce. Do we have any thoughts? Yeah, let me take a quick look at it. I don't know. 340. Okay, so let's see. 453.60. So those are your shorts, obviously. Okay, so wait a minute. 360. Okay. So you're 360, 350 on the short side. You're in January, you said, right? Yeah. Okay. So this is what you have. I want to put up on the board what you have. So you have a 450, 460 call spread, I believe, right? And then you have a 360, 350 put spread. I would imagine, right? Yeah, selling for 622. You probably sold this for what, 350, $4 maybe? And so you're down a couple $100 on the trade. Okay. What can you do? Well, you could do nothing, of course. I mean, with defined risk strategies, I think that's always at least a good move, if not the best move. But when you look at the call spread, I mean, you can see for yourself here, it's only selling for 12 cents. Like, it literally has nothing left in it. Now, the Tasty Research has looked at this a number of times, and the research has concluded there's no benefit to really legging out of this strategy. Intuitively, does that make sense? Not necessarily, because when I'm looking at this, I'm like, it's only got 10 cents left, 12 cents left. So if I'm looking at it, it's like, well, maybe I just go ahead and take this off. I'm not going to make any more out of this strategy. And so it does, it doesn't necessarily, I don't think you're making a huge mistake by closing the call spread. And again, to be fair to the Tasty Research, because the Tasty Research is amazing. I mean, it's been very clear. I mean, you're not necessarily, there may not be any benefits, but there aren't any drawbacks either. Like in terms of overall P&L in the end and things like that. I would say it seems like you're kind of, your conscience or subconscious or even your unconscious is nudging you in this direction. So I say follow it. I say go for it. Close out the call side, and then you just got the put side for Avgo, and you're bullish on Broadcom. I mean, what could possibly go wrong, right? I mean, that's what you should always be asking yourself. And yeah, probably a lot of things. But yeah, I like it. I like it, honestly, to close out that call side. And then Old Two-Face said, I put the trade on before earnings, hoping for an inside move. Yes, famous last words. every single time. So Steve Aguilera, mandatory for the algo comment. There you go. See, you even jazzed it up there with that mandatory word in there because you got to throw them off every once in a while. If you guys keep hitting it with for the love of the algo, for the love of the algo, for the love of the algo. I mean, I love it, obviously, and the algo still loves it to some degree. But if you mix it up a little bit, it's kind of like I've been doing dumbbell laterals for a while. Let me mix in a little cable. Let me do a little hammer strength lateral machine. Let me get a little bit of a different stimulus, still going for the same basic end result though. And so Wolf in the house. What's up there, Wolf? Appreciate you. Ranch in the house. Talking back to Steve. That's some good stuff, man. Good stuff. Manchurian's in the house. Says, let's go, James. What's going on there, Manchurian? I appreciate you so much, my friend. Sam L. Forget wins, losses, trades, or fake NFPs. The real highlight of the day is these 45 minutes with Dr. Jim, man. I appreciate you. Yes, the Dr. Jim power 3/4 of an hour. It's about to come to a close here in a couple of seconds. But, man, I appreciate you there, Sam L. And so, see, Brian Dowdy, all right, since you will be out Wednesday, can you play Mew earnings, Dr. J? Micron? That's right, I will be out tomorrow. Are we, so it's tomorrow after the bell? Man, isn't Micron like crazy stuff? Man, Micron is some crazy stuff. I'll tell you what. Let's try to throw a little something on to the upside. What if I did a 20-point wide butterfly to the upside to give us a little something to come back to? Wow, it's only 379? Man, I'm sold on this. There you go. Just straight bullish on Micron to the upside for the end of the week. We'll come back and look at this on Thursday, obviously, when I return. 235, 255, 275 is going to be the butterfly. Let's push that guy out. And let me get this filled. And I want to get to another comment or two. Now, let's do like 383. We'll probably get filled. All right, so we got filled. There you go. Thank you there, Brian. I appreciate you, my friend. Let's see. Where was I? Eric Sellers. Dr. J, I traded a call calendar for earnings in Lulu. It was the 190 short call with 2 days to go and the 190 long call with 9 days to go. Okay, yep. The stock rallied hard and I still lost money. How to set it up better? Ooh. Yeah, I mean, the stock rallied hard. So, but yeah, but it went way beyond your strike. I think that was the problem, right? Because Lulu went, yeah, it's 205. That's the problem. The problem is you didn't do anything wrong. You didn't set it up incorrectly. But remember, whenever you put a calendar spread on, whether it's neutral, directional, whatever, you want the stock to pin that strike. And so Lulu ran way beyond 190. And so that's why the trade didn't work out. And so, again, it's not that you did anything wrong structurally, just understanding where you put the strikes, like where you lay those guys on top of each other. That is where you want the stock to move, which, again, I mean, sometimes it doesn't work out that way. But this time it was actually, you had a bullish trade on. It was too bullish, and so that's what happened, and it kind of backfired on you. But guys, I think I'm out of time. I'm totally out of time. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Hello, everybody. Tim Knight here, and we've got 10 trading days left, I think, in the year 2025. We've got another red day on our hands by a little bit, just like yesterday. And just like yesterday, it started off strong and just kind of went flop. The economic data that came out this morning was just what the bulls wanted to see. Rising unemployment, shrinking hourly wages, and a flat retail report. And the market responded accordingly. All the equities just shot higher and then stopped. And so at the moment we're down, it's not massive. The NQ is down 0. It's unchanged, but everything else is down a little bit. ES, YM. Crude oil's down too, about 2.7%. And the charts have been so messy, I sadly have not had any trades in energy. XOP and XLE are both down. But again, I prefer a clean chart, not just hoping something falls and it falls. The one frustrating point for me was that I could have sworn I shorted China yesterday. We talked about it here. I talked about how FXI looked like a really good short. I'm not sure why, and it hardly matters, but Asia just fell across the board. Everything, EEM, the emerging markets fell, but whether it's Korea or Japan or China, everything fell hard. I was like, oh, cool. My FXI trade must be doing great. Wait, where is it? Too many positions, I guess. But we'll look at that in a sec. Anyway, let's just jump into the charts and look around as we tiptoe our way through the end of the year. Here's the spider, which is down, yes, and it's traded lower than it's traded in weeks. But it has recovered some of the droopage from earlier today. Let's move in the right direction. There's been some buying at these levels. So as I said, it's down, but it's only down 0.33%. So shrug. Here are the cubes, which are actually up a few hundredths of a percent. We had a couple of nice swipes down the past couple of trading days. But today it's sort of stabilized, just kind of hanging out near the unchanged level. But overall, things are still looking good. And on an individual chart basis, they look nice. I covered my big cube short position this morning, but I've still got 30 different individual shorts. Nothing really outsized big, but just a nice variety pack of short sales. Over in semiconductor land, these continue to be weak. SMH is down 0.2%. We had our lifetime high just a few days ago. And after that lifetime high, there was no follow through. It slipped the next day, fell hard a couple of days ago, more yesterday, and then a little bit more today. So all things AI, which used to be just a indefatigable blessing, are getting defeated. They are, it's looking ugly, whether it's energy or semiconductors or any of the hyperscaling associated stuff, like Coreweave, for example. It's all been weakening away. And Nvidia, I have done something I don't know if I've ever dared to do. If I have, it's been rare, but I've actually shorted this bad boy. There are better looking charts out there, but I gotta say, maybe it's just out of spite, but this is shaping up to be a pretty interesting looking pattern, and we'll see. I mean, this is the biggest company in the world. It is the anchor to all tech, but the bullish breakout has completely failed. It has hammered out what might be a good-looking head and shoulders top. And no matter what, bull or bear, we all can agree that this thing has done nothing since July. We're trading right now, we're trading at the end of July, all of August, all of September, all of October, all of November, into December, just grind, and nothing. So not too impressive. But I've got a short position on this. We'll see how it goes. Again, there's some gorgeous charts out there. This is not one of them. It's okay, but I just gotta. As I mentioned, shame on me, because I was really excited about how China looked yesterday. I didn't do a thing about it, it turns out. Must have just slipped my mind. But the emerging markets, EEM, fell hard yesterday and it's falling more today. But the real miss was FXI, because it's a much cleaner chart. FXI, and yesterday, in front of your very eyes, I drew this little rectangle to show the distribution top that I was focused on. And we are down 1.25% on FXI. The pattern is complete. And so I think it's got plenty more to go. But not only am I not in position, I have no intention of chasing this. I mean, I admit 1.25%, big deal. It's not like, it really got away from you. But I'm just not going to touch it. That's that. As far as crude oil goes, whenever we talk about crude oil, I mentioned that even though it's not really, it's certainly not an organic market. And by that I mean, it has a global cartel around it. If oil was utterly freely trading, there was no cartel at all, just a bunch of countries vying to sell as much oil as they could. I don't know, it'd be $20 a barrel, something like that, or worse. But it is tightly controlled in that respect. But even with that, the cartel is imperfect, and you do get some cheating and some competition amidst that. And so sooner or later, the truth comes out in terms of where the price should be. And crude oil's long demise here, I think, is illustrative of where I think global economy is going in the next 1 or 2 years. And I believe it has, if it hasn't, it's very close. Let's just lay it down. It's very, very close to a potential price failure here. Let's try to hone in on that if I can. Okay, that's poorly done. Very poorly done. Let's zoom in. No, let's not. Let's try again. Moving that like so. Okay. All right. So we are. That's better. We are at support, and someone play a snare drum, because this is as low as it's gotten in 4 years, and this is a very important support level. So we'll see if it cracks it or not. But that is, crude's at a dreadful time, and so it's worth way less than half of what it was worth just 3 years ago. As I said, I wasn't in any energy positions, but those who were short anything to do with crude oils probably have a good day. XLE is one of the bigger ETFs out there, down 2.83%. But like I said, I mean, were you actually going to tease out that from this mess? You might as well grab 2 large packages of spaghetti, throw them in the air, have them fall on the floor, and just see what's next. It's just a pigsty. So I didn't do anything about that, or XOP for that matter. They've been very messy. Over in precious land, what's cooking over there? Well, gold is still not quite sure what to do with itself. The past 3 trading days, it has just been stuck. We're up 0.16% on GLD right now. It's become really boring really fast. I did look, I was trying to find out, when did I get really into silver? And I found the post. It was back in October of 2024. And I did this post called Silver Has Launched, all in capitals. And it did. We've doubled since then, and it was this beautiful rounded bottom. And that's why I'm so hung up on Palladium, because Palladium is like lagging that by a year. Palladium is supporting the same fantastic basing pattern, but for some bizarre reason, it's like a year behind silver. Gold, of course, is the big one that everyone's focused on. It's just sitting there, not going up or down, really. Silver is also a little unsure what to do with itself. It was at a lifetime high to just a couple of trading days ago. Now it is down 0.4%. However, excuse me, and just let's peek at miners real quick. Miners by way of GDX also seem stuck in the muck. This was the former high. We blasted above it here. No real follow through, slipping. So the past 3 trading days, we've been jumping back and forth on that former breakout level. So just sputtering away. Palladium, PALL, is not sputtering. It continues to do well. It is pushed well above my price gap here. This consolidation zone has expressed itself very nicely after this, because we had talked about all that pent up energy if and when it got out of this. Well, it did get out of this. And so we've got bang, 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 approaching not a lifetime high, but a multi-year high right here. So Palladium really doing itself proud. Adjunct to that, Platinum also having a good day, up over 3% on PPLT. And you can see these have really kind of come into their own lately. So Palladium, Platinum doing really well. Some shorts here and there. Let's just touch on these real quick. We've got ALB, which is down a bit more than 1%. And the topping pattern on this is way back here. But my view is that this recovery has exhausted itself, so we're starting to reverse on that. I've been talking about semiconductors earlier, SMH and Nvidia and such. I'm also short on semiconductor ON, like so. BDN, Brandywine. This one is very inexpensive stock, very low priced, but long term, I think it's going to be much lower. This could be a penny stock a year from now. There is a continuation pattern that took place down here. Let me adjust the top on that. Didn't do a very good job. So let's do the bottom and come up here and sneak this a little higher. So there's a continuation pattern in what has been a protracted bear market on this. So this is down again on BDN. Also Centene, CNC, and this is, we've talked about CNC before. This is the healthcare provider, which whose chart is not coming up quite yet. And they have already lost a lot of value, but they are starting to turn away. That this mass up here of orange shows a very pronounced price gap that took place. A couple of trading days ago, we got as close as we've gotten to that, but then it's turned south. So we got a bearish engulfing pattern yesterday, and then a continuation down today. So CNC down a little over 4%. DraftKings, DKNG. This is also turned around, 3.22%. And a stop on this one that I'm using, and these tend to be pretty tight, is right there a couple of days ago, that high. So that's DKNG. And a couple more. This is a new one. Floor & Decor, FND. These folks haven't been around too long. And today it's down about 1.7%. But for most of its history, what it has achieved has been this staggeringly big pattern like so. And it's not a big position, but I do think this is one of those things whereby you just keep an eye on 0 as firm support. That's the entire history right there. It hasn't been around too many years, but very interesting and very long distribution top in that instance. OKLO, this is down again, although it's probably going to bounce at some point in the near future because this has gotten beaten really hard over the past couple of weeks. But this is another post-AI bubble victim. And another one that I'm not getting into because it's been beaten down so much, but for longer term bears on Costco, they've done really well. COST. This is a really good looking right triangle top, which has been hammering out for more than a year. And it's finally complete. And we'll probably get a bounce in here somewhere, but that is a massive, massive right triangle top on Costco. A very long time coming. And the peak on this was way back a good 10 months prior to today. So it's been just slogging its way lower there. This was like a quadruple digit stock just about. So yeah, there's that. Not in it, but it's quite a sight. I will mention again that bonds TLT look bearish for the next few weeks, if not months. We are rallying on this today a bit, but I do think this price gap right there at the bottom of that red bar is a good stop loss level for anybody who is short bonds, but we do have a nice little reversal in bonds going. And I would also say, as I mentioned the other day, corporate bonds, LQD, are sporting kind of a similar pattern. And historically, corporate bonds tend to lead equities. So if you do see these start to break down, that's not a good sign for stocks, because they tend to be a canary in the coal mine about equities beforehand. Okay, bottom of the hour, out of charts. So I will say goodbye, and I'll see you here tomorrow. Good night.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello
again, everybody, and welcome to the last call with these two fools, Liz and Jenny. Jenny, it is so good to see you again for the third location today.
I know, long time. You're right, third location. We started in the heart of the Mag 10 pit, moved to the SPX pit. Now we are virtually
in undisclosed locations.
Yep. We've got a lot going on. We don't have a lot of time. I have 4 trades written down on this piece of paper, Liz.
And I can't wait because I was running errands.
No, I just went in and found a handful of trades because we didn't get enough trades on earlier today. We only got a couple.
Do you see the rally that's happening right now, Jenny Andrews?
NASDAQ's green. SPYs are only down 14, so there's a little bit of a rally. Before we get into the platform, let's talk about what we have going on. Tomorrow's Wednesday. What's your assumption? Send us your assumptions. Ryan, let's pull up that art card. We've got what's your assumption tomorrow? Tasty. There we go. tastylive.com/assumption. Send them in. The boys will be doing this in the morning.
Yes, they will. We're very excited for them. You know what? And they do such a good job with it. Send your assumption. Liquid products and liquid products is their one ask, I believe. Right?
Yeah, liquid products. Okay.
Liquidity.
What else do we have going on? We got the 12 days of trading.
12 days of trading. Yes, Ryan, if you could bring that up. Today was how we do with the reset of the P&L. And sign up for this because they are going to be emailed right into your inbox if you sign up for this email.
So there's a lot going on right now. And also we have just a few days left for our promotion at the end of the year with the 1% cash match. If you open a new account and make a deposit, you'll get a 1% cash match. So that's going on. So we got a lot happening. There we go. The money match event. So
it's so funny because I always say cash back. You say cash match.
Oh, I guess it's not cash. It's like a 1% cash match.
Cash match. Yes, 1%.
Like so if you put in 100,000, you get 1,000.
Correct.
Yeah, that's 1%.
Good job on that math there, Jenny Andrews. That's 1%.
All right, let's hop in the platform. We've got a lot to do. I pulled up 4 trades in case we want to get to more trades. I don't know if we will get to them all. I have a couple things I want to close. SPYs are only down 11. So
do you think, wait, before we do this, do you think we're going to go green on the day? Do you think we will touch just a touch of green? We've got about 24 minutes.
Well, with NASDAQ green, yeah, I do. I think so. I think ES will be green on the end of the day. I do.
I think so too. I'm pulling for it.
Yeah. Okay. A handful of things. We sold these puts in Bloom Energy earlier today. We made $63 in a few hours. Want to take it?
Heck yeah.
Okay. So we're going to close those. 217. Look at that.
All's right with the world right there, Jenny Andrews. Quick $50.
All right, so Bloom Energy.
And let's talk about that because we have been trading Bloom Energy pretty well. We've been taking our profits. It's got a little bit of back and forth action.
Right. All right. Okay, I found this today. Sometimes we have things in here we don't realize we have. I found this LUNR. It's funny. I was putting on a trade in LUMN, and I wanted to see if we had it in our account. So when I went into this show account, I saw LUNR. I opened it up. People, you might hear talk about cost basis reduction, and you hear people say, I want to own this product for free. How do you do that? Well, look at this LUNR. It's a $10 product, and on this weekly strangle, we made $76 on this weekly strangle. And if maybe we sell one for next week. And next week,
it's not weekly. We've had it in for 40 days.
No, I mean, it's expiring this week. I guess.
Okay, good. Okay, that's why I was like, hold please. Like we've had this on for 40 days, which is fine. You're right. Let's jump back into it.
You could see in this LUNR, we started with the 15 put. Otherwise, we wouldn't be long 100 shares of stock at 15 even unless we were assigned on a put. So we were assigned on the 15 put, and we must have gotten, you can see our P&L open on these two is, we're still down, but we're chipping away. And we made $76 on this strangle. So I think we can buy this strangle back, and let's see what we can get.
We can sell another one. I agree.
And even, do we have to go to the monthly? Maybe we do.
You can do anything your little heart desires.
Yeah, and look at this. We could sell the 915 for 88 cents.
Whew, that looks great. Do it.
Not bad, not bad. Okay. So a new strangle in Lunar, which is intuitive machine something.
Oh, of course.
But anyway, we could do weekly, but we'll just keep it simple. I mean, we forgot about that last lunar trade. We'll just stick with the monthlies.
I agree.
Okay, so we're in a new strangle in lunar. Anything else? I know we never got filled in natural gas today.
I know, and that keeps getting away from us. It got pretty far away from us.
Did it?
Well, oh no. When I logged on earlier, it was 12 cents.
Yeah, we're still low of the day, 361, and we're 366. So we're not too far from the low of the day. This move kind of makes me want to jump in.
Oh yeah, makes me want to jump in. When's the last time it was there? Now, can you scroll
I'm gonna do $.
Look at you.
Okay, so then you look at a bigger picture.
That's what I'm saying. When you look at the bigger picture, because that's not too low. As a natural gas enthusiast, and that's for you, Mikey, not addict. As a natural gas enthusiast, I know that price point isn't that low.
Like it looks crazy for the current future, but if you go back, we were just there in October, and then it's not super low. So let's not chase.
So I like it in the 2 handle. That's what I was going to say. That's when I love it. If you like it in the 3.8, you'll love it in the 2.
All right, so we'll leave that. That's been working all day. The ZB, and I know we talked about this. We have our 50% in, but the way that it's been so choppy. And we've been able in some positions like get in, get out, get in, get out, get in, get out. The way the bonds have been really kind of choppy, it makes me think of taking this off and really being diligent about watching it to have a down day to get back in.
I'm going to let you do whatever you want to do, because yesterday when I was running it, you said, we can't close that. That was a roll. And I said,
I know. We were up like $100 on it. And now I'm like, now we're up 165 and we're up 20% since the roll 4 days ago. I don't know. Because I don't know. Are we going to stay in this area?
I don't know. I think we have our GTC in for that, and I don't mind being in at that range. You can do whatever you want. I'm fine. Okay. I'm fine with either. I'm totally fine with either. I'm not saying I like one over the other.
Okay. Well, then we'll leave it. The only earnings today is Lennar. Only earnings on our list is Lennar. We saw Toll Brothers looked like it had a little jump on earnings. Do we want to put in a bullish trade in Lennar?
Can we see how much the diagonal is if we were going to put a bullish trade in?
Yeah. If I go to the 123, sell the expected move in the 3-day, and at the 10-day buy the 117. It's cheap, $263 for a $6.
Press that button, Jenny Andrews.
Okay, so all I'm doing here, I'm going to the 3-day, selling the expected move, and then going to the 10-day and buying just at the money. So we're trading very close to 117 and buying the at the money. So I'm paying $265, and the spread is $6 wide. So, less than 50% of the width of the spread. Close to a third of the width of the spread. I like that.
I do too. Hold on.
I paid up a little bit because the market was a little wide.
Oh, good. Yeah, that's fine.
So we have a Lennar, and the only reason we did bullish is because it looked like Toll Brothers was up on earnings.
Can you do me a favor? Will you check MU?
Speaking of MU, we did get this from Jack JT. I forgot to tell you this morning, Micron, I'm adding short calls against my shares, worried about the downside. I'm going to layer in some short puts. If we get a down move, I'll layer more. I'm okay risking. My cost basis is 57. So Jack JT, good luck. That's tomorrow. Microns will be tomorrow.
They're after the close tomorrow, right? I just want to double check.
Yeah, after the close tomorrow.
Okay.
So you've got a $21 expected move. His cost basis is around 57.
Can you go back to that trade page real quick? That's a pretty good cost basis. Congratulations.
Yeah. Congratulations, Jack JT.
So can you go back to that trade page for 1 second on Micron? I just want to show something. So go to where it says December 17th. The purple line. See the purple line where it says December 17th, and then there's the bell, and then there's the arrow. And when the arrow is after the bell, that means it's after the bell. When the arrow is before the bell, that means it's before the bell. And I do believe, Jenny, tell me if this is right or not. Doesn't the arrow go like this? So then it would be the bell. So it looks like almost it's less than or greater than the bell.
Yeah.
It's a less than or greater than sign. Is that what they're trying to do? Okay.
Yeah. Before the bell or after the bell.
And that's what that means. And I'm not going to lie to you. This, I've been trading options for a while.
My arrow? Do you see my arrow?
I see your arrow.
Okay.
It was funny when you didn't think I could, though.
Oh, because I just glanced over at the live show that I see, and I don't see the arrow.
Oh, I see your arrow, but I'm looking at your screen.
Yeah, you're looking at my screen. I don't think the viewers see my arrow.
Oh, sad.
So
we will be extraordinarily descriptive.
We're going to remedy that. But Liz is just looking at that purple line that says E, go all the way to the right, December 17th, bell, and then you've got the little arrow there. The earnings are tomorrow after the bell. Jack JT talked about selling calls against some of his stock, layering short puts, but that could get you even longer. You know, Jack, good luck to you. Good luck to you. I don't want to give any opinions. I just have to say.
I say go, Micron, go. I'm proud of you. Layering in short puts. Because you know what? It's just for earnings. You're not saying, I don't mind it.
All I know is I started buying Oklo at 10 and it ran up to 200. And on the way down, I was, selling some calls and doing some downside ratio spreads or adding some puts, and now my cost basis is a lot higher than 10, And I got more shares than I started with because I kept getting longer on the way down. So, just be careful.
No, but I have no problem. If it's what's so funny is there's certain products, and Micron is not one for me. I'm not saying this about Micron. I'm just saying there's certain products I have no problem being like, I'm in, this is it, it's in for life, and that's you with Oklo.
Well, I mean, you do things to try to protect it, right? You do things to try to protect it. I wasn't like, I'm just going to keep getting long. I was doing those wide. But
you only put in as many as you can take if you can't take the stock, right? Yeah. So then when you tap out, you tap out, and Jack probably hasn't tapped out yet. That's my opinion, in my opinion.
Yeah, and cost base is 57. He knows what he's doing.
Yeah, for sure.
Okay. Are you ready for some new trades?
Can't wait. Looking forward to it.
What time is it? 2:46.
Yeah, you've got 14 minutes, young lady.
Okay. First trade. What do we have in Etsy here? I'm just curious. We are short the 55.45 put spread in Jan. Oh, and this is an old trade. Okay, I'm just going to put a closing order in for that.
Well, if you want to close that, you can scratch that put spread. That old trade doesn't matter.
No, that's fine. That's fine.
Are you putting something in an Etsy?
No, well, I added trades in Etsy, but I am going to leave that. We have it.
Okay.
I just put in a GTC for that put spread. Okay. One thing we don't have, which you have, I know, and I have it too, is JD. And I thought you might like this. So this is I just wanted to go over our thought process of when we put in trades. JD's rank is a 4.
Yep.
So we're not just going to be slinging naked options and selling premium, right?
Not selling premium. We'll sling options, but we're not selling premium.
We're not selling premium. If I look at this chart, it's at a yearly low. Okay.
Fair enough.
What do you think about a zebra in JD?
Oh, love it. A zebra is a zero extrinsic back ratio that's going to replicate stock. It's going to be cheap because it's a $28 product. Let's go through can you see how much stock would be?
Yeah, no, we'll go. Yeah, sure. Okay, if I bought 100 shares of JD, it's going to cost $1,400 in buying power.
Or if you're in your IRA, which my JD is in my IRA, it's $2,800.
Okay, $2,800. So if I want to replicate being long 100 shares, if I go to the analysis page here and show you, here, let's take a look. Okay, 100 shares of stock. The stock goes up $1, I make $100. Stock goes up $2, I make $200. That's how it works. If the stock goes down $1, I lose 100. Stock goes down $2, I lose 200, so on and so forth. Unlimited profit potential, but your risk could here down to 28.82.
Yes, correct. It's a stock. That is a stock, and now we're going to show you how to replace it using much less capital for a limited amount of time.
So the zebra or zero extrinsic back ratio is you sell at 50 delta. So here's our delta. Sell 150 delta.
29.
Buy 270 deltas.
The 27.5.
So
I've always got these in though. So this is my bread and butter trade with I am always in zebras and JD.
So 266. So $266. I'll go to the analysis page.
Versus 2,800 in my IRA, and this is an IRA approved trade. Just a little FYI.
Here we go. Now, if the stack goes up $1, we make $100. If stack goes up $2, we make $200, and so on and so forth. Unlimited profit potential to the upside. If stack goes down $1, we lose. You know, we could our risk in this trade
$2.70.
Yes.
That's it. No matter where it goes. If JD plummets to $10, you lose $2.67. It's a stock replacement strategy with a defined risk setup. Unlimited profit potential and a defined risk setup. And like I said, I know that the regulators in Germany did not like that term, but that is exactly what I'm looking at right here.
Unlimited profit potential, but it's defined risk. So defined
unlimited profit potential for a limited amount of time. I think we need to put that. I think we need to put that catalyst on there.
For a limited amount of time. And for every gimme, there's a gotcha. And with the stock, I was saying, goes up 100, you make 100. Goes up 200, you make 200.
I know, I caught you. I've heard you when you're like, it goes down.
Goes down 100, or goes down 200. It's not quite the same with the zebra. You could see here at expiration, if it went down to here 27.5, which is $1.44. If I had 100 shares of stock, I'd be at $144. Here we'd be out 276. It's a little bit more.
No. If you sit on your hands, if you do nothing,
if you let this sit till expiration, yeah. If you did nothing, but I like the risk reward of risking $276 to control. I'm going to go 278 to control 100 shares of JD.
Nice. Okay. And I like that.
All right. Push that out on the follow page, Liz.
You did a good job with that one, Jenny. You get a gold star.
Thank you. Okay. Now back to, next one. So remember I said I saw LUNR because I was looking at LUMN, Lumen.
Yes.
Lumen is something I'm always in.
$8 stock, 36 rank.
$8 stock, 36 rank. It's had it's had kind of a wild ride. Do
you think this would be a better Christmas present for Matthew?
Don't say that out loud in case he's listening. Okay, so there's a decent amount of premium. This is I went to January, and I'm always trying to sell premium around my stock. I have stock in Lumen. I'm always trying to sell premium around it. We talked about a big lizard today, Liz.
Yes.
I just wanted to show another example of a big lizard.
Okay, let's do it. And I don't mind because I don't know that you need to buy a fat tail here or even we talked about a big lizard into a spike lizard, but we're just going to do a big lizard here because you can't spike it. I can see it right now.
So I'm going to sell the 8 straddle because we're trading close to 8, and I'm going to buy the 9 call. We're getting, when I did this earlier, we were getting a little.
101. It's 101.
Yeah, I was going to say, we were getting over $1.
Yeah, just lock it and then we'll show it.
So here I'm getting $1. I have no upside risk. My break even is $1 down, so at 7. And look at the buying power.
251. That's pretty good. You did a good job finding these. So it's low buying power. It brings your break even. So if we just sold the 8 put, we'd be taking in 61 cents. That's it. So you're getting 40 cents over, which is pretty good.
Yeah, look at it there. Here's the P&L of the big lizard. It's on a much smaller scale because what were we looking at this morning? IWM?
IWM.
So here's the big, and I know we were looking at the spike lizard, but here's the big lizard at the money straddle, sell it, buy a call, collect more than the width of the call spread. No risk to the upside. Our break even is 7, and we're using only $250.
That's not bad.
No, $1.13 a day in theta.
It's not bad. I would ship this as well. And so we did show on the website on tastylive.com, you can see a setup, the big lizard, the spike lizard, and the zebra in our Liz and Jenny strategy series. We talk slow, we walk through them. So if you want more information on it, go to the website, look at the Liz and Jenny strategy series.
So that's going in Lumen, and then I'm working it.
Well, how wide were the markets? I didn't see. I can't see. There's something underneath there. How wide are the markets?
Oh, 88 cents at $1.13.
Okay.
So a little wide, I guess. They're a dime. They're like 74 at 84, 40 at 47, 61 at 69. They're not terrible. Again, I've been trading this for a long time. This is one of those stocks where like a friend of my husband's said to him like, oh, you got to buy Lumen. It was this, who knows why. He's like, I just bought a bunch of Lumen. You guys got to get some. And so after he said that, I started trading it, selling options, selling puts until I put some stock. And I've been in it. This has been years, going on years.
Sounds like the guy that we met on the train on the way in today. You got to buy Lumen.
I mean, this is honestly like for years I've been in this. It hasn't really gone. It bounces around, but I think I got in around 6.
I have to confess something. Theta Trader said, Liz talking slow. That sounds like a lie. I will tell you, in these videos, they ran the script so slow that I don't even know if what I said was accurate. Jenny was there to correct my work.
Yeah. Well, okay. But if she tries really hard, but you know what? People can.
If I try hard, I don't comprehend what's happening in my brain. If it goes slow, it doesn't compute.
This is why she went to the trading floor. When she went to the trading floor and saw that everyone spoke really fast, everyone talked fast, she was like, okay, I found my people. Everyone talks fast. It's fast and loud and tall.
Fast, loud, and tall. Up until that point, I was a fish out of water until I found this. Until I found fast, loud, and tall as assets.
Yeah, fast, loud, and tall. And so I don't know how I survived on the trading floor because I'm slow, short, and fast. I'm slow.
You're not the opposite. You're not the opposite.
I'm slow, quiet, and short. And on the trading floor, everyone's fast, loud, and tall. But somehow I survived. While Liz thrived on the trading floor, I survived.
Did you ever watch that 70s show?
Oh, we're filled in Lumen. Had to take it down to 99 cents and we're filled.
Okay, Jenny, have you ever watched that 70s show?
No.
Oh, you never did?
No.
Okay, well, at one point, the two that are married now, Mila Kunis, who married Ashton Kutcher, he gets to kiss somebody else. And she's like, you can't kiss her. She's too tall, she's too tan, and she's too rich. And he goes, well, damn, Jackie, I'm not going to kiss a short, pale, poor girl. And that's exactly what it just reminded me of. We did the exact opposite of it. But yes, fun. So
I remember if you would have watched when we started 15 years ago, I was very slow. And Liz was much faster. And so somehow we've met in the middle. Like I've sped up and she's slowed down.
We have.
Okay. We are probably, I don't know if I'm going to get to my last trade.
Oh, come on. 2 minutes. Speed it up.
Okay. All right. My last trade is only because you know how in Bloom Energy we've been in and out.
Yeah.
And I don't want to beat a dead horse because, but I do wear my Oklo pin every day.
You're just wasting time.
So we got into this Oklo diagonal. I'm going to go activity, Oklo. In the last week or two, we bought this diagonal, the 93.05, which meant it was trading at 93. And then we bought it for 584 and sold it for 995. We got out really quickly. So now Oklo is trading 83. But with a 39 rank, we could do a diagonal or we could just sell a put spread.
I like the diagonal. I would just, you've got a couple minutes to go through it if you would like to, but I like the diagonal.
The problem is we don't have February yet. So I kind of think we have to just sell a put spread until we get February, and then we can get out of the put spread and then turn to the diagonal. But I don't mind this 372 and a $10 wide. It's kind of like our Oracle put spread. We put it on a day or two ago. We got a little pop up. We got out very quickly.
Yeah, that's true. Okay.
So
I kind of agree with what you said, and because we don't have the strikes, we are stuck with the put spread until we can diagonalize it.
Yeah, and the rank, I'm 365. Okay.
Good job.
Okay, so that's it. If you look at this, we had 30 minutes on last call, not even, because Tim Knight went a little over. Don't worry about it, Tim Knight, anytime.
Yeah, you can go over as much as you want.
Yeah, you can go over. We miss you. We'll have to call you and get you back. But today, during last call,
I'm ferociously pushing out the last two. I thought you were going to go to the follow page.
Oh no, we closed our Bloom Energy, moved our strangle, sold a new strangle in Lunar or LUNR. We did a diagonal, an earnings diagonal in Lennar. We put on a zebra in JD. We did a big lizard in Lumen, and we sold a put spread in Oklo. So this was a very busy last call.
Yeah, you did a great job. Okay, and Oracle was what we did on the trading floor, right?
Oh yeah, we did that earlier. Okay. So that's it, Liz. Busy last call. Stay tuned for the boys.
Yeah. Okay. Well, the bell's about to ring in about 30 seconds. Oh, we got back down 24. Boo. What the heck?
We got Spoo's down 24, but the good news is that Bitcoin is 87,600. Come on, Bitcoin. Maybe another like 20,000 before the end of the year.
Come on, Bitcoin.
Come on, Bitcoin. Big money, no whammies.
All right, there we go. We made it. All right, everybody stay tuned for, what's it called after this? I'm having a mental lapse.
Overtime
with Chris and Ilya. They always do a wonderful job, and we love those boys. All right.
All right, everyone. Have a good night. We'll see you tomorrow.
Bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
That was a lot of back and forth for not a lot of direction, at least in the NASDAQ and the S&P. It is Wednesday. No, it's Tuesday still, December 16th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 27 minutes as we wind down the trading day. A trading day that really did not have that great of a time following non-farm payrolls this morning. Jobs report came out for October-ish and November. October shed 105,000 jobs. We see that November adds back 65K. Net, it looks like 40,000 jobs lost between the 2 months. Ilya, initially the market reaction was for a stronger stock market. Hey, rate cuts are coming.
Mm-hmm.
Oh, wait, rate cuts are coming for bad reasons.
No, wait, these are the wrong rate cuts. Oh.
Not maintenance. We do see here that stocks are able to rebound in the second half of the session somewhat. NASDAQ pokes its head back into positive territory, up by 0.05%, while S&P is still off by about 0.4%. The Russell, the Dow were the laggards all day long, and that's where they end up, although the Russell does get a little bit more improvement, only down 0.5% or so. Bonds did trade higher, not quite at the highs, although bonds are closer to the highs than notes are at this present time. Gold and silver take a small step up and then back down. Gold off by about 0.1% now. And the dollar here didn't have a fantastic session, although as the day went on, it was able to claw back some of its losses versus the euro. Ilya, this jobs report is 1.5 of the 2.5 that we'll see prior to the next January Fed meeting. The data doesn't exactly inspire confidence. This also doesn't scream recession, although the way oil traded today, you might say it did, given this near 3% loss. How do we make heads or tails of this? I see in the finer details here that only healthcare and construction added jobs in the month of November. And now if we go back to the month of June, the only sector in the economy that has added jobs net is healthcare itself, one of the least productive sectors in the entire economy.
I think when you look at this, you sort of come to the idea that you haven't learned anything new that the Fed hasn't already said. Because we know what the Fed was saying. This entire pivot that the Fed has been painting for us basically since Jackson Hole going into September, Jackson Hole in August, was the balance of risks has shifted. It made sense to be singularly minded on inflation while the labor market was strong with record setting unemployment rate levels. And then after that, only very modestly higher levels, historically still very, very low. And then the balance of risks shifted because the Fed saw that the labor market was starting to come unglued. Did we see any evidence here that it has come more unglued than the Fed has argued? No. I mean, if you conclude here that the running tally has been over the past 2 months, let's say, as a kind of as a kind of stand-in, 64,000 for November, negative 105,000 for October. So let's call it 40K average. What did Powell tell us in the press conference? We're running at about an average of 40K. We think it's overcounting by about 60K. So we're running at an average of about minus 20K. Did this update change any of that baseline? Nope.
Not really.
I mean, it's exactly there. Minus 100 plus 60, where are you? 40. So we're 1,000 jobs difference off that. 105, 64. So we're not looking at anything that materially changes the calculus. The unemployment rate went up. Powell told us not to put that much stock in it, but it's going his way. Now the next question is, what about inflation? And we're going to get those numbers later, and they're probably not going to be any more impactful because they're probably not going to tell us a story that we don't already know. And so the real question is, what does this do to Fed policy expectations? And if you look at Fed funds futures, not a whole lot. You're still looking at basically a Fed that the markets think is going to cut now 58 basis points next year. That's a little bit up from yesterday's 55, 56. But we're still looking at basically 2 cuts with a less than even chance of a third. I'll see you when we're at like 61 basis points, 62, to get really excited because then we're better than 50-50 odds on a third cut. But still looking at 2 cuts. Fed still saying only 1. How has any of this changed as a consequence of this data? It really hasn't.
You see some improvement in rate cut odds on the board as a result of today's economic data. I'm curious about the rubric that we would put together for this, Ilya, and we could draw this up, and I'll type it up and we'll flash it on the screen once we're done here. But we now had a bit of weaker jobs data. Okay. What does CPI do? Right? CPIs can come in one of three ways. It can come in warmer, can come in on the nose, it can come in a little bit softer. If I'm an equity market bear, I can't help but feel a little bit disappointed with how today turns out, given where we were at the lows in the second half of the day rebound. We're not closing near the highs, but volatility didn't really run up. We don't have that significant of a break going on in markets. The NASDAQ, which has been one of the weaker markets, is actually positive on the day. If this was truly more weakness, if the NASDAQ was down 0.5%, I'd probably be feeling a little bit different. If volatility had bumped up a little bit more, I'd probably be feeling a little bit different.
Sure.
So I'm looking at this day, jobs data is not great. Unemployment rate is higher. Wages are weaker. Inflation may be coming out close to 3% later this week. This smells an awful lot like stagflation.
Yeah.
Is that where we're heading? I mean, what are our three outcomes for equity markets? If CPI comes in hot on Thursday, is that worse than it coming in weak?
Well, I think we have to look at this from the perspective that Powell laid out for us and sort of use that as the guideline for the reaction function. Powell said that the CPI report might be unusually hot, which might be a distortion because the data was not adequately collected during the shutdown. And so if it comes in hot, I think it'll be easy to go, okay. Powell warned us this would happen, but this changes nothing. If, on the other hand, inflation comes in exceedingly weak, that would suggest that maybe the economy is weaker than the Fed anticipates. Let's not forget, the Fed actually picked up, not down, but up its growth expectations for next year and the year after. Now over 2 consecutive SEPs, first in September, then again in this most recent iteration in December. And frankly, the PMI numbers today weren't that great. They weren't horrible, but they were pointing toward deceleration. So looking at all of this together, I think the much more worrying part for markets isn't going to be, it's too hot. Powell told us to dismiss that. Let's go. Nothing's different versus it's too low. And then all of a sudden the markets go, wait, are we going into a recession here? Is that what's going on?
Kind of get whiffs of that today. Stocks off, bonds up, dollar claws back in the second half of the session. Metals stay a little bit firm. The growthier commodities are the ones that are leading to the downside.
And Russell.
The Russell, the small caps. Your rate cut odds are up, but the Russell's down, right? And usually that's
not. I think you've just hit it exactly on the head. Rate cuts up and Russell down. Recession. Rate cuts up and Russell up, maintenance.
Right. That's the lens with which you view these things.
I mean, I think that boils it down. Like that actually, we might have to, the powers that be in the production sphere behind the scenes here might need to mark this point in the show and clip it. Because that's actually a really great little heuristic here. If the Russell is up when rate cuts are up, risk on. If the Russell is down, look out below.
Yeah, and Russell chart isn't that fantastic looking right now. It started to crack a few days ago. For me, Ilya, I know that today we're in the midst of our 12 days of trading special here, which I'd encourage everyone to go to tastytrade.com/12 days of trading. Our topic of discussion today is how are we changing our approach to our books, winding down your books as you come into the year end, right? Are you taking up positions? Are you rebalancing your portfolio to start the year?
Yeah.
Reasons why or why not. I mean, if I'm, looking at the Russell right now, and this is a position that I have working for me in any sort of capacity, and this is a week where it's like, okay, do I put something back on? Unless I'm going to be directionally bearish right now, And Ryan, you can toss up the slide here. Why not we just toss up the slide so people can see the visual itself? It's a beautiful visual, Ryan, that you guys put together.
It really is.
For the tastytrade.com/12 days of trading. There it is. There's that snowflake I come to love and adore. So this program started on December 8th. It ends December 23rd. The Tasty Trade team is putting together a daily email focused on various topics to help you prepare for the new year. So like you've heard me say multiple times today, tastytrade.com/12 days. Ilya, the question is portfolio reset today is the theme. And so when I look at the Russell with an 8.4 IVR, if I'm making my way through the holidays, and this year's a little bit different for me because unlike the past few years where I typically take off 2 weeks, given my recent reprieve for growing the family, I'll be working. And also like the calendar next week, we're on air Monday, Tuesday. We have generous employers who are giving us off Christmas and Christmas Eve. So I'm going to be around. I'll be around both weeks.
Me too.
Managing positions is not like the biggest problem right now that I have facing me. But if this were a typical year, right, next year, I'll probably be back to my usual. We'll take it off the last 2 weeks of the year. If an 8.5 IVR, thinking about today, this really being the last full week of trading, if I'm going to a typical 45 in, 21 day out cycle, I put this trade on today. By the time I come back to work on the 5th, 1, 2, 3, we're talking about this being at 25 DTE. And all of a sudden, am I comfortable having to all this deal with, okay, I've been away for 2 weeks and now I have a 25 DTE in front of me and this has got to get in shape in the next 4 days when I get to my next roll window. Otherwise, like I just lost money on autopilot. I said this time last year, Ilya, there's 2 things that happen when I'm on vacation. I'm either trading and losing money and angry that I'm not paying more attention to my kids, or I'm paying someone else to watch my kids while I sit around and potentially lose money, right? It's just not a good headspace to be in when I could just be hanging out with my children and like playing in the snow or go to the movies or whatever. So I like to wind things down. But if I'm not going to be on autopilot, even so right now, do I want to deal with the holidays, so to speak? Would I rather go into a position that when January 5th comes and the market liquidity returns in full and now everyone's back from the holiday, would I rather be in a position where it's like, this is now at 46 DTE. And now I have the typical, I'm in a position now where it's the typical tasty cycle ahead of me as we start the new year. That's where I would rather be. So right now, my whole view is if there are positions to be applied, and it's for someone who is not going to, is trying to just decompress, but you want to keep skin in the game, duration's your friend. IVR of 8.5 and Russell is ugly. So if I'm bullish, I'm bearish directionally, we can establish something at 66 days, fairly cheap to express that longer term, medium term directional view. But I wouldn't necessarily be looking at the 45 right now. Going out 66 resets you to about a 45 DT when January 5th rolls around. So that would be my preferred expiration window across any contract this week or next.
I've been doing something similar in general, not even looking at the year end, but just looking at diluting my exposure to underlying delta, because these have been very, very, very choppy markets, and having a little bit less exposure to the underlying gives you some time. That's really, really been a godsend. In particular, of course, the crude oil position that I got out of last week. That thing was limping lower forever and a half. It ultimately got there, but it took forever of just back and forth and back and forth. And frankly, crude is breaking lower now. I might need to re-enter. But this has been a great thing to do just in general. And going into the end of the year where liquidity is going to get thin, markets might get choppier, both extending your durations so you don't have to think about it as much and diluting your exposure to underlying, which only increases with theta decay, that both of those things end up looking attractive in this period.
Both of those things. So in ES, RTY and Q, you have 66 days out there. If you're looking over at something like notes or bonds, you still have your 66 days available. Even in something like gold or silver, guess what, Ilya? We have to go a little bit more than that at 70 days here. And in silver, that's exactly what I did today as I prepare the book for next year. I had been sitting in that 42-day expiration. This was put on weeks ago when silver had its big pullback. Used the opportunity to get long the 55 and a half call spread. Obviously, that worked out swimmingly here. So with today's bump up, I decided to move the position to get to that 72 days to get a little bit more convexity in it, which moving out of 42 and into 70, I also moved up my strikes up to 67.68, which is $1 wide now instead of 50 cents wide. And so it is a fairly decent sized position, risking not quite 3 to make 1. We'll call it 2.5 to make 1. But it's rolling all of the profits from the past position into this new one to keep kind of feeding this momentum machine. And as far as I can tell on a short-term basis, thinking with that, we did a session yesterday on Futures Power Hour talking about multi-time frame analysis using the Druckenmiller 8 to 20 multiplier window in each time frame. If I'm thinking at 4 hours times 8, that's 32 hours. Okay, so we're looking at a little bit more than a day. 20 hours, 20 time multiplier on 4 at 80 hours. Okay, that's a little under 4 days. There happened to be just about between 1.5 to less than 4 days left this trading week. So when I see on a 4-hour time frame a channel here that's now consolidating into a symmetrical triangle following a cup and handle breakout, all I can think of is I got to put more coins back into the machine and roll the dice here for another long entry. So doing that, maybe we get some juice this week. Maybe we hit 67 this week. Crazier things have happened in silver recently.
Yeah, I mean, I'm watching. I'm long gold. I haven't re-entered silver yet. I had a great run in it. I'm from the last time that you and I got in. I think looking at this as a continuation setup is what makes sense, really across both of them. But in silver, it's maybe a little bit cleaner from a technical perspective. So, yeah, I mean, give me a break. Give me a breakout, and I'm right back in there. Because it seems like this is a trend that, for the moment, has nothing to suggest that it's turning over. Now, maybe it will turn over. Maybe the breakdown is going to happen downward. Okay, sure. I'm open-minded to that idea and would take it in that direction were it to happen. But I don't think there's any compelling evidence to think that, as you're saying, for the moment, this is a continuation setup, and it makes sense to behave around it as such and until it is something
as such
different.
and until. Right. And listen, it's not every time. There are websites available, and this is actually one of the ways I learned how to trade all the years ago. Maybe the websites don't exist, but in the late 2000s and early 2010s, you could find a website where to have like a historical stock pattern.
Oh, the trading pattern site, which is a tremendous site. I recommend everybody check that out. They do this.
And you'd be like,
test technical patterns.
It'd be like, okay, so like, what do you do here? And you run through, it'd be like, I want to look at only symmetrical triangles, and it'll pull up a chart from like the monthly chart of this stock or the weekly chart of that stock from the 60s or 70s. You don't know what time frame it is. And they say like, do you get long or short? And so in that back testing, and I believe one of the programs they offered, like, well, listen, if you look on the 4-hour time frame and go through 30 years of data, and these are the criteria for a triangle, 70% of the time it's going to break one way. Right. And so usually for when I look at symmetrical triangles breaking out or continuation patterns, 7 out of 10 times it should work out. If it's not one of those 7 out of 10 times for continuation higher, and it would be a bearish breakdown, a reversal, one of the 3 out of 10, Ilya, gold's invalidation level probably comes just below 4,300. We have this resistance here, which has since become support in a new consolidation. And for silver prices, it would probably mean a loss of the swing low near 6,220. So if like we were to see those two things occur, if gold and silver fail to break out here and instead start setting new relative lows, then it's time to bail and kiss the new silver position goodbye. We had enough time on the calendar. We take a smaller loss. We're not really, worried about gamma here or anything because we're too close to expiration. Okay.
Well, at that point, we just keep it moving.
Yeah. And then take it off and then reassess in the new year. But gold and silver are the positions that I feel like if we're talking about rolling, talking about extending exposure, that 70-day or so window is probably the optimal bet for folks who want to keep skin in the game but don't want to worry over the holidays.
I mean, you could even go longer if that's what you wanted to do. I mean, I don't think that there is any meaningful reason other than cost, because obviously the further out you go, the more uncertainty premium you bake into the options, and so the more expensive they are. But if you wanted to go longer and the price is right, I don't think there's anything necessarily wrong with going even longer still. 70, though, feels like a comfortable window.
70 is the new 45, kind of like how orange is the new black, Ilya. It wasn't just oil today. Natural gas got eviscerated again. I don't even want to talk about this. Ilya, we have only a few minutes left here. Tomorrow
this
is
thing going to challenge your strategy of holding options through the expiry cycle.
Dude, I'm at 42 days still. This is a nightmare. It's not even like I'm at 20. It's not even about like 2.
This pain can continue for longer than you expect.
This pain can continue for a long time. I look at the calendar for tomorrow. It's probably the day of the week next to Friday where there's not so much stuff coming out that's meaningful. Although tomorrow I'm flagging the John Williams speech at 9:05 a.m. I know Waller is speaking, and Waller's one of the contenders for Fed chair right now. But according to Polymarket, who will Trump announce as next Fed chair? The front run, that's the wrong contract. Fed chair is still, has it flipped? It's back to Hassett. Hassett 51%.
The Kevins have it. Which Kevin? Unclear.
Yes. Do you take the Kevins or do you take the field? The Kevins are at 81% right now, but Waller himself is sitting at 15. So he's not the front runner per se, which of course sets up an interesting dynamic. Will Waller say something to improve his odds?
Maybe. Maybe.
If you're looking for rate cut help tomorrow morning, 8:15 a.m. Eastern is when Waller will be speaking. I'm personally more interested in what John Williams, the New York Fed president, has to say at 9:05. I'm reminded of what he did here. That's the 21st.
Well, the markets pay attention to John Williams, and with good reason. He has been both at the San Francisco Fed and the New York Fed. He graduated, as it were. And before that, he ran the San Francisco Fed's research division. This is one of the most seasoned, most reliable Fed operators that we've had for a decade plus.
That he is. Where are we on this chart? We are here. This is the 21st. This is John Williams speaking on the 21st. And the corresponding move there was the SR3 contract moving to go price in from about a 38% chance up to about a 75% chance of a cut for December. It was Williams who sparked the turnaround after Thanksgiving.
Yeah.
So as a vice chair who's closest to Powell, Ilya,
yes,
there's a lot of tea leaf reading to be done tomorrow. Is Waller going to suck up to his new potential boss? Is Williams going to remind everyone what Powell's really thinking about what proceeds now? Because, hey, it's after NFP. We could get a hint. So tomorrow, while there's not the data, there are the fishing lines out there that could spark more of a move. And you know what? There's been big movement this week already in terms of trading to close this out. 2.3 million contracts traded in ES today. People are getting
nothing by any means.
People are getting their licks in while the year is still here. So another day, 68.50 or so was the price that is right in ESZ5. It seems to be the price that is right now in ESH6. Maybe we'll be here tomorrow, Ilya. We will be here tomorrow, of course, because it's after.
We will.
Last call. It's a Monday through Thursday. It's a Wednesday. So we will be here tomorrow, as we are every Monday through Thursday, 4 p.m. Eastern, 3 Central, following last call, as I've already said. So we will see everyone tomorrow because overtime is now out of time. Ilya is back in a few minutes. He's here for Macro Money. I'm going to go give my son a bottle and lick my wounds in stocks. Ilya, catch you later.
See you at Macro Money, everybody.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
U.S. economic data is out. The things disrupted by the shutdown are starting to cross the wires. The markets were anticipating them with great anxiety. So have we learned anything? That's what we're going to explore here with the benefit of having seen at least the first batch of what's out there. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is see if we can't make sense of what this data was, what it may start to tell us or not tell us, whether it makes any kind of a difference for expectations for Fed monetary policy, which is, of course, the reason why anybody cares about any of this to begin with. So let's consider here, first and foremost, how these markets performed today. We'll take a look at what moved and why. And then perhaps that'll start to set the stage for the data that we saw, and then we'll go through it and see what insights we can glean. So we find ourselves finishing with some modest gains here, 0.4% up for the S&P, 0.97% up for the NASDAQ. And that's really a consequence of late day rallying that ultimately undid a much worse picture. At one stage here, the S&P was meaningfully lower than what we're seeing at this point. But with the benefit of sort of late day rallying here, we seem to have ended up with a better outcome. And at least in part here, this might be sort of a laddered reaction to just the data having not really produced much of anything. If we look across markets here, we find ultimately sogginess, but not a whole lot of follow through. And that really seems to run across the board. Yields a little bit lower, crude oil down, but that seems to be a story unto itself. Gold flat. The euro was up quite a bit, but then seemed to erase all of it. The yen's still up, so the dollar on net a little bit weaker. Bitcoin up 2.2% here, but on the whole, not really a whole lot of conviction. But the sort of gaps and weirdness that we see in stock markets today, they ultimately look much more emphatic than they appear. In fact, if we take a look at the March contract here for NASDAQ and the March contract for the S&P, it's much less convincing, really, what's actually going on here. Because if you look at the continuous contracts, what you end up with is slight gains. If you look at the March contract in isolation, and of course we're getting very close to those contracts rolling over here, it's a little bit of a different picture. It's actually down on the day, and we'll update that here. That looks a little bit more like this, where you have slight weakness on the S&P. Looking at the contract where we will be rolling to, and basically flat on NASDAQ, everything else the same. So you have a situation here where there's the appearance of swings, but not really the kind of directional conviction that you'd want to see. As far as the data goes, what we really had our eye on here today was the NFP report and the backfill there. We end up with a November jobs gain of 64K. We end up with an October number, which is a partial number because of a lack of robust data collection at 105. And on the face of it, this seems to sort of endorse what Fed officials have been talking about. The essence of what Powell's argument has been really the entire time that we've kind of been in this rate cut mode, let's say from August at the Jackson Hole Symposium, where the stage was sort of set for this. And then later at the September onset of the rate cut cycle, the narrative has really been laser focused on, well, the balance of risks has changed in the labor market. And so that's what we're going to be responding to here. That's why we were not rushing to ease before. And this is why we're going to actually take some steps and get this thing going now. So with that in mind, we get seemingly what the Fed is looking for. I mean, we can see here with the naked eye that employment growth has clearly changed gear versus even what we saw here. So obviously things have been slowing down since these heady catch-up gains in the wake of COVID. But this decline here for October, this 105 decline, that ends up being the biggest move lower on employment since December 2020, which is, of course, the tail end of the COVID weirdness on the downside, followed in 2021 by COVID weirdness on the upside when we catch up after the lockdowns. And then since then, of course, we've moderated, and this now looks like we're starting to see something a little bit more sinister. Now, what's interesting here is, recall what Powell said at the presser following the rate decision last week. He said, we think that at the headline, we're running at about 60K as an overcount. So if the overall number is averaging about 40K and the overcount is about 60, then on net, we're running at about a 20K loss for NFP per month on average. And this is sort of where we're beckoned into action. Now, consider what the net here is between October and November. We got down 105K here, up 64K here. It's about a 40K wash. And so this really just lines up exactly with what the Fed chair has been telling us. And so when we look at this then, does this really change the Powell established baseline? Well, ostensibly, no. The unemployment rate is a little bit higher here. This is the highest since September 2021 at 4.6%. But again, that was the point, really, of everything that the Fed has been saying so far. This was exactly the reasoning that the Fed deployed. And so while certainly these are the kinds of numbers that the markets maybe want to see, it's not exactly the kind of thing that engenders confidence. Because on the one hand, it doesn't really promise to deliver any more rate cuts than are already on the board, while at the same time, it warns that maybe we're looking at some sort of an economic downturn that's starting to take shape. And you can kind of see that in the response from markets. Because one of the standouts here is NASDAQ, as we just saw, actually does relatively okay here, but it's the Russell, the small cap index, that takes the biggest hit. And that may very well be because there is a growth concern here. Nominally, rate cut expectations are a little bit higher today than they were yesterday, and only nominally so. If we take a look at what the outlook appears to be now, it's 58 basis points in rate cuts next year. That's a little bit higher than it was yesterday, where we were sitting at about 55, 56. So cautiously, this was interpreted as a tad dovish, but not so dovish that it really changes anything for anyone. And certainly in an environment where you have rate cut expectations acting as a kind of salve for markets where they go, oh, good rate cuts. For example, we've seen the Russell do exceedingly well around expectations for rate cuts when the conversation is, oh, well, the economy is doing fine, and then we're going to get rate cuts. That's good for small caps because it's good for the regional banks that hold a ton of government securities on their books. And of course, that was the trouble that Silicon Valley Bank ran into, and Signature Bank was they couldn't sell off those securities because after the 2022 Fed rate hike cycle, those securities are deeply underwater. They're nursing huge losses. And the idea is that those banks are going to be able to hold those things until they mature. And then those losses don't matter unless there's a run on the bank's deposits, which is what happened with SVB and Signature. And then you can't liquefy the holdings to turn them into cash because then you take huge losses, but you need the cash to pay depositors. You've got yourself a bank crisis. So when there's been rate cuts, which have helped to improve the P&L on those positions that the banks are holding, those bond positions mainly, that's been cheered on by Russell because it's been cheered on by the regional banks, which make up a significant portion of the index, because that just reduces their risk of a bank run that takes them out of business the way Signature and SVB saw in very clear relief. Now, when you get a situation like this, rate cuts expectations are a little bit higher, but the Russell sells off. Well, then whatever benefit to regional banks there is being subsumed by something. And when you consider that small caps are more vulnerable than cash-rich tech companies in an economic downturn, then you figure, well, if the Russell is doing poorly and the NASDAQ is relatively outperforming on a day when you have rate cut expectations even a little higher, that starts to smell like the markets are concerned about cyclical risk. Like there is a recession that might be in the offing at some point on the horizon. But for what it's worth, the differences are not meaningful enough that the Fed rate cut calculus has changed in any kind of particularly outsized way. It's a similar story when we keep going down the list of releases here. The last one for today that was of meaningful consequence was the retail sales report for October. And here, probably the thing that stands out the most when we start looking at the breakdown is this weakness in motor vehicle sales. Motor vehicle sales make up almost a quarter or a fifth, somewhere between there, of the overall retail sales basket. Makes sense, of course. It's a very expensive item to be bought at the retail level, a vehicle, oftentimes financed, of course. And so when you look then at what is going to move the needle on overall retail sales, vehicle sales is obviously a huge thing. And this decline of 1.62% in October, that's the kind of thing that makes you worried about consumer confidence. That's the kind of thing that makes you worried about the overall economy, because consumption, of course, makes up 68-ish% of overall GDP growth. Now, everything else is kind of a smattering. E-commerce is a big one. That's non-store retailers. We can see here things are relatively steady for food and drink, as well as for gasoline. Things are relatively even keel. No real big jumps there. A big jump in furniture, but that's not a really big component of the overall index. And in general, kind of merchandise sales, which would include this jump in sporting goods. It would include the jump, as we say, on the furniture side. All of that would sort of fall into the general merchandise category, which makes up about, let's call it 10 to 13% of the index. So huge that is not. But the drop in vehicle sales, that's something to keep an eye on. And finally, we got the S&P Global PMI updates. No big story there from Europe. A little bit warmer on the UK numbers than expected, but only by a hair. Probably doesn't alter the Bank of England calculus very much. Very near to expectations, a little bit softer for the Eurozone. Again, probably not anything that meaningfully alters the calculus, although at least in the case of the Eurozone, this is relatively weak, all things considered. If we kind of put this composite number in context, this is the weakest reading that we've seen for this since September. But the general heating up of the economy that we've seen over the course of the second half of the year in the Eurozone, that continues. At this point, we're looking at some of the warmest readings for economic growth that we've seen since back in the middle of last year. And even before that, sort of early 2024, end of 2023, as the Eurozone was trying to emerge out of what was essentially a technical recession. So we're looking at relatively steady readings here that don't seem to portend anything out of consensus when both the ECB and the Bank of England announce monetary policy later this week. The U.S. numbers are not terribly encouraging, a little bit weaker on the composite than expected, and that coming from the service sector. But again, this echoes what Powell has been telling us, which is to say that we're going to get continued disinflation in services, that most inflation now is coming from goods, which, according to him, is a pass-through and a one-time increase. Here's those PMI numbers for the U.S. And because of that, we are likely to see the good side of things rebase out by, let's say, April or so. And going forward from there, the Fed should feel itself vindicated in focusing on employment rather than inflation, because these elevated figures that we're looking at now, hovering around 3%, will have resolved. And that's really the essence of what seems to be coming up next here, because, of course, the next big item on the calendar, after a pause in heavy-duty data flow tomorrow, will be a look at U.S. CPI numbers on Thursday. But from the looks of it here, we're a little bit softer, but in the kind of way that the Fed would welcome. Now, as far as the relationship between policy expectations and markets, we can see we find stocks stalling now that Fed easing has stopped expanding in the forecast. And at this stage, we didn't get anything that would meaningfully alter where things are set. And that seems to present itself here, even with this little wiggle in a more dovish direction. Markets ultimately don't find that compelling. The dollar continues to edge down, but seems to be stabilizing a little. And of course, the biggest question now is, do we hold this bottom? Is this a down move that has now gone through adequate consolidation and we're going to break lower? Or maybe the other way around. Maybe this is a bottom that's forming before the dollar rallies. Unclear at this point, and probably something that's going to wait for a resolution in 2026. But for the moment, again, this data doesn't seem to really change the game very significantly. The Fed's still only expected to do one rate cut next year. That's probably the biggest disparity of all. The markets, as we can see here, think there's going to be at least twice that. And we're now 8 basis points in the direction of a third cut. That's still less than even odds, but higher than yesterday by 2 basis points. We'll see how that develops from here. In any case, the data that we've been looking at so far has painted a very similar picture. And we go back to those ISM figures that we've been using as a stand-in for U.S. economic data disrupted by the shutdown. And we can see here, relatively steady, probably averaging something like a 51 and change on a composite between services and manufacturing here, because services is a larger part of the economy. At about 51 and change, this would amount to relatively steady positive growth, of course, in the logic of PMIs as ever. Over 50 is growth, under 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so manufacturing is in contraction, services is not, and is growing enough to offset the downdraft from manufacturing, such that we end up with modestly positive growth. We have employment that continues to shrink in both sectors. That would be beckoning Fed easing, and a view on prices where things are moderating, if not falling back to historical levels. So again, the Fed seems to be relatively validated by these numbers that we've seen so far this week as the catch-up data comes out, but only just, without really meaningful progress forward. So what does that mean for markets from here? Well, as far as positioning is concerned, I'm still a little bit long gold. I think that still looks like a trend that's developing and that has room to perhaps continue. We'll see. At this point, we're kind of consolidating against those highs that we saw in gold going back to mid-October or so, just around 4,400, give or take. We're pointedly not rallying here as we get the sort of day that we have in markets today, with yields lower and the dollar somewhat on a softer footing. But we also don't get a sell-off. And so gold still seemingly waiting for its catalyst. I'm a little bit long the pound and the euro here going into those monetary policy announcements later this week, on the idea that they're not going to do anything more dovish than is already anticipated, which is a standstill for the ECB and a rate cut for the Bank of England, which is already discounted. And that will be an unfavorable yield mix for the US dollar against those currencies, where the markets, again, still continue to speculate on more easing than the Fed is endorsing for now. So that maybe sets us up for some gains there. We still have the anti-risk exposure that I've been holding. The last bit of the put verticals in IBIT, that's helping things along. Of course, Bitcoin is a little bit higher today, but that's hardly a huge move here in Bitcoin terms, and we're still very much down, and actually angling to be down for the year, which is unusual. And still have my sort of slight downside exposure on risk via stocks, a put vertical in the NASDAQ, a put vertical in the S&P. A little bit of progress here and not a lot of progress there today. That is to say, a little bit of progress on the S&P, not a lot of progress on the NASDAQ. But nevertheless, the structure seems unchanged, and it seems like the markets really just got through event risk. That, of course, is exactly what we talked about when we considered this yesterday and said, look, as we look at this week of economic data, chances are we maybe don't get anything earth-changing. And if we don't, then we get back to what the markets resolved when they sold off on Friday in the wake of the Fed meeting. That is to say, they didn't like ultimately that there's only one rate cut here and want more, clearly. And even though the Fed restarted short-term asset purchases to re-anchor borrowing costs in money markets, and it took the market seemingly a good 48 hours almost to figure out whether they're happier about that than they are upset about the rate cuts outlook. On Friday, we got a resolution. And it turned out the markets were more upset that they didn't get enough cuts. If we continue to see the kind of thing we saw today, which is economic data that doesn't dislodge that consensus, then after we get through all of this event risk, one might think the resolution is the same. And so we might be looking at another late week sell-off, provided CPI data on Thursday is going to comply. That's Macro Money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I am likewise commenting at Ilya Spivak on former Twitter and on Blue Sky, writing for the news and insights portion of tastylive.com. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.